our manufacturer and said, is there a better way? And they said, yeah, you know what, we've just started doing this where we can make your proprietary beef in a loosely formed puck, they call it, and at your weight, your specifications, and it'll come into you cryovac, and each patty is already done. So you take it out of the back of the house. So that's a labor savings, it's a food cost savings, because now...
It costs you a little bit more though, right?
No, it costs the same amount of money.
Really?
They'll just pre-measure it for you.
They pre-measure it. It saved us a lot of money. Yeah.
Wow.
And now there's, you know, the team members loved it because, and the franchisees loved it because you're getting people out of the back of the house. So you're better able to serve guests in the restaurant. Mm-hmm. Same thing with our ice cream. We hand scoop the milkshakes, and the ice cream that we used to use was a vanilla bean ice cream. It sounds funny, very, very hard, even though it's frozen at the same amount, and nobody wanted to do it. You had to take the tub of ice cream out and sit it on the counter in the back for a little while, let it thaw out a little before the team member could scoop it. And you were scooping hard ice cream. It was tough.
I think about that with folks who are doing ice cream. It's a lot of work.
It is.
I'm getting some questions.
So what were you going to say? Did you automate it?
So we were eventually looking at that, but we went back to the ice cream guy and he said, we can make an ice cream with a little more sugar content, and believe it or not, it's softer. It's still at 10 below zero, but it's softer. You can take that out at 10 below, and you can scoop it, and you can almost scoop it to order.
Okay, we only have a couple minutes left, but I'm getting some questions from folks listening and watching right now. As the person who's the president of the franchising firm, do you have a view on unionization at all? We're seeing it happen at places like Starbucks, for example, Apple Store.
Yeah. Look, I mean, we're in the hospitality business and the restaurant business, and we want to make, we're also 100% franchised. So it's a little bit different than Starbucks, where they're all company-owned units. So we want to make our team members, we want them to be fairly paid. I don't know whether we would take a stance one way or another on unionization.
All right, so if we're coming, is Tim a garden burger? Is he a Carolina? No. Is he a Cajun? I know I'm an A1 steakhouse.
Yeah. I mean, I would do any of the above. I was looking at the menu earlier.
Well, also look at the cheesy, which is very plain, but it's 4 slices of American cheese on a double patty burger with an inverted butter bun.
That's magical.
Yes.
No offense, I've done that with hot dogs and buttered buns.
It's a grilled cheese with a hamburger in the middle of it.
Okay. Only 30 seconds. Technology. Kiosks in stores. What's going on?
Kiosks in stores. We started, again, that came out of the pandemic. We have about 50 restaurants across the U.S. today that have the kiosk. Every new restaurant that's being built with kiosks. It's not so much of a labor savings, but redeploying the labor in the restaurants so they can better serve the guests.
5 seconds. Consumer doing okay?
Yeah. Consumer or?
Consumer.
Consumer?
Shopper, yeah.
Shoppers doing
Restaurant,
okay?
person who comes to a restaurant, you think they're doing okay? They're not pulling back or anything?
No. I mean, we see that our sales haven't slipped. So
good stuff.
Knock wood.
All right. Well, when New York opens, come on back.
Definitely.
All right.
We'll meet you there for a burger.
Deal. Pat Conlon, president of Wayback Burgers. Thank you so much. Really enjoyed it. That's going to do it for Tim and me. Folks, have a good and safe evening. Do not go anywhere because Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons. The Justice Department officially dropped the federal criminal cases against Donald Trump in both Washington and Florida, in keeping with DOJ policy not to prosecute sitting presidents. This after Trump dropped a deluge of nominees for posts in his second administration on Friday night, including Scott Bessent for Treasury Secretary and Russ Vought for the Office of Budget and Management and Budget. We'll get reaction from Maya McGinnis. status of the Committee for a Responsible Federal Budget. Plus, I'll be joined this hour by former U.S. Defense Secretary William Cohen as Israel and Hezbollah are reportedly closing in on a ceasefire agreement in Lebanon. Thanks for joining us on this Monday evening. We begin with our top story, the DOJ dropping the pursuit of criminal prosecutions against President-elect Trump. Special counsel Jack Smith filing the paperwork this morning to end the 2020 election subversion case in Washington and the classified documents case in Florida. Judge Tanya Chutkan here in D.C. granting the dismissal of her case this afternoon. Trump responding on social media saying, quote, "These cases, like all of the other cases I have been forced to go through, are empty and lawless and should never have been brought. Over $100 million of taxpayer dollars has been wasted in the Democratic Party's fight against their political opponent, me." Trump going on to say, "It was a political hijacking and a low point in the history of our country that such a thing could have happened, and yet I persevered against all odds and won," end quote. For more, I'm joined now by Bloomberg's Mario Parker and Bloomberg's Texas Bureau Chief Julie Fine. Thank you both for being here. Mario, to begin with you, obviously this was the first time in history we had seen a former president indicted on federal charges, and it seems like almost just as quickly and just as historically, it all goes away because the American people voted for him.
Yeah, no, that's absolutely right. We saw similar things happening last week as well. I mean, it's over with. This is a done deal at this point. Jack Smith said that it was categorical that presidents have immunity in these instances. It's not a surprise given that he won the election. Just practically, he would be 81 years old when he leaves office. It would have been about, 4, 5, 6 years since this all had transpired as well. So even from a practical standpoint, aside from just the immunity in office, it just doesn't seem feasible. Yeah,
and of course, in the New York case in which he was convicted, that sentencing has been postponed indefinitely. But he was a convicted felon, became one in New York, Julie, and ultimately he still was able to win the Electoral College and the popular vote. He effectively used all of these indictments and ultimately his conviction as a way to benefit his campaign.
Absolutely. They were always big fundraisers, too. As you remember, right after that happened, the fundraising email would go out and the former president, now soon to be president again, raising a lot of money off of them. But Mario, you hit it right there on the head. It's over. He's going to be president. There's clearly presidential immunity in these cases, according to Jack Smith. And so that's why this has happened.
Well, and as he is going to be president, he is quickly getting his second administration formed with a number of names dropped on Friday evening, prolonging the work week for a lot of Washington journalists last week, Mario, but including, of course, the one we all were waiting for, Scott Bessent for Treasury Secretary. The market welcoming this with fairly open arms today, it seemed, and that's really what Trump was trying to achieve, right?
No, absolutely. One of the things that I think that we saw is, as much as Trump wants to be a disruptor in Washington, one of the things, if you remember from his first term in office, he often used the Wall Street and the markets as a barometer for success. He did not want to have headlines where he picked someone and then the markets crashed. Scott Bessent is viewed in the markets as being quite sober, professorial as well. His background, I mean, he's bet against treasuries before, against currencies around the world as well. So he knows the financial instrument that he has at his fingertips now.
So he may be one that it will be relatively easier to confirm, it seems. For other choices, though, perhaps it's a bit more difficult, including the selection of former Congresswoman Tulsi Gabbard to be the director of national intelligence. Yesterday on CNN, the Republican senator from Oklahoma, James Lankford, who of course is on the Intelligence Committee in the Senate, spoke about the confirmation process for Gabbard in particular. This is what he said.
Well, we'll have lots of questions. She met with Bashir Assad. We'll want to know what the purpose was and what the direction for that was. As a member of Congress, we'll want to get a chance to talk about past comments that she's made and get them into full context.
So, Mario, now that we've had pretty much all of these other high-level positions filled out, is it still her, RFK Jr., and Pete Hegseth who have the most difficult path to confirmation?
Oh, no question, right? So, I mean, the fact that Matt Gaetz withdrew his nomination, in some ways there's a school of thought that there could be 4, right? There could only be at least 3 of those less than palatable nominations that you send over to the U.S. Senate. But make no question about it, you've got those people, those folks in the Senate, Susan Collins, John Cornyn, Lisa Murkowski, others, who will have some questions about some of these nominees. Again, Tulsi Gabbard, when you think about the foreign policy record, RFK Jr., and some of the more extreme things that he said about health and human services as well.
And I do wonder, his pick for Labor Secretary Laura Chavez DeRemer, who, of course, is a current congresswoman from Oregon, is getting some pushback from conservatives for being too pro-union. That might take Democratic votes to get over the finish line. Getting
some pushback from conservatives, but in this Washington that we live in now, ironically, getting support from the likes of John Fetterman, right?
Yeah.
So maybe we'll have some, she will have some Democratic cover there.
And, of course, those are just for the appointments, the nominees, Julie, that do require confirmation from the Senate. There are plenty of others that Trump has named to be close to him in his second administration that won't, including the person who's going to be his border czar, apparently, Tom Homan. And he's going to be in your state of Texas tomorrow to visit the border. What are we expecting?
Well, he's making 2 stops at the border. He'll be in Eagle Pass. He'll make another stop as well. That is the first stop in the morning. Listen, I expect him to talk about the border. He's going to thank the agents that have been working there. He's going to be with Texas Governor Greg Abbott. I think him coming down here, though, this early is a way for him to say, I'm serious about this. I'm already on this. I'm working on this. You know, it's a statement visit right before Thanksgiving to thank everybody that's working on the border. He has a lot ahead of him, so I expect him to say that. I also, if he takes questions tomorrow, it may be interesting to see if he reveals any of the plans that he's going to make. Again, the former president, soon to be president, in somewhat of a honeymoon period right now. Not sure he is going to want to say anything that would affect that.
All right. Well, we'll look out for that in Texas tomorrow. Bloomberg's Texas Bureau Chief Julie Fine alongside Mario Parker here in Washington. Thank you so much. Another story we're following today, California's Governor Gavin Newsom unveiling plans to offer state incentives to buyers of electric vehicles if President-elect Trump repeals a federal subsidy. But the proposed consumer rebates would exclude Tesla models, a decision aimed at spurring greater competition and allow more car makers to enter the EV market. The decision may heighten tensions between Newsom and Elon Musk, who have already clashed over California's politics. Tesla still accounts for more than half of all new EVs sold in the state. Still ahead, we'll turn back to Trump's key nominations that could help shape economic policy and government spending. Maya McGinnis, president of the Committee for a Responsible Federal Budget, joins next on Balance of Power on Bloomberg TV and Radio.
But I do want to, again, make sure that on day one, come the next 119th Congress, that we're giving President Trump the best success plan. And all of that is going to have to, kind of come colliding in with the end of year priorities for the Farm Bill. We're already talking about what the tax bill for next year is going to look like. So we just want to make sure that we're doing this right.
We need to have a robust tax bill that is focused on economic growth, that does, work to reduce the deficit. Under the Tax Cuts and Jobs Act, we've seen record revenue. So we do have a spending problem here in Washington that we need to get under control.
Republican members of Congress Ashley Hinson of Iowa and Mike Lawler of New York here on Balance of Power last week, talking about what a new tax bill might look like in the 119th Congress and the funding battles they still have to sort out in the 118th. Joining me now for more here on Bloomberg TV and radio is Maya McGinnis. She is president of the Committee for a Responsible Federal Budget. Maya, if we could just first begin with the work that has to be done before the year is out. It seems that we're either going to end up with an omnibus package or a continuing resolution and kick the can down the road once again. Are either of those things fiscally responsible?
Well, it depends what they include in them, whether they're fiscally responsible or not. But both of them are 100% a reflection of the fact that our budget process is beyond broken. We should have passed a budget. We're well into the fiscal year, and we should have passed a budget last spring, let alone by the end of the year and the end of September. So no, the fact that we're even considering the two of these is just a sign that we don't budget the right way at all, and we're not dealing with these big issues. And there's still a very large risk, no matter which they choose, a CR and omnibus, that they are going to fill it with additional debt-financed policies. And that's where a big risk is for the end of this year.
Well, so then as we look ahead to next year and what's going to happen with the budget and debt, obviously we've gotten a ton of names dropped from Donald Trump in the last few days, including Russell Vought reprising his role as OMB director. And I wonder what that makes you think, Maya, about the way the budget process is going to play out in 2025 and beyond.
Yeah, Vought has been there before. We've seen where his priorities are. He's looking very closely at some of the roles that the executive agency can have. But what we did see when he was the director of OMB before is that it was a period, not even counting COVID, but when spending grew very, very significantly. One of the things to remember about the last Trump administration was that there was obviously an emphasis on large tax cuts where they passed the TCJA, that added to the debt. But right after that, there were huge spending increases to about the tune of $2 trillion. And so one of the things we've seen is that there hasn't been a big emphasis on cutting spending. In fact, under President Trump before, spending went up significantly. The big question mark is whether they will focus more on spending cuts this time around, because clearly the spending is on an unsustainable path, as is the national debt.
Well, and presumably the Secretary of the Treasury is going to have a role in this as well, Maya. He has tapped Scott Bessent, who has talked a lot about this kind of 3-3-3 policy strategy. Two of those threes relating to the deficit in some way or another, as we consider the fact that he wants to see 3% GDP growth, yes, which he thinks tax cuts will inspire. But he also wants to cut the budget deficit as a percentage of GDP to 3%. Can he get both a permanent 2017 tax cut package and a lower debt to GDP? Can he have both of those things?
He can get certainly a higher level of growth and lower deficit. That 3-3-3 plan, it sounds great. It's very, very tough to get to those numbers. But just moving in that direction would be huge amounts of progress. The real question here is whether they are going to insist that the tax cuts are offset. If you just add them to the debt and you add the $3.9 trillion or more, not only is that going to make 3% deficits impossible, which it's already going to be very hard to achieve, it's going to add to the effects, the headwinds against growth. So tax cuts help grow the economy. Higher levels of debt harm economic growth. So the best way to grow the economy is, if you want to cut taxes, to make sure it's not adding to the debt, it's not debt finance, but it's offset either through base broadening, or spending cuts. The future Secretary of the Treasury has talked about this and written about this. He is somebody who does care about fiscal responsibility an awful lot. So I think that he will be one of the voices pushing for that, but it will also depend where else the other voices in the administration are. And there is a big propensity among lawmakers, particularly when it's just one political party that has all the branches of government. There's a strong desire not to do anything hard and just to borrow everything. If they borrow for those tax cuts, the deficit will go up and economic growth will go up in the short term, but not the long term. It will go down in the long term because it'll be more depressed from the debt levels.
Well, what they would tell you, Maya, is it's not just that they borrow. They're also going to offset the lost revenue through higher tariffs. But there's a question about the economic impact of that as well. Obviously, in the earlier edition of Balance of Power, I spoke with Seth Harris, VP and Director of Economic Studies at the Brookings Institution, about that. This is what he told me, and then I'll have you respond.
The likeliest consequence of the tariffs will be much higher prices for Americans, for consumers, not merely with respect to imported products, but also domestic products. The prices will go up because American producers won't have to keep their prices low. And also, I think a lot of people are going to lose their jobs.
So, Maya, feel free to weigh in on that economic impact, but then also to what extent tariffs, even for that, would be able to offset the lost revenue for the Treasury.
Yeah, great point. I mean, I find tariffs really interesting because there's so many different effects they have. The economics of tariffs is not good. It slows economic growth. It does increase prices. We don't know if that will be a one-off or it will contribute to igniting inflation again, but we know it will push prices up. The fiscal effects, however, can be quite positive. Even though it has a negative effect on the economy, you're still likely to raise revenues. It depends how other countries respond, but you're likely to raise revenues. We estimate that you could raise between 2 and 3 trillion reasonably from tariffs. That would not offset all of the tax cuts, but it would offset a good deal of them. And then there's also the final consideration of what's the national security effect. They're not put in place just for economic reasons, they're for national security reasons. But tariffs would not be the most pro-growth way to raise revenue for sure, but they could take away some of the bite of adding to the national debt if you don't do anything to offset them. I can promise you one thing, there's going to be a huge fight on these tariffs, very different economic perspectives, even from within the cabinet as it's becoming appointed.
Well, and the appointed members of the cabinet and the role that they will have in the typical structure of the U.S. government is one consideration here, Maya. The others are, of course, people who are going to have kind of adjacent roles, like, say, Elon Musk and Vivek Ramaswamy, who will be leading this Department of Government Efficiency. And weigh in, if you like, on the overlap between the DOGE work and the Committee for Responsible Federal Budgets work, how much they're going to be working on the same things you are. But you obviously have much more experience operating in Washington than either of those two do. And I wonder what realistically you think they'll be able to accomplish.
Well, I'm actually going to say that the fact that they don't have experience working in Washington may be to their benefit. I mean, part of what we need to do clearly there is a need for the mission that they have. We need to look at our federal government. We need to squeeze out efficiencies wherever we can find them, and there are plenty of places we can. We need to cut spending. We need to bring in technology in ways that will help make us more efficient in our agencies and our departments. We need to create systems where our computers from one agency to another can actually talk to each other. So in that way, I think it's terrific that they haven't been doing the same baseline scoring that I think about and other people think about all the time. On the other hand, there's another sort of related entity that I thought you were going to ask about, but it's Congress. And Congress is going to have to approve a lot of these savings. And when they look at things like unauthorized spending, and yes, there's $500 billion in unauthorized spending, but a lot of this comes from the fact that there's huge bipartisan commitment within Congress for those programs. And so it just goes through the budget process in a different way. It's not necessarily the low-hanging fruit. We're going to try to put out as many ideas as possible for this committee to use spending cuts, efficiencies, ways to broaden the tax base and get rid of some of the spending through the tax code. They're going to come up with ideas we would never think of. I hope that this is a serious exercise, and I hope people go into it with an openness that we could really improve our federal budget from these kinds of changes. But nobody should trick themselves into thinking it's going to be easy. I guess that's why I always end on all of these things, right? Fiscal responsibility is not about free lunches. It's about choices. And we're going to have to make some tough choices on revenues, on extending policies, on spending reductions, on how we use regulations in our budget. And hopefully they will bear fruit, because our fiscal situation really needs a change and improvement. So I wish them success.
All right, we'll leave it on that note. Maya McGinnis, president of the Committee for a Responsible Federal Budget, thank you so much. Coming up, my conversation with Democratic Congresswoman Maxine Waters of California, the ranking member of the House Financial Services Committee, next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Today on the early edition of the show, I spoke with Democratic Congresswoman Maxine Waters of California, who is ranking member of the House Financial Services Committee. I asked her who she would like to see as the next chair of the committee as Congressman Patrick McHenry leaves office. Here's her response.
If I identify him right now to you for the public, this probably would lessen their opportunity of getting chosen. So yes, I hope there could be someone that follows that description, but I can't tell you whom at this point.
So just one of the candidates, am I understanding, you think you could work with on a bipartisan basis of the 3 or 4 that have been floated?
Well, to tell you the truth, I could work with members from the opposite side of the aisle, pretty much in the way that I've worked with McHenry and others. But we've got to see who's willing to step up to the plate and do what is necessary to protect our investors, do what's necessary to hold on to the Consumer Financial Protection Bureau that's protecting our consumers. Any of those who can do that, I can certainly work with them.
Well, we have seen some bipartisan work coming out of the committee in this committee in the 118th Congress, including a bill that advanced out of the committee and ultimately passed on the House floor, the FIT 21 Act, the market structure, crypto legislation. And Congresswoman, I wonder what you think the future is of those kinds of legislative initiatives now that Republicans won't just have control of your body, but the Senate as well.
Well, let me tell you, I've worked very closely with McHenry where we've tried to get stablecoin. Our efforts have been about guardrails. We are not opposed to legitimate legislation that appears to be in the best interest of the people of this country. And there may be some crypto that would like to have guardrails. If there are guardrails that we can agree to, working with all of the entities that are interested in and a part of developing crypto if we're ever going to get there. And that means the Treasury, that means the Federal Reserve, that means the SEC, that means all of these agencies have to come together with the president on crypto in order to have something that will have guardrails and will not just be determined by the fact that crypto companies are trying to invade all of our financial services members with large contributions, et cetera, et cetera. We know what's going on, and we think now they're going to have an opportunity to learn more about what crypto really is and how it works in this digital economy that we're involved in. So we've got a lot of understanding, a lot of searching out, and a lot of educating to do. And if we can work with anyone who's willing to do that and provide these guardrails, I'm ready.
You can find my full conversation with Democratic Congresswoman Maxine Waters of California online or on the terminal. And still ahead, my conversation with former U.S. Defense Secretary William Cohen as Israel and Hezbollah work toward a ceasefire. That's next on Bloomberg TV and radio.
not done yet. Nothing is final until everything is final. We continue to work to try and get an agreement over the line. And we're hopeful we can get one, but we need both of the parties to get to yes. We believe we are close here, but that's why you heard me come out and say nothing's final until everything is final, because we know we don't have a deal until there's one that has been fully agreed to by both sides.
That was State Department spokesperson Matthew Miller earlier today discussing the ongoing ceasefire negotiations between Israel and Hezbollah forces in Lebanon. Joining me now for more here on Bloomberg TV and radio is William Cohen. He is former U.S. Secretary of Defense. Mr. Secretary, thank you for being here. As we've seen this conflict play out in the Middle East for well over a year, though more recently, of course, firing really started between Israel and Hezbollah. Israel has maintained that it wants to eliminate threats along its borders, in this case on its northern border. And I wonder if you really see Israel as ready to agree to a ceasefire here.
Well, of course, we don't know at this point, but the Israelis are going to insist, as they should, that there be a buffer zone, that Hezbollah be moved back, so they're not constantly posing a threat to the Israelis in the northern part of Israel, as they have been doing over the years. So pushing them back to an area which makes it less that makes the Israelis less vulnerable will be important. So I think that Prime Minister Netanyahu is going to insist upon that. And now, at least, it seems as if the leadership of Hezbollah is prepared to make those kinds of concessions. I also suspect that Iran is very much playing a role in this. I don't think Iran wants to see Lebanon reduced to what we're seeing and have seen in Gaza. And so I assume that Hezbollah is getting pushed from the Iranians as well as being pummeled by the Israelis. So it's in their interest to make a deal as such. And I think that the Israelis would like to achieve one if they can, based on the premise of pushing the Hezbollah back as far as they can.
So are you suggesting, sir, that Hezbollah has been materially weakened by Israeli forces to a point that it may be difficult for them to either reconstitute themselves or continue a pace fighting them as they have been? What exactly, if it ends in the near term, this particular conflict, will Israel have accomplished in terms of eliminating a threat for an extended period of time, not just the immediate future?
Well, that is key, the question of the length of time. They had an agreement going back to 2006. That agreement has eroded over the years, and so the Israelis are reluctant to strike another agreement along the same lines. And so I think the Israelis will be very hard over on that issue of how far back Hezbollah can be removed. And I would assume that that's going to be key for them. Ultimately, I don't think the Israelis are going to be able to eliminate Hezbollah, certainly as an ideology. They are fully integrated into the Lebanese society. So uprooting them and pulling them out of the political integration will be more difficult. As from a military point of view, I think that the Israelis have been successful in decapitating the leadership. So I think Hezbollah is struggling right now and not having the top echelon of people to give them military guidance and capabilities. How long that will last, we've been through this so many times before. You keep thinking you're knocking out leadership. It's whack-a-mole in terms of, well, we got these top leaders, and a year later or less, you've got more top leaders coming. So the real issue is, can you push them back? Can you reduce the threat to the Israelis? And can the Israelis reconstitute that war if need be? This is one of the key sticking points, as I understand it. The Israelis want to be able to resume the war in the event that Hezbollah starts it over again. And that would be a key component to any kind of an agreement, saying that a ceasefire stays in effect unless someone violates it. And that has to be a violation that's clear and present danger, a present danger threat to the Israelis in order to back away from the ceasefire. But they need to have that kind of reassurance.
Well, and assuming they get that reassurance with this particular adversary, what about with Hamas, sir? Do you think a ceasefire agreement between Israel and Hezbollah would then pave the way for a similar cessation of hostilities in Gaza, or is that one much more complicated?
Well, as I understand it, Hezbollah has indicated they're going to withdraw their support from Hamas. That too is an important signal that if they're prepared to pull back their support for Hamas, what does that mean as far as Iran is concerned? Is Iran going to continue to push and support Hamas under these circumstances, where Iran itself has been under attack directly from the Israelis? The Iranians have fired into Israeli territory, but for the very first time, most recently, the Israelis have been able to penetrate Iranian air defenses to go in and strike almost at will key targets. And so Iran has to be concerned, do I really want to continue to push and support Hamas and put myself at risk as well? So there are a lot of issues at play here, but Israel's strength and capability is pretty dominant right now.
Well, and both Israel and Iran are aware that 56 days from now, there will be a new commander-in-chief and president of the United States. How do you expect, sir, that policy toward the Middle East will change under this incoming Trump administration?
Well, President-elect Trump has said to Prime Minister Netanyahu, finish the job. Now, what does that mean exactly? Does it mean eliminating Hamas as a fighting force? Does it mean eliminating Hamas as an ideology with the Palestinians? And so finish the job, it can be interpreted a different way. It might be finishing the job once you reduce the military capability of Hamas and you get the Gulf states, Saudi Arabia, also UAE and others to say, we want to see a different leadership on the part of the Palestinian people in place. We want to rebuild the economy for the people of the Gazans and those in the West Bank. And that will bring long-term prosperity to that part, to the Palestinians for sure, but also to the security of Israel. If they have the Israelis, the Saudis, the UAE, and others who are working with Israel, that really does tend to isolate Iran going forward into the future. And that's the kind of security I think the Israelis really need.
Well, and as we consider this incoming administration, he obviously has asked one person in particular to be part of it and lead the Department of Defense, the Defense Secretary designate Pete Hegseth. You are one of very few people who know what it is to lead the U.S. Defense Department, to know what is required to actually be able to serve in that role. Is he qualified for it?
Well, we'll have to wait and see whether he receives the endorsement of the United States Senate. He has the education. He's highly educated. He's served in uniform. He's received honors in battle. So from that perspective, I think he gets very high marks. The real issue coming up is what is his philosophy in terms of how is he going to manage the largest government agency in the United States and one of the biggest in the world. And that has multiple organs you have to be concerned about. You have to be concerned, certainly you have to satisfy the commander-in-chief in terms of his policy. You also have to deal with Capitol Hill, how you manage that relationship. You have to also manage your allies' relationship. What are our allies doing to support this relationship over the years, and are they measuring up to their responsibilities? So you have a number of constituencies: the president, the Congress, our allies, the establishment, the defense establishment itself. The families are critical. What is his position about the families? We know he's raised questions about women, specifically women in combat. I can tell you they are integrated into our military in a way that we can't fight our wars without them. So how he defines women in combat will be key. Whether he is seeking to pull them out of, quote, combat roles, well, what does that mean? Does it mean pulling a trigger on the front lines of the battlefield, or managing a drone or high-performance aircraft or some of our finest ships that they're sailing? So all of these issues are going to come before the United States Senate, and those are the kinds of questions he'll need to address. And then if the Senate is satisfied, then certainly he'll be carrying on behalf of the President of the United States and the American people.
Yeah, of course, might have to address allegations of sexual assault as well. We'll all see whether or not he can actually get through this confirmation process. Thank you so much, as always, for providing your expertise. Former U.S. Secretary of Defense William Cohen here on Balance of Power. And still ahead on the show, our signature political panel joins me to go through the long list of announcements Trump made this past Friday night: Treasury, labor, agriculture, and more. That's next on Bloomberg TV and radio.
he has a deep understanding of financial markets as opposed to most politicians. So, he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends.
All taxes are passed on to consumers, and I think what's interesting about taxes is they aren't necessarily inflationary. They're a one-time administrative price adjustment.
Tariffs cause a stronger dollar, so a weaker dollar with tariffs is it's an economic abnormality.
Jay Powell's reappointment was the latest this century for a Fed chair, latest this century. And I think that is what stoked or certainly accelerated the inflation.
Some words from Scott Bessent, founder and CEO of Key Square Management, and Donald Trump's pick for Treasury Secretary here on Bloomberg TV and radio. His nomination, of course, just one of many cabinet picks that came on Friday evening from the president-elect. And joining me now here with more on Balance of Power is our signature political panel, Rick Davis, Stone Court Capital partner, alongside Jeannie Shanzano, political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. You both, of course, joining me now that the first trading day since the selection of Bessent is over, Rick. Stocks were up, bonds were bid. This is exactly what Donald Trump was trying to achieve, right?
Yeah, Bessent's got a nice little trade going here today. We keep talking about the Donald Trump trade. Well, This is kind of underneath all that. And look, I mean, we're experiencing a very good economy. You can't underestimate the value of some of the, sort of reports that are coming up for the quarters, but the companies have been pretty strong. So all of it together has combined for new records, set today. And I think you could argue that maybe we have a Santa Claus trade coming up, too. So, I think it's a very good time to be in the markets right now and be a bond dealer.
Well, so as we consider what's coming up, maybe we'll get the Santa Claus trade that Rick Davis is talking about, Jeannie. But we also still have 56 more days of this transition to watch here. And it's not just Bessent that the president-elect has picked. He has now filled out the top 15 roles in his cabinet. We know who the secretaries are going to be, at least assuming they get confirmed. So what does he do now to make this transition a smooth one?
Yeah, I mean, there's a few things that have to happen. You're right. I mean, the speed has been, a marvel to watch, kept all of you busy on Friday night. But there's still a few more roles, small business admin, a few like that. But the top have been filled. But what's going to be happening now is trying to make sure all these people get through the Senate confirmation process. And also, I think most importantly, watching who these people pick to be their deputies, their advisors. We do have some people that have been named who don't have a lot of experience in the roles to which they are going in, the departments to which they have been named. And so who they pick for their deputies, who they pick to help them through this process to manage these enormous departments that they're going to be overseeing is going to be really important to watch.
Well, and as we consider who will ultimately be in these departments, one of the other surprising nominations came in the form of the selection of the current Congresswoman from Oregon, Lori Chavez-DeRemer, for Labor Secretary. I spoke about this with a labor expert. He advised President Biden on labor policy, Seth Harris from the Burns Center at Northeastern University, about this today. This is what he told me.
What I know about her is that she is a unicorn. She is a genuine pro-union Republican, and we thought they had all gone extinct, but here we found one in nature, or President Trump found her in nature. These are positions taken by only a very, very, very small handful of Republicans in Congress, and that's why she is facing some pushback from elements of the business community and also from some Senate Republicans.
She, Rick, of course, signed on to the PRO Act. She was one of only 3 Republican co-sponsors of that legislation, which is why we're getting some of that pushback. But do you think she's a unicorn or representative of what the Republican electorate has become?
Yeah, this is not your mother and father's Republican Party. It's not the country club, Wall Street set. It's working class America. That's what fueled this election. That's what got Donald Trump elected in 2016 and got him even further down the road politically in 24. So it can't be underestimated that she is actually mainstream MAGA. And in that regard, will actually have the job in a Republican administration of welcoming in labor issues so that they can be aligned with where the movement is that they are in the grassroots America.
Well, and that's not necessarily a bad thing for Democrats, right, Jeannie? I would imagine many of them like this pick.
Yeah, absolutely. You know, I thought this was one of the most fascinating picks that we heard about on Friday because, you know, it really does, in some ways, it's emblematic of who Donald Trump is himself. He has changed this Republican Party. You know, Rick said it's no longer the party of your dad's Republican Party. This is a party which we saw Sean O'Brien from the Teamsters go to the Republican National Committee and speak. While he didn't endorse Donald Trump, he was apparently pushing for her to get this nod. Donald Trump met with her and liked her and has made this appointment at this juncture. And she may well be the most pro-labor labor secretary ever appointed by a Republican president in the modern era. So when we talk about this party changing, she is emblematic of that. And I think we see that throughout some of the picks. Another one is RFK Jr. Love him or hate him, he is not a, you know, traditional Republican pick. And yet he has been picked to lead Health and Human Services. It's truly remarkable how Donald Trump is putting his stamp in a way he didn't during Trump 1.0 on this so far on this cabinet.
Well, some of the first Trump administration is going to work its way into the second one, including the person who ran the OMB under the first Trump White House. Russ Vought is going to be reprising that role. Noteworthy, Rick, he was a big contributor to Project 2025, which Trump made great pains to distance himself from on the campaign trail. So what does it say that a lot of those Project 2025 authors are now finding themselves in this administration?
Yeah, you knew that places like Heritage and AFPI were going to be the fuel behind a lot of the manpower coming into the Trump administration, and that's exactly what's been happening. And so the question that Jeannie was lamenting is who are the deputies going to be and who are going to fill out the rest of the ranks. These are the people who are going to do it. And I think Russ Vought, because he's been OMB director before in the first administration, spent a lot of time thinking through what they could have done, should have done, would have done if they'd had another shot at it, is going to be ready day one to exert a very Trump stamp on the economy vis-a-vis the federal budget. And working with Vivek Ramaswamy and Elon Musk through the DOGE program, you're going to have more energy in government reform than you've had since Ronald Reagan came to Washington.
DOGE, something we'll continue to watch. Rick and Jeannie are going to stick with me because still ahead, the Justice Department drops criminal charges against President-elect Trump. We'll have the panel weigh in on Balance of Power on Bloomberg TV and radio.
it raised a lot of questions, even with Democrats, as to whether or not he would have been charged with those things if his name wasn't Donald John Trump. And it gave him that new rallying cry that, look at what they're doing to me. If they can do it to me, they can do it to you. Elect me, and that won't happen. It reinvigorated his campaign. So, said from the very beginning, if there's one human being probably most responsible for Donald Trump going back to the White House, it's probably Alvin Bragg, followed closely by Letitia James.
Mick Mulvaney, former acting White House chief of staff for the first Trump administration, today on the early edition of Balance of Power, responding to news the DOJ is dropping criminal charges against Donald Trump, including those related to 2020 election subversion. Back with me for final thoughts now, our signature political panel here on Bloomberg TV and radio, Rick Davis and Jeannie Sheehan Zaino. So, Jeannie, would love for you to weigh in on the point Mick made, which is that all of these indictments, which, of course, only resulted in one case even going to trial, were actually the fuel that propelled Donald Trump to the White House. Could he have won without them?
I don't think we know if he could have won, but they certainly were a fundraising bonanza. When he was first indicted, I wrote it was a mistake, and I continue to believe that Democrats have to beat him at the ballot box. They cannot try to beat him in court, and of course, that's what happened. So I never say this, Kayleigh, but I have to agree with Mick Mulvaney. Well, sometimes I say it, but in this case, I agree with him.
Well, I wonder if Rick also agrees with Mick.
Yeah, to some degree. I mean, look, you got to understand what fueled his election, both in 16 and 24, is the change in the demographic. I mean, he was picking up people who were angry with the system, who didn't benefit from any of the recovery since 2008, who are the ones who feel like the system was against them. And he plugged into that. And the fact that he was under assault by the same system that they believe kept them down just galvanized his support. They were always going to vote for him, but there's no question they might have voted for him in bigger numbers because of the assault legally.
Well, and of course, he was a convicted felon already by the time the election rolled around, Jeannie, though he might not ever be sentenced in the case where you are up in New York. So I guess I can't ask you if President Biden should pardon Donald Trump, because there's not going to be anything federally to pardon him for.
Yeah, that's right. I mean, these charges are being dropped by the DOJ. I think it's the right move, but there is a huge question that remains for America, which is that how do you define immunity? How does the court define immunity? And that is something we still need an answer to, regardless of the fact that the DOJ is dropping these particular charges.
Just while we're on the subject of pardons, is the president going to pardon his son before he leaves the White House, Rick?
Well, maybe there are going to be 3 turkeys that are pardoned.
That's right. Peach and Blossom.
And
pardoned
Hunter.
at the White House today. Should Hunter be added to that list, Jeannie?
Boy, it's hard for me to get past Peach and Blossom. No, I think the president said he wasn't going to pardon his son. I don't think he should, although that's a very, very difficult call for a father to make.
Well, certainly. The turkeys at least got their pardons today. Rick Davis and Jeannie Sheehan Zaino, thank you so much for joining me, our signature political panel. And of course, for more on the turkey pardons and everything else coming out of Washington, check out the Washington Edition newsletter on the terminal and online. And I'll see you right back here tomorrow on Balance of Power on Bloomberg TV and radio.
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it others seem to have a very, very narrow definition in mind. And the people we can all agree are stone cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're gonna try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News, and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits, at the end of the day, are no better than naked animals. It was a genius and radical idea, because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses, maybe AI is the genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that in fact lost money. No, I don't think there are geniuses. I think there are a lot of very smart people in Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
Whether it's sinister, but this is a very highly paid profession. And someone like me who says, listen, don't listen to anybody. Just buy a simple index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. These guys do very, very well. Is that sinister? I don't know. You call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity on Wall Street is coming from a sinister place. More like it makes me feel bad or makes me feel dumb, and that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it. But will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Burt Malkiel, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And you know, whether or not it has anything at all to do with genius, tell us about that moment.
You know, I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and, I guess, use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, you know? What does it mean, what would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right, right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like, those days are gone, okay? But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. Yeah. But my understanding, though, from reading a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
I did, yeah. My mom was born in Haiti, and she was naturalized citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and yeah, my father was just very abusive. At the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom. And my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, the vision of my future is seeing Western science and traditional ecological knowledge come together, not annihilate each other, but actually harmonize with each other, so that then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story, sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up. Getting older is not easy, but the good news is time brings opportunities to become a more practiced, a more seasoned, a more you version of you. The guest who's sitting with me at this table is one of the most accomplished people I've ever met, and she is 17 years old. In 2021, Zaila Avantgarde won the Scripps National Spelling Bee. But She considers herself not so much a speller as a basketball player, and she has multiple Guinness World Records in juggling. A few weeks ago, this young genius started the 11th grade. Zaila, so glad you're here.
Thanks for having me.
Truth is, we're all super different. We all have our own gifts. We all have our own limitations. When and how did you come to realize how special you are?
So that's a complicated question, I would say, because I didn't so much realize, I realized I was special, but I became special through a process of like training and stuff. If you look back on it, like I wouldn't say I popped out the womb like a genius or something like that. It's like when people would start to stop and look at me while I was dribbling or practicing at a court, people like stop and look because, hey, look at this cute little girl. I was very small when I was that age. So this cute little girl dribbling 2 balls and doing all this between the legs, step backs into shots and stuff. So pretty early on, I realized that, yeah, I might be a little bit different than the average kid.
You won this like completely beloved national competition, but it's something that I think you no longer consider your main passion, or maybe you didn't even consider it your main passion then. What does basketball make you feel that spelling doesn't?
I would say basketball gives me even more of like the competitive rush. Like I just really love to compete and stuff. So like, and like spelling is more like, yes, it's not really like person-to-person competition. It's more like person versus dictionary, which is something you hear a lot from spelling bee people. It's like it's me versus the dictionary, because that's where the words are coming from. Whereas with basketball, it's more like physical competition, like, oh, I made it between the legs and there's this girl on me and I have to shield her off, and it's like more tangible competition as opposed to the more philosophical competition of spelling.
I want to ask you about a very different kind of genius. There's this billionaire named Sam Bankman-Fried. Think you've heard of him?
Of course.
Widely considered to be the world's, great crypto genius before he was then charged with fraud, which he has denied. How should the rest of us look at people who get called geniuses, but maybe they still have shortcomings, just like everybody else?
Sometimes I feel like the term genius is like nowadays it's so loaded. Like it's not, maybe it's like, oh, it doesn't just mean, oh, look at her, she's a genius, like she's so smart or whatever. But like then like if you're labeled with that like your whole life, that kind of like puts a pressure on you. Like maybe once upon a time, like I listened to a podcast about Sam Bankman-Fried, but I don't know him personally, so I can't speak for him. But hypothetically, like he's like his parents are like, oh my God, you're so smart. He goes to accelerated programs in school, and that's just putting pressure from a very early age. Like, I'm a genius, I have to be a genius, I have to always be a genius. So I always feel like people, like some of the scammers and stuff, should get maybe just a little bit of sympathy, just a little bit, because they are like causing all sorts of trouble, because like they've been considered geniuses their whole life and they had a nice business plan or something, but then it didn't work out. And so what are they supposed to do? Go to all these people who say, oh, you're a genius. That just puts a little pressure on you to like give you that extra push you needed to try to maybe go into the murky waters of life.
The murky waters of life. I want to ask you one final question about pressure. I think that there is sometimes pressure in the United States, maybe everywhere, pressure on really smart people, genius or otherwise, to use their intelligence to like make a lot of money, to be successful. And like, I guess I'm thinking specifically about the finance industry and mathematicians, but it's true of the business world. You're smart, you go make money in business. Do you have a favorite company or an industry or like a job that appeals to you?
I mean, I'm not like super like make millions of dollars. I mean, if anybody who's watching or listening wants to give me millions of dollars, please hit me up. However, like I'm interested in going to neuroscience or maybe working for NASA or maybe being an NBA head coach. But I just realized I've never thought, how much money would I get for this? Because that's not really something like I think of, because you can make a lot of money, not to sound trite, but you can also be really miserable making a lot of money. So that's not even something I actually consider, like how much money will I make? I'll cross that bridge when it comes.
Zaila, you're gonna cross the bridge, you're gonna have a great time. I have had a great time talking to you. I'm thrilled you're here.
Thanks for having me.
When you ask geniuses, as I just did, what a genius is, or if we need geniuses, or if they're a genius, the answer you'll get will be genius. It turns out that there is not one way to be a genius of finance or of art or of language, just as there is not one way to think about genius itself. What matters is not what you call unusually high levels of intelligence or talent. What matters is what you do with it. Thank you so much for watching the first episode of the Business Week Show. We'll see you again for another one soon.
I am a completely virtuous person. I have no missing virtues. But I do wish I could sing.
People clearly tend to be impatient where they should be patient.
I waste the most money on champagne. I love champagne every day. Every day I have 2 glasses of champagne. That's my thing. 2 glasses of champagne every day.
Risk is everywhere. It is a risk to get out of bed, take a sip of coffee, step into the street, shake someone's hand, eat a tuna melt. Trust risk betrayal, authenticity risk rejection, and if you want to play it safe, doing nothing risks missing out on everything. We associate risk with what you might lose, but there is no winning in the marketplace without it. If anyone ever comes up to you and offers you something that is completely risk-free, buyer beware. Nothing ventured, nothing gained. I read this thing in Bloomberg Business Week about Silicon Valley Bank, which bought billions of dollars of bonds, a risk. Then the value of those bonds fell, depositors went running out the door. The impact of that risk was one of the biggest bank failures in the history of this country. What does it feel like to take risk in business and in life? We're gonna try to find out from actual risk takers. It's a risk, we're gonna take it together, and we're gonna take it tonight.
It's the Business Week Show.
Welcome to the Business Week Show. Tonight, risk. The very idea of who gets to take financial risk in global markets and how they go about taking that risk, and then how they talk about that risk, changed thanks to tonight's first guest. In 2012, Jamie Rogozinski logged onto Reddit, he started a new page, and he called it Wall Street Bets. In the years that followed, it got millions of users. It sparked real frenzies in stocks like GameStop and AMC, and at one point, it got its own Super Bowl ad. But As you may imagine, things did not work out all that well for everyone. And Jamie is here tonight to tell us all about it. Jamie, seriously, thanks for being here.
Thanks a lot for having me.
Risk is a funny thing because it freaks some people out, me included. But there's also something about it that is so attractive and so tantalizing. Why have you been so drawn to it?
Risk is a funny thing because when people say risk, especially when you frame it that way, the implication is either there's an element of randomness, right, or that's the outcome it can be very, very costly because it's either unlikely to pay out or the actual, chance of losing might be really costly. But the way that I see risk is really, if you're able to actually quantify those elements, it's really a price that you pay for an opportunity. The way that I look at risk in that sense, it's not that I'm attracted to these thrill seeks. It's, I think this is worth it, right? I think I can identify these are the probabilities or possibilities, and sometimes I can't, but at least I can map them out. And this is what the possible outcome is. And I'm like, let's do this.
Okay, let's do this. Let's really talk about that. Because what you're saying is you're really talking about what it means for something to be risky. When you started Wall Street Bets, the way you've talked about it is that you said you wanted a place where people could talk about risky ideas and they could talk about it kind of proudly, risky trade ideas. You were enabling other people to take risks. So can you tell us, like, what worries did you have at the time that things potentially could go wrong for them?
You know, my definition, my understanding and my position on risk has evolved, right? It's become clear as the years gone by. And early on, I justified this by saying, well, look, they're all adults. You have to be 18 in order to open up a brokerage. Same thing if you go to a casino, everyone can go through. And when I said I wanted to be able to discuss high risk, I wanted to discuss high risk, high return, right? It wasn't just high risk is throwing your money out the window and having it go away with 100% certainty. This was high risk with the possibility of making money. And those two obviously go hand in hand. There are some that are irresponsible with it, but I can't make myself responsible in much the same way that there's gambling addicts, right? But outside of that, what I start seeing is a learning process, much like the one that I personally went through. I lost tons of money, but I walked away with so much knowledge and understanding and hands-on experience that a textbook can never explain to you.
I want to ask you about someone who sort of counts as your really, really complete opposite, Jack Bogle. He was the founder of Vanguard. He helped popularize the very vanilla, very boring idea that if you're an investor, you can diversify your bets. He ended up popularizing the index fund. How did it feel that you, in some ways, were kind of singularly responsible for changing the way that just millions of people think about investing? What did that feel like?
It was humbling for sure. It was unexpected to see the enthusiasm. If I were to have predicted the outcome of it, it would have been people looking down at this particular type of activity. Secretly, it was almost a goal of mine. But the beauty of it is what conservative investors do, Bogle, Buffett, whatever it might be, is no different than what gamblers that literally go to sit at a roulette table do. The changes in the vision that Wall Street Bets were, it demystified the idea of finance to people that might otherwise think it's just Excel sheets and discounted cash flows.
You also took a different kind of risk and you sued Reddit and you lost. Will you tell us a little bit about what that felt like?
Terrible. Yeah, that was probably in the top 5 riskiest things, if not 3. I get kicked out, and the stubbornness behind Reddit, they never answered. I tried pleading and sorries and threats and back channels and lawyers. They would just be like, no, you're done. They got to a point where they said, no, we're done trying to negotiate. We want to take you to court with this. And I said, all right, well, I guess now I have to actually go to court. And so this is when I decided to countersue them.
So it didn't feel like a risk. It felt like just something you had to do.
I needed to do it for closure. I still had a chip on my shoulder, and I couldn't fully commit to anything. And I'd still kind of look at, every time I'd see Wall Street Bets on the news or people talking about it, it would still have that kind of sour feeling. And so, and I needed to get past that. And I'm like, look, if I lose, I lose. And then it is what it is. And it would have been the fight of the century for me, or my lifetime for me. But but then I can be at peace. Right?
Is that how you feel now? Are you at peace?
Unfortunately not, because it's not over yet. I would have liked for the judge to have been like, no, dude, you lose and it's over. You know, I don't want to cover too much on the legal side of things, but the judge, let's just say they left plenty of room for maneuvering. So unfortunately, it's not over.
I was told, I really don't know what it is. I was told you brought an object, I think, that maybe encapsulates risk. I think Natasha, my colleague, is gonna pass it to us, I do believe. What is this? Okay. All right. Tell us about this guy.
You're familiar with this?
Yeah. Remind me.
So this is from a meme, right? It says, "This is fine." It's a little dog, and this encapsulates so much of both my life and my ability to handle emotions, especially with the volatility of markets, but also life in general. It gives you so many ups and downs and so many ways to go through it. Oftentimes, when faced with adversity, my composure resembles this. It's like, yeah, don't worry about it.
Can I see him?
Yeah, absolutely.
All right. Well, this is mine now. Jamie, thank you so much for being here. Loved having you.
Not a problem. Thank you very much for having me.
We have more risk coming up next. When executives across corporate America want to take a little risk or manage it, they often turn to Wall Street. And there is no entity on Wall Street with a more interesting relationship to risk, including Wall Street bets, than the company Goldman Sachs. And when I think about Goldman, which I do often because I'm a Wall Street reporter, my mind often turns to Maeve DuVally. Maeve is a longtime media executive and until recently was a managing director at Goldman. The truth of the matter is, we have a cordial relationship, but a kind of antagonistic one because it's my job to report on Wall Street's money and power, and it's her job to push back. Recently, I finished her wonderful memoir, Maeve Rising, which is an account of her journey from being a lonely and angry person to the woman who is sitting at this table with me right now. Maeve DuVally, welcome.
Max, thanks for having me. You know, I would say we don't have a antagonistic relationship. I would say that we've locked horns through the years.
Okay,
is that a better characterization?
I think that's a better characterization, but I'm going to ask you in just a couple of minutes about all kinds of risks that you have taken, personally and professionally.
Sure.
But I feel like we should start first things first.
Yep.
Why is risk, which is really, I mean, it's just a fancy way of saying basically the things that can go wrong. Why is risk so important to the work that happens on Wall Street?
Well, from a market perspective, obviously managing market risk, managing operational risk that somebody pushes a button they're not supposed to, and the trade that happens is bigger than it was supposed to be. Those are obvious risks. And there's also kind of macro risk, right? That a central bank does something that people weren't expecting. But the kind of risk that I manage, and incidentally, everybody at Goldman Sachs is taught they have to manage, is reputational risk.
Okay, so I want to talk about 2018. I think my favorite page of your book. You put on makeup at the office for the first time. What I really want to ask about is, like, tell me about the day. Like, what do you remember in full about that day in 2018?
Well, it was the day of the Knight Bagehot Fellowship dinner, which you've probably been to. Knight Bagehot Fellowship is a fellowship for mid-career financial journalists at Columbia University. I'm a alumni of that program and also on the board of Knight Bagehot Fellowship. It's really a nice gathering. I usually look forward to the dinner, but sometime early that afternoon, I literally had this overwhelming feeling and desire that I needed to wear makeup to the event that evening. And once I had that thought, I couldn't get it out of my mind. And I bolted out the door and walked a third of a mile to the closest Sephora and bought a bunch of makeup, which I put on at the end of the day. And I went to that dinner with some makeup on for the first time.
You put on the makeup, you end up kind of negotiating with yourself. And you say to yourself that you basically have this barrel of femininity, and you think, like, should I just keep the lid on? Should I just keep the lid on? What would you have risked if you had done that?
I think that would have been impossible, but if I did that, I would have been miserable.
I was wondering when I read your book how it felt to kind of risk your male privilege. You were risking your male privilege in a male-dominated industry.
I'm certain I had male privilege, and I'm certain through the years I exercised male privilege, but I wasn't really consciously aware of it. And to be perfectly honest, it's not something that really matters to me.
When it's time for you to choose a name, you pick one that means she who intoxicates.
Yeah.
Which blew me away when I read it, because months before, you stopped drinking. Why did you quit?
Well, I had a series of progressively bad bottoms. My last bottom, which was in January of 2018, I holed myself up in an apartment. I only left to get alcohol. I drank around the clock, and I made an attempt on my life. So if I continued drinking, I'm convinced that I would have killed myself. After that episode, I made a decision that I wanted to live. And I knew if I wanted to live, I had to stop drinking.
Look, we have a professional relationship, so part of me feels like it's hard to say this, but it's also hard not to say it. I'm glad you made that decision. A lot of people who are miserable, they don't get out of their misery.
Yeah.
They stay there.
So the reality is there are a lot of drug addicts and alcoholics in the world, and the vast majority of them do not get sober and do not get clean, and they die alcoholic and addict deaths. That's the reality. So those of us who have made it to recovery, don't take it for granted, number one, and two, realize that it was a gift. And it's a gift that has to be nourished all the time, because if you take it for granted, you're going to wind up right back on the street.
When you came out, you got, I think, literal bouquets from traders at Goldman. I think you got like these very warm notes from people. I think you got phone calls.
Yeah.
Those were from traders, and they were not from investment bankers. And you write in the book with clarity, investment bankers were quiet. I was so surprised by that. Can you explain that? Why did that happen?
I think probably some of my relationships with investment bankers were shallower than I thought. And I think investment bankers are very good at having really expansive relationships kind of across a wide group of people. But maybe some of those relationships aren't as deep as they would appear.
I love that you're accusing investment bankers writ large of a certain kind of interpersonal shallowness.
I'm not sure I said it exactly that
exactly
way.
as you said it. No. I'm hoping that you'll...
You're not going to put words in my mouth, are you?
Well, I'm the interviewer now.
Yeah.
You know, I asked you earlier about male privilege. Coming out as trans in the milieu of, first of all, New York City, where we are, but also a corporation, which I'm sure, as I'm also keenly aware, has a lot of pressures too. Can you talk, if you want to at all, about, I don't know, maybe the kind of privileges that come with having a really good career as you do?
Sure. So I certainly have white privilege. I have the privilege of having worked at Goldman Sachs. I'm relatively well off. I live in the Chelsea section of New York, which is arguably the best place to be an out transgender person in the world. And even before I left Goldman Sachs, I began to, and I've continued to be, an advocate or activist for the LGBTQ community more broadly, because not everybody is in a position to speak out. Not everybody wants to speak out, but I'm in a position to, and I want to speak out, so I'm going to.
Thank you so much for being here. I really enjoyed this.
Thanks for having me, Max.
If the names RZA, Jizza, and Old Dirty Bastard mean anything to you, or if you've ever been moved by the music of A Tribe Called Quest or D'Angelo, then you owe a debt of thanks to Sophia Chang. As an artist manager and as a music label executive, she helped shape the landscape of a golden age of New York City rap in the 1990s in a way that would be totally under-celebrated if it weren't for her own book, which is called The Baddest Bitch in the Room. It's a book about the music business, but it's also a book about taking risks, some that work out and some that don't. We've talked tonight about personal risks. We've talked about professional risks. We've talked about financial risks. Sophia's story is a story about what happens when those things come together. Sophia Chang, welcome to the show.
I am so excited to be here. Thank you, thank you, thank you.
You manage Old Dirty Bastard without any experience as a manager. You ran RZA's record label without any experience running a record label. I think you say in the book that risk is in my DNA.
Did I?
You do.
I wonder if I plagiarized that from somebody. That's really clever.
Risk-taking was in my DNA. Sophia, why is that?
I would say certainly my parents' stories have a lot to do with that. My mother, Tung-Suk Chang, born in 1932, she escaped North Korea when she was 14. She was one of 10 siblings. That was a huge risk. It was a very risky boat ride. My father, he was, God rest his soul, he was estranged from his father, and he took a risk when he studied mathematics in Vancouver. They went to Canada to build a better life for their family. So none of that was explicit in my head as a child, but I think that that's probably the model. And I think the other thing that really supported my journey and my risk taking was that my parents, every move that I made, they encouraged me. After I moved to New York, I didn't have a job. I didn't have a place. Their peers would say, your daughter, what's she doing? Get her back.
They would have had a good answer, because when you moved to New York, I think one of the first jobs you had was working for Paul Simon.
Yeah.
Paul Simon had a personal assistant who I think was a Korean American woman.
That's right.
And I think she taught you almost explicitly that it was important for you to take up space in a room. How is, not just confidence, but something like unapologetic confidence, how is that a risk?
I think when you take an intersectional view of this, right? When you think about the fact that I am a woman and I am Asian, and I mostly navigated, Max, very male-dominated milieu. And yes, I remember, her name is Sonia Che, God rest her soul, and I remember watching her move and I thought, wow, and she was smaller than me. She would just burst into a room and you could just feel her. She didn't have to yell, she didn't have to do any of that, but her energy just emanated off of her. And I really took that lesson from her.
But, it occurs to me that you talk about losing the fear of embarrassing yourself.
Yes.
I think when you're at like Atlantic Records in an early job.
Yeah.
People have a fear of embarrassing themselves for a reason, because it's self-protective. It's a kind of shield.
Yeah.
So it occurs to me to ask, maybe the question I really want to know is why is it so risky to be yourself?
I think that in general, we as humans operate out of fear, just in general. So if we're in a meeting and there are 10 people sitting around the table, and maybe I'm junior and I have an idea, my fear, and even if I think it's so smart, my fear is I open my mouth and everybody goes, and it's like the record scratch, rewind, and then everybody looks. I think we all live with a real fear of humiliation, embarrassment, excommunication, reprisal.
Right.
So I have gotten to the point where I just don't care. I mean, it's so incredibly liberating not to care what other people think. It doesn't mean that I don't get my feelings hurt. For me to be out here speaking as openly and fearlessly as I do, I know from people who come up to me that I'm setting an example.
One way of thinking about risk is that it's a kind of bet on the unknown.
Yes, of course.
It's a way of endorsing one kind of future over another. What are the risks, or maybe a single risk, that you still want to take?
I feel like I take risks all the time. I feel like my life is full of risk, and that does feel reckless, but I just turned 58 and I want to fall in love again. And that's really scary for a woman over, that's scary for a woman over 35. Never mind a woman over 40, over 50, close to 60. And what does that mean for a woman of a certain age to want to fall in love again? Well, that means you've got to put yourself out there. That's a risk. Because of patriarchy, because of ageism, because of all of those things.
Well, I wish you love, and I wish you many happy risks.
Thank you.
Sophia Chang, seriously, I loved having you here.
And I love being here. Thank you so, so much. Thank you.
Tonight, our three guests, with three very different careers, showed us that you can take just about any risk you want at work and outside of work if you've got the risk appetite and you're in the market for it. You can create a mechanism for other people to take all sorts of outlandish bets on stocks and options. You can reintroduce yourself at your very fancy job without a guarantee that your colleagues are going to appreciate the change. You can take a job in a big business that you're not really qualified for, and then if you don't like it, you can leave. What you can't do, according to these three interviews, is know for certain what the payoff's going to be before you take the risk. The best you can do is think carefully about the risks you want to take, think about why you want to take them, reconsider the risks you've taken already, and wonder about the risks that are still to come. Thank you so much for watching. We'll see you next time.
The biggest and most consistent lie that I've told in the workplace is telling my clients and or members of Wu-Tang Clan, what time the lobby call is or what time the flight is and making it an hour earlier than it actually is. But they all figured that one out a long time ago. So you just have to keep moving it back.
In terms of what causes me the most anxiety, it's when a news story I worked on didn't quite turn out like I planned. That's when you can get into trouble, when people have an unexpected negative surprise.
What's the worst thing that I've ever done professionally? Oh man, these existential questions, what is bad? There's nothing that I can recall that was not moral or not ethical. Mistakes, on the other hand, I've made plenty of those, but all of those have been good, right? They were all stepstones to succeeding, to being able to creating, to be able to actually fulfilling stuff.
I wouldn't say that I've had one sweeping gesture of generosity, you know, and you got a car, you got a car, you got a car. I've never been in that position. What I do that manifests generosity is telling people they're doing a great job and always giving them credit when it's due. And it costs nothing.
Welcome to the Business Week Show. When my colleagues and I thought about what kind of themes of the magazine we want to turn into episodes of the show, we spoke about envy, failure, feuds, family, heists, generosity, legends, risk, rivals, and then we had a really far out idea. Moonshots. We reached out to many different kinds of people, including like actual real NASA astronauts. The first person that we talked to is a billionaire who is spending $100 million to try to cure a rare kind of muscular dystrophy that he has called FSHD by the year 2027. His name is Chip Wilson. He's the founder of Lululemon, and that is one of the most valuable apparel brands in the world today. But when we heard about his life and his career and his feelings about honesty and one extremely serious example of dishonesty, we decided to shoot for the moon. So, tonight's episode is built around one interview and built around the moonshots of one person who doesn't totally think they're really moonshots at all. Here is Chip Wilson. Chip, welcome to the show.
Well, thanks for having me, Max.
You've written about feeling kind of disgusted in business and in life by, I think, what you call mediocrity. You know, and that's like complaining
or caution or like wallowing in embarrassment, wallowing in shame. What you want instead is, I think, what you describe as a kind of like radical, a radical greatness. What has the idea of moonshots meant to you and to your career?
I never really thought of moonshots ever. Like, so, I mean, you're bringing this up, and I guess Peter Diamandis from Singularity University and fame in the X Prize would have been kind of the master of this kind of idea about having an idea that could make $1 billion, affect 1 billion people in the world. And so what is that? And how do you exponentially set your company or yourself on that trajectory to get there? And of course, the big ways are setting a firm goal with a buy-win date and conditions for satisfaction, and then putting action in place in order to get there.
Am I right though, even if you're not thinking about it as moonshots, am I thinking that sort of maybe your life has been built around this idea of really kind of loathing, like an acceptance of mediocrity, and that what you want instead is to put yourself in a position to make kind of the impossible possible, which is, I guess, how I think about moonshots?
Yeah, I think more like I almost feel sorry for people that get to near the end of their life and they go, oh my God, my life is over and I really didn't go for it. And something that we'll talk about maybe later is this thing about looking at life from the stands rather than playing on the court.
By the year 2030, I think you've said you'll be unable to walk by yourself. You're about 18 months now into, I think there's a 5-year window for the $100 million US goal. Right. How is this new moonshot, if that's a fair word for it, how is it going?
I would say it's phenomenal. Before 2018, when we really started thinking about this Solve FSHD model that we have right now, myself and a man named Neil Camarda, who was the ex-CEO of Shell Oil in Canada, who family also has this, we belong to a firm out of the Netherlands called Facio, and it was like the only thing dealing with FSHD in the world, and we went through about 6 or 7 years of it and $30–40 million, and nothing really came out of it. I got to the point where my muscular dystrophy was telling me like, oh my God, like I can't pretend like it's not going to happen anymore. Like it's really starting to affect me. So I went, okay, I've got to put some action in place to make this happen. And I had been studying Peter Diamandis' model about how to set up a $100 million prize and then what that does. And what it does is it brings everybody out of the woodwork. One, you get a lot of publicity for it. There's funding there, and people go, you know, I have an idea that I think can be attributed and help FSHD or maybe even cure it. But there was a lot of steps that had to get there to do that. So hopefully that gave you the foundation of where it came from.
You were diagnosed when you were, I think, like 32.
Right.
Which before Lululemon. I'm wondering if maybe an idea that there was something wrong going on, if that subconsciously put a kind of internal pressure to sort of be great in the years ahead, and that even if you weren't thinking about it, somehow it pressured you to do something like kind of extraordinary.
I would never compare myself to Steve Jobs, but I often thought about Steve, like whether internally he knew something was going on and he had to make things happen. I don't think that was necessarily it for me. I think I got diagnosed with it. I think I'm a very lucky person in that I have a very slow-moving one. There's thousands of children in wheelchairs who have it. I mean, and then I go, well, why was I so lucky to have a slow-moving one? I was always an athlete. I mean, like 3 or 4 hours a day my whole life. And so I think I was lucky to have this part of it kind of repress I guess the inflammation that occurs in the expression of the epigenetics of the expression of the DNA. So I feel like I've been very lucky to have been born with the athletic love, but on the other hand, I have this problem, and
I know that you consider yourself lucky, and I know that you like to think about yourself as a player on the field, and that you were a triathlete and you swam and you worked out, I think, like 2 or 3 times a day.
Sure.
Sounds very stressful to me. But I'd like to try to channel, if it's true, the feelings that, I don't know, the feelings that I live with, you know, for no particular reason. Feelings of like self-pity and anger or regret. You know, the common sort of ugliness of life. Have you gotten in touch with some of those things over the last couple of years?
Oh yeah, I definitely lived that life a lot till I was 40. And I think that I did a couple of things. I mean, I went through that period of like self-reflection at the age of 40. Read 7 Habits of Highly Effective People, The Psychology of Achievement by Tracy. I took the Landmark Forum course, read the book Good to Great by Jim Collins, and these things kind of formed a new Chip Wilson, so to speak, and it reframed who I was and how I was going to move forward. So I was able to like very easily now flex this muscle called amnesia. And amnesia is something where it's like waking up in the morning and I have no past. And if you have no past, then interestingly enough, you have no future.
Sing a slightly different tune in the memoir. You are very clear that you're really future oriented, and you describe kind of beautifully like this way of like, you do kind of talk about like living in the future. And I associate, that's one reason why I think about you in Moonshots. I'm curious to ask about the way in which you can put yourself in the future and the way in which, you know, I guess your success has afforded you an ability to try to change your future. So I'm wondering if you still feel as future oriented as you used to.
Oh, I'm definitely there. I think the best way to affect life in the present is to determine what my future is going to be. So I set goals for 1, 5, 10 years out. I have a 30-year vision of what my life wants to, you know, I want it to look like. And I work back from that 30-year vision to set my 10, 5, and 1-year goals. And I put actions in place in order to get there, and I get the life that I want to live.
Do you feel that you've ever been disappointed that the present doesn't turn out to be what you thought the future would hold?
I don't mind failing 50% of the time at my goals. I think failing is a muscle that very few people are used to now. And people talk about stress and mental illness. No, it's just a failure, and it's a failure to be dealt with. And I think people that learn how to deal with failure learn how to reset goals, reset conditions of satisfaction, new dates, and get on with life.
What's the connection to stress and mental illness? Do you think that sometimes people misinterpret what's really same?
Well, I mean, we've all heard of this thing called helicopter parents that have taken care of kids and doing everything for them. never let them fail, never let them have any adversity. You know, I think that that's the worst thing parents can do, and I think we're going through an epidemic right now.
All right, but you know, that's ironic though, because it was your dad who told you, I think at a swimming pool, that instead of saving your energy in a race for like later on, the final laps, that you should go all out. Will you tell us more about the poolside theory that your dad gave you? And I'm pretty sure that it's important to your life.
Yeah. It's really critical. Everybody in that era, it seemed like in the 60s or 70s, it was kind of like, there was always this thing about looking good at the end of the race, like sprinting the last 100 meters in a running race, or in the swim race, going to the end and hitting the wall and going, but nobody really like went full out at the beginning. And of course, it's very common now in Olympics. You can see everybody doing it. But at the time, it was rare. And so to actually like decide to go full out and fully commit, you know, had me get a Canadian record. I think it was the #2 time in the world at the time. And I went, wow, you know, like what? So now I became actually fearful, which is kind of an interesting way of being, of going through life and doing things and not committing 100%. I never wanted to get to my deathbed and go, I only gave that idea 97%. If I would have done 3% more, would I have done it, and would life have shown up differently? I never want to be on my deathbed regretting a thing.
Chip, CEOs are not known for saying what they really think, and they're not known for being willing to be themselves. You printed your own manifesto of sayings on the actual Lululemon bag. Right. You know, it included one, I think, that people ended up getting upset about. It's about children of the orgasm of life, I think. Right. You wrote in your memoir that I think you said something along the lines of like, I'd rather see a child have a job than just waste away. Right. And then in an interview with a colleague here, you said, I think, some women's bodies just actually don't work for Lululemon pants. What is the point for you of talking like so brashly?
Well, I think it was the culture of Lululemon to be totally open and undefended, and to have every discussion was out on the table. I think especially when you are dressing people and you're looking at all the different types of bodies and the different personalities that want different colors, different shapes, different everything. I mean, there's 1 billion nuances that have to occur and things like that. But really, it's the psychology of like looking at people and determining who the muse is, who's actually going to buy your product, but almost as importantly, who do you not want to have buying your product? And can a brand be everything to everybody? Does that become the Gap? Well, I never wanted to become the Gap, and I certainly didn't want to become like most failed, quite frankly, American apparel companies. I wanted to be distinct. I wanted my market was a very healthy person that was interested in fun and longevity and community, and that's who my market was.
We do not need to relitigate the comment about pants, but I mean, I guess that I could sort of imagine that maybe you've learned that like it just like hurt people's feelings, that people felt left out, and they felt left out because of things they can't control. Maybe you wouldn't say the same thing nowadays.
No, I don't think so. I think, you know, like let's face it here. I probably had done hundreds and hundreds of interviews and said thousands and thousands of things. It's just the roll of the dice, the odds that I would say something that was very truthful that is going to affect how some people think. Now, let's put it in context. I mean, that type of thing was in 2013, just at the start of social media, and nobody really understood social media or the power of it. Now, this is a very interesting statistic, and that was the third most sold book in the world is The Sorcerer's Stone by J.K. Rowling's. Okay, there's
the Harry Potter.
There's the Bible, then Mao, and then the story. It's fascinating when you think about that. 14% of people gave it a 1 star and said it was the worst book they'd ever written. So if you kind of think about any subject or any line that anybody says about anything, you can assume at the very minimum you're going to get 14%. Now, that was a great book. So let's say the average is 22 to 23% of people are going to be vehemently opposed to anything that anybody says about anything.
Listen, I don't think, though, that we should, first of all, I don't want to harp on this too much, but saying something about yoga pants and writing Harry Potter are different. That if 14% of people who read Harry Potter don't like it, that may be the case. But I guess to make it a little bit bigger, I'm betting that you must have a sense that you're taking a risk. You're making a bet that by saying kind of what you want about bodies or the children line on the bag or child labor, a bet that you're just going to be yourself and you're going to say what you want and you don't really care what's going to happen. I'm sort of assuming that must be like a conscious gamble in your mind, or at least it was then, maybe.
I don't think so. I think it's, it was 2013 was the entering of the stage of the world where people couldn't have an opinion anymore. Or I could have an opinion, but it didn't mean that people couldn't vehemently oppose to it verbally on a platform that would go global. I mean, before that, people said ideas all the time. What it is to be an entrepreneur is to have ideas that nobody else has.
Is there anything, I know that you really orient yourself to the future. Is there anything about the past that you wish now that you could change? Something that you did or something that you didn't do, something that you said or something that you didn't say?
No, I'd say my only regret was I had total control of Lululemon 100%. It was a cash cow making a lot of money. I had 3 kids under the age of 2, and I wanted to be a family man. So I sold to private equity and didn't really realize after selling to private equity that, that people would, I was a very trusting type of person. And, it'll take us 5 years to go public. Well, we went public in a year. Everything that, they had promised me kind of flew out the window. And what really happened is I lost control of the board. And I didn't have A and B class shares, which I could have, easily asked for, and didn't know I didn't have the right advice, which is my fault. And so by not controlling the board, I lost the culture of Lululemon and the growth of where I think it should be.
So your big professional regret is selling to private equity guys and losing control of your board of directors.
No, my regret would more be like I didn't spend time developing relationships with advisors or calling people that had gone through the process before and really understanding, what it is I needed to do. I think I also had surrounded myself with advisors that were also very nice, trusting Canadians, and I think, it's just that private equity isn't set up to, to tell you the whole truth about what's going to happen 3 or 4 years down the road.
You felt you were naive.
Oh, very naive.
What do you want to say to people who are working retail jobs, maybe a job as a barista, a job with a boss, and they really crave doing their own thing, but feel like they don't have the resources or the capacity to actually try? What do you want to tell them?
Well, I think it comes back to what we've been talking about already. Like, do you want to be on your deathbed and go, I wonder if I would have done that or not? What's the point of living a life like that? I'm going to have 2 kids. I'm going to live in suburbia. At 60, I'm going to retire, become a road cyclist, and then I'm going to die. It was great because then I'd lived an entire life. If I would have lived the life I'd already envisioned and then I died, that would be boring.
Wait, Chip, where does this idea of the horror of a kind of basic life come from? I mean, you asked what's the point of that? I mean, I can think of some reasons to do it. Just decency, comfort, family, spending time with people you love and enjoy, I guess that's a low stakes life, but I don't think it sounds as bad to me. It sounds like it kind of horrifies you.
Well, it is interesting that I think everybody makes the life basically in reaction to something that happened when they were in their childhood.
Yeah.
And what you're talking about is a type of person who maybe had a very rough childhood and very chaotic childhood. And in reaction to that, they want a very normal, safe, predictable life. Now, you could say I had a very chaotic childhood and everything, but I think my parents loved me, and I think that I was a firstborn child, and I was kind of, whatever my genetic makeup is or anything, I wasn't ever going to be happy with a normal life.
There are those of us who have a boss and a boss's boss, and sometimes a boss for that boss as well. But we appreciate our paychecks, and we like the stability of it, a sense of certainty that it offers. Can you sell us on the idea of living life your way?
Well, a leader is someone who creates a future that would otherwise not have happened. And a leader can be anybody. It can be the person, the maintenance person sweeping the floors, and it can be the CEO and everybody in between. I think you can have that life that you want to live, but it's important to be a leader to yourself. And so what does that leader do? He inspires and loves other people and makes everyone around them attain their very, very best.
Is it possible to have that life, a life of generosity and love, but without being a successful entrepreneur, just having a kind of stable job, maybe even in some ways what might look to the outside world like a mediocre job? Could it be possible to sort of be successful in your book like that?
A truly happy person is living in choice. So choice means not deciding. So deciding to do something is kind of like suicide. You're cutting off choices, where choice is really about coming up with 4 or 5 different possibilities for how life is lived, or almost how every moment is lived. And that's really only possible by, again, having that amnesia and letting the past go and creating the present from an unknown future. So I think as long as somebody is choosing the life that they're living and not doing it in reaction to their past, then they're living a fulfilled life.
We're going to leave it there. Chip Wilson, really enjoyed having you here.
My pleasure. Thanks, Max. Okay, very good.
You just watched an interview with a billionaire who goes from one very far out challenge to the next, kind of reshaping his present by reconceptualizing his future. But it turns out he has mixed feelings about the word moonshot. If you're the kind of person who aims extremely high professionally, maybe you do too. Maybe you just do what you do. However, no matter how you feel about the word, when you take a moonshot, things do not go as planned. In fact, as you are about to see in the closing moments of our interview, things go to places that no one could have predicted. Take a look. We'll see you soon.
Yes, I can remember the last time I was dishonest, and it actually makes me quite sick. I was being interviewed by the SEC, and I think I had to say what wasn't true in order to how can I say this? If I would have said what was true, then I would have spent 3 or 4 years in court, flying back and forth from Vancouver to who knows where in the United States. And I probably will have lost $1 billion in stock value. But more so, I just had 3 kids at a very young age, and I wasn't willing to be away from them. And that took more precedence over telling the truth.
Will you just give viewers context of, like, you know, I was here at the time and they were asking about X. The viewers are going to be like, holy what is he talking about? Will you just add in full sentences, like, just help orient viewers so they're not completely flummoxed by that?
No, I won't.
You're just going to leave it mysterious?
Yeah.
All right, well, I honestly want to know more.
Yeah, I bet you do.
Ambition and success are similar, but they are not the same. You can be ambitious and a total failure. You can be a success with no ambition at all. If you call someone ambitious, you might not even mean it as a compliment. You might be trying to say they're more of a schemer than a dreamer. The truth is, ambition can be a little embarrassing. The coolest kind of success doesn't seem effortful. It's less manifested than destined. Total ambition about everything, like no ambition about anything, isn't always so ideal. I read this thing in Bloomberg Businessweek about the Google billionaire Sergey Brin, who has spent years backing a secret mission to build giant airships. The rumor is he spent more than like $250 million. Now, people don't really know what he's up to, and that can be kind of intriguing, but also kind of scary. And yet, he presses on. So how much ambition is the right amount? And who is to say? Let's be ambitious. We're gonna try to figure it out together tonight.
It's the Business Week Show.
Welcome to the Business Week Show. Tonight, ambition. The guest who's sitting at this table with me right now has been called the most exciting Black American scholar
ever. And that's because the ambitious work that Dr. Cornel West does as an activist, as a philosopher, as an intellectual, as a teacher who quit Harvard not once, but twice, combines the Baptist Church with Chekhov, with Marx, with John Coltrane, with Toni Morrison, and he makes a criticism of American power and money that is bold and italicized. And now he's doing something more ambitious than ever. He is trying to put himself in the most important position in this world, and he aims for nothing less than disrupting and interrupting the landscape of power as we know it. Dr. Cornel West, thank you for being here.
It's a blessing to sit here with you, man.
It's so good to have you here.
Definitely.
Ambition is a complicated subject, but it's a deep one. When is ambition something to be ashamed of, and when is it something to revel in and celebrate?
As long as ambition has a spiritual and moral dimension to it, it's a beautiful thing. Tolstoy was ambitious, Toni Morrison was ambitious, John Coltrane was ambitious, Stephen Sondheim was ambitious. All of these folk who were ambitious really were people who had a profound vocation. See, a vocation is not the same as profession. If you're in a profession and you don't have a vocation, you're gonna get caught up in the dominant forces. And what are the dominant forces of our day? Markets, buying, selling, spectacle, image, celebrity.
Let's go back.
Too much narcissism and hedonism and not enough caring and nurturing of others as well as self. But it's always been that way. See, I'm not an alarmist about that.
No? Doesn't alarm me?
Oh, no, every moment of human history. It's been a history that's pretty ugly, man. You know, the challenge has always been the self-destructive tendencies of the species.
I want to mention something about Donald Trump, which is that a year before the 2016 election, I sat with him, I reported on his corporate bankruptcies. There were many things that surprised me about being in his presence and talking to him. But one of them back then was he had never had any kind of representative role before in his life. He went from not representing anyone politically to being president. I think it's essentially fair to say the same thing about you. Tell us about why you're qualified in a way that he wasn't in this life you've had where you've done many things, but being a political leader in the regular sense is not one of them.
Yeah, I mean, one is that anytime you engage in high quality service to others, no matter what the context, you have to come with a spirit of humility. You learn and listen. So I'd have to have some high quality folk around me who have spent time in the machinations of the system. But you're right, never holding office. So I'd have to come in with a spirit of humility. But most importantly, you see, we're at the edge of a cliff when it comes to the United States. It's a very, very sad moment because the worst of any country, just like the worst of any human being, is allowed that hatred and greed, especially when it's organized, institutionalized, and routinized. It's just almost subversive to try to have integrity, honesty, and decency in a lot of our context. So for me, my role is to reintroduce America to the best of itself. Because we've had some great figures and traditions in the United States. We really have.
have a financial question. You mentioned the word accountability. You know, there are reports that you have owed hundreds of thousands of dollars in federal taxes, and then a smaller amount, I think tens of thousands of dollars in child support.
Yeah, that was the one that was a lie. I've never actually had any child back payment in that sense, though.
Let's talk about
taxes. Very much. Oh, yes.
It's fair to hold candidates to really high standards.
I agree.
What happened so that you didn't pay, whatever was owed?
Well, one, I've always been broke as the Ten Commandments financially. I've had heavy debts and obligations, both with family as well as getting behind. You see, I had student loans when I first came out, and I got behind way back in the 80s. And there was a time when I had multiple audits. I had knocks on the door to get a subpoena Christmas Eve. And I said, dang, could you all wait for another day? I know I'm behind. But the good news has always been that I set up installment plans. And I've always done that because it's true, and I think that people are right to raise these questions, that money's never really meant that much to me. It really, as long as I can keep my money flow, I live from paycheck to paycheck. And that's true for 63% of my fellow citizens in the country. The richest nation in the history of the world. You got CEOs running around here multi-million dollars every year. And these precious citizens barely making it. I do, in fact, recognize my checks are bigger, but my debts are bigger. And I've always been chasing that next check in order to make it, but I've always been open about that.
Is it something that you're going to work on, I guess, now and before the election to try
Well, it's
to
the
clear
same
away?
because I've always had the installment plans in place. But you see, the important thing is, the great Melville, our greatest novelist, he used to say that truth is a ragged edge. He said, if you're really committed to truth, it means you're not just speaking truth to powerless, you're also speaking truth to yourself. See, and that's Socratic, isn't it?
It's not easy.
Self-examination, that's self-scrutiny. And it takes a certain kind of courage to do that. Not just in private, but in public.
Are there things that you've found when you look inside that you don't like?
For myself? Oh, absolutely. I'm a human being. I'm a cracked vessel, my brother. I got revolutionary potential. I got thuggish proclivities. And I'm wrestling with this every day. Kendrick Lamar has the same wrestling. I like that. Any decent human being does. Michael Hurley does.
Michael Hurley.
Oh, yes, those valley of tears that he finds himself in, stealing the right to live. Tell the truth, Brother Michael, about yourself. But he bounced back. Tupac bounces back. I attempt to bounce back, but it's human, all the way down, Brother Max.
Let's talk about capitalism. Do you feel optimistic, something akin to optimistic about American capitalism? Can you imagine a world where capitalism somehow allows us to fix climate change, to somehow heal inequality? Can you envision a world where that happens?
Well, one is that you can never downplay the creativity of human beings. There's no doubt that the virtues of markets have to do with scientific breakthroughs and technological innovations. It's a beautiful thing. What you have to do is to make sure the markets are subordinate to public welfare. But unfortunately, especially in the United States, it's very difficult to be optimistic about American capitalism. It's had a long time to generate these results that, in my campaign, I'm calling for an abolition of poverty, abolition of homelessness, strong defense of workers, strong defense of women, control over bodies and so forth, and a real accountability of the organized greed at the top. You see, so in that sense, I wouldn't say optimistic, but I'm not optimistic about anything.
You're not?
Very important. Oh, no.
You seem like an optimist to me.
Oh, no, I'm a blues man. There's no optimism in the blues.
I want to ask you not about what other people think, but about what you would think and how you would self-examine if the day came when, as Republicans, I think, ambitiously hope in their own way, you peel off votes from Biden, Trump wins. How will it square with your values and your internal voice? What would happen on that day if that day came?
I think we have to be, even in the political context, even though we're aware of strategic and tactical considerations, you do have to be honest about what's inside of you. And let me give you an example of this. 40% of U.S. citizens don't vote at all, and that's what I'm targeting. And 62% of those who vote third party, either Libertarian or Green, say they would never, ever, ever vote for Democrats or Republicans. So we're only talking about a small slice. But I can tell you this, the flip side is, if I remain silent, or if I begin talking about how wonderful Biden is when I don't believe it, that's a violation of my integrity. So that I do understand, you know, that kind of finger pointing, you are the cause of fascism in America because you got 4% and so and so and so. Yes, that's something that I wrestle with. That's part of that Civil War, the battlefield of my soul too.
What I'm learning is that your real ambition is to be a kind of transcendent existential pressure inside the country to provide something that you think is not there.
Well, it's a beautiful way of putting it, but I wouldn't use the word transcendent. See, I'm a funk master. It's not transcendent. It's immanent. It's grounded in the culture and lived experiences of ordinary people, or those Sly Stone call everyday people. And that's true for all of the social movements. They have transcendent visions because it embraces everybody, no matter what color and gender and so forth. But it is in the funk. And the problem of America is it tends to deodorize its funk. When you playing your guitar, you know where the funky notes are, you see.
The only wrong thing you said is that I don't think I'm a very funky guitar player.
Well, you sound good to me.
Okay,
I'm telling you that.
I'll take it. Dr. Cornel West, thank you so much.
Thank you.
Really, really enjoyed it.
This was wonderful though, brother.
It was wonderful for me. Coming up next, a director, a model, an activist, but is she ambitious? Stay tuned. What do you call it when high-end American fashion all but leaves out the faces of black women? You call it high-end American fashion. The guest who's sitting with me at this table didn't just reshape what beauty looks like on TV, in magazines, and on runways. She helped debunk the myth that the imagery of black beauty does not sell. Beth Ann Hardison's ambition as a model agency owner, and as an advocate wasn't just to thrive, which she did, it was to blaze paths for other people to follow. And now, at 81, she is the co-director and the subject of an ambitious new film called Invisible Beauty. Beth Ann Hardison, so glad you're here.
Thank you.
Can we talk about just like the very specific word ambition? There's something I think maybe sometimes it's like has a little glow of nastiness maybe. You know, like ambition sounds a little bit meaner than like drive or determination. To me, you're such an interesting and ambitious person. What does how do you even feel about the word?
It's not like I don't like the word. I just don't think that I really am the one who really demonstrates it in the way that I think it's meant. Ambition to me is someone who actually plans to actually do something and do it in such a way that they work towards it, like becoming a doctor, a singer, a musician. The ambition has to be there. The passion has to be there. I come along like a troubleshooter, but it's not a plan before that until I see the problem. To me, that's just like someone who's a house cleaner. You know, they're domestic. They just go, oh, there's dust on the thing. Oh, let me just wipe that off.
And that's you.
That's me to me.
I want to ask you about your son, though, because when you modeled, you always kept a second job. And one reason why is that you were raising, sort of semi-secretly from the industry, a kid. You had a child.
Yeah.
You've said, my son and I needed to cross the line, the winning line. He became an actor. He played Dwayne Wayne on A Different World. How did you encourage a sense of ambition in him? And tell us about the toll that it took on your relationship.
I think what it really was is that, you know, I got pregnant when I was a young girl, and I think it was a fear of just failing. I got lucky that it worked out another way, and I wind up being successful in my own way, you know. But I think the reason why I was had to give Kadeem something to do is because he never knew what he wanted to be.
I love the story that you gave him a scene to be a boy with a missing dog. You know, you turned him on to acting. You encouraged it. But look, I mean, it was your idea, not his. Do you have you thought yourself, or have you talked to him about the way that instilling ambition in other people can sometimes be a little dangerous?
I don't think it's, and I love that you're stuck on this word ambition. because you and I should go out on a date. We can argue this point.
Oh, thank you so much. It's the first time I've been asked out on this television show. Thank you, Beth.
Because I tell you, I didn't think I was trying to impose ambition. That's for you to do on your own. I think what I was doing is really basically giving him an opportunity to grasp something. Ambition, I don't think you can really teach people ambition.
Let's talk about you and your drive and your career. So in 1980, you became an agent at Click Models. I think you represented a very young Whitney Houston.
Yeah.
Then you start your own agency.
Yeah.
It's Beth Ann Management.
Yeah.
And you discover Veronica Webb.
Yeah.
Then you discover Tyson Beckford,
Yeah.
whose contract with Ralph Lauren was, I think, also
Yeah, that was major.
What did it feel like to channel your drive, your ambition, if you want, through other people to help them succeed? It was no longer about you as a model. You were channeling other people. How did that feel?
I didn't want to have a model agency. The last thing I wanted was a model agency, but they made me do it. Most things that I'm doing, someone made me do it. It's never my ambition to say, oh, I'm going to do this.
Will you let me try to be ambitious myself and push back on something?
Go ahead.
Okay. We talk about your extremely ambitious career, and you're like, no, I wasn't really that ambitious. We talk about your son, who you push into acting, and you were like, well, no, I wasn't really doing that. Then we talk about you starting a modeling agency, and you say, oh, I didn't want to start a modeling agency.
It's true.
But Beth Ann, is it possible that that there's something about you and the way that you look at your career where you undersell the challenges that you faced instead of doing what most people do, which is oversell them?
Yeah, I'll even get better. I didn't have a career. What I have is many different things I do. You know, I used to have people who stand behind me, and I used to say, this is my backup band. They can explain me better than I can. And people would step in front of me when I would be introduced to someone. They say, oh, please, she's so modest. Let me tell you what she's done. I don't take it on so well. I see that.
Why do you think that is?
I think because I don't think that much of it in the act of doing it. I think that it's something that just had to be done. Someone had to do it.
Be a little less rosy now.
Okay.
So in '96, you closed your agency.
Yeah.
You moved to Mexico. You said, I had no idea what I'd do next because I had no ambition. I had no ambition. If you have no ambition, you don't know what you're going to do. You just make sure you don't sink. Well said. I mean,
I
you
got
said
some
it.
good quotes.
You said it.
Like those things. Oh my gosh.
How did that feel? Take me back to Mexico when it was like you had nothing doing after this decades of action.
I basically knew that I was having a nice downtime. It was good. And I didn't have to worry about doing too much. I still had to work a little bit because I still had Tyson. And And then I started getting those calls. I think when I left the industry, New York Times had written an article on me saying who was going to do the work that I had been doing and how important it was. And I was like, oh, please, I'm out of here. Don't put that on me. Someone else can pick it up. And then when I started getting those calls about the models had disappeared and all, and I was getting those calls from Naomi, and you got to come back, you got to come back. And I wasn't gone that long. It was like 3-4 months or something.
Just to expand on what you're saying that Naomi Campbell was calling you to say the black models are disappearing.
Yes, yeah.
And I want to give a little bit more context. You had started an advocacy group called Black Girls Coalition.
Yes.
And that was an advocacy group for models with Aman, with Naomi Campbell.
Yeah, but it was when it first started, just to be clear, when it first started, it was just to celebrate the girls, to introduce them to each other, because so many of them were working, doing editorial, which had never happened before, but they don't know that. They're the first ones on the scene. I've been around. I've known this is the first time. Then eventually, in about 3 or 4 years later, I decided to go up against the advertising industry.
Right.
Because they were not reflecting their consumer.
And you tell me you're not ambitious.
No, that's not hey, can I get a...
because this is serious stuff. I mean, look, the reality is you played a really important role in getting black faces onto runways and into magazines. But then lo and behold, what happens? The faces start disappearing. Things, the diversity, as it so often does in corporate America, especially,
swings.
It makes progress and then it comes back.
Yeah.
What was it like to see failure following progress, and what did you do about it?
Well, that's the thing. You always say, you go 3 steps forward and you fall 4 steps back or something like that. And it took me 4 years before I can really get back on that horse. I'm coming back and okay. That wasn't so much like ambition to me. That's more like, once again, like revolutionary. That I live with very well. I believe I am. I know I am.
I want to bring up something else you said, and it's about change. You said, I always know, because I've lived life long enough, you can change things. You might need to be foot against your pedal, but you can change things.
Yeah.
There are so many forms of being driven, but I feel like it's so rare for people to aim to make things better for other people instead of themselves.
I think when I leave here, I'm going to feel different. I think you're really convincing me. I'm going to go out of here with my head held high, and a big head too. I'm going to swell this head up, and I'm going to try and get through that door.
Well, then I'll walk out with a swollen head too, if that's what you're saying. I think I want to end, if you don't mind, Beth Ann. At the end of your film, you talk about dying, going home.
Yeah.
A good end to a good life? I mean, that seems like the most beautiful ambition that I could think of, I think. If you don't mind talking about it, what would you like it to feel like?
When I leave this earth? Not so painful. I want people to celebrate, have a good time. I know I'm going to be buried upstate New York in a wonderful cemetery. And I just hope that I just cruise right along and that something is left behind that remembers. One thing I would like to do, and this is requiring ambition.
Okay.
I want to do a one-woman show.
Are you going to do it? What's stopping you?
Yeah, I got to finish this film. The film keeps going on. And also, I just need to finish this book. And, fear stops me, because that's scary. The one-woman show is not like a stand-up comedian. I'm going to do it interactively with the audience. I'm just going to tell stories. But I always wanted to do that.
Will it be okay if I or if the world remembers you as an ambitious woman?
Yeah, you can do anything you want once I'm gone.
It's a deal. Beth Ann Hardison, thank you so much for being here.
I'm happy I came. I learned a lot about me this time.
So did I.
Thank you so much.
Thanks. It was extremely ambitious to think that we could learn about ambition, how much of it is enough, how much of it is too much, by just asking ambitious people to tell us. As it turns out, sometimes we can easily recognize the ambition inside of us, and then sometimes we totally rebel against the very concept. Maybe the lesson is that ambition is something to recognize inside of ourselves and something to be proud of, as long as it's wielded wisely. Maybe the most ambitious form of ambition is the kind that's generous and humble. Thank you so much for watching. We hope you'll join us next time.
That little inch makes a difference. how do I waste time when I'm, like now, I'm wasting time right now.
I don't think I'm proud of any virtue, but I'm blessed to be able to cultivate the highest virtue, which is that of love.
The most valuable virtue to me with anyone that I'm close to is compassion. I think compassion is the most important thing.
I have not rid myself of any of the vices. In the language of my Jewish brother Paul, who wrote the Christian New Testament, I try to die daily.
The most challenging thing for me to have a model agency was having the other bookers around the table. That was the most challenging, never the models. That's interesting.
It is very easy to get a bad reputation. It's very difficult to win a good reputation, and it's hard, but not impossible, to turn a bad reputation into a good one. But if reputation is what other people think about you, then what does it even matter? More importantly, when do you ever have control over other people's thoughts and feelings? I read in Business Week about crypto, which has had a terrible reputation for scams. The journalist Zeke Fox, who has a reputation for very funny writing, also very serious reporting, looked into the coin Tether. And what he found was a crypto-powered human trafficking ring in Cambodia. Sometimes reality turns out to be much worse than reputation, and sometimes reputation turns out to be a lot worse than reality. How are you supposed to sort out which is which? We're gonna try to do it together tonight.
It's the Business Week Show.
Welcome to the Business Week Show. Tonight, reputation. In the NBA, everybody has a reputation. The stars, the rookies, the fans, the coaches, the refs, even the lowly reporters. But few figures have a more complicated reputation than sports agents. And few sports agents have a more interesting reputation than the man who is at the table with me right now. You may know that Rich Paul is one of the most influential figures in the business. You may know he works with his friend LeBron James. You might even know his partner is Adele, but you do not know his full story. In a gripping new memoir called Lucky Me,
He talks about growing up with a loving mom who was addicted to drugs. He writes about selling them, and he writes about getting on the road to becoming someone else. We're really glad he's here. Mr. Paul, welcome.
Thank you. Thank you.
The part of your reputation that I'm personally and professionally most drawn to has to do with your role in the NBA movement that's called player empowerment. So I think broadly speaking, it's a shift in influence away from owners, who are mostly white, I think by far, to players, stars, who are mostly black. At this moment, what don't fans understand about who wields the power in the business of basketball?
When you talk about player empowerment, I like to use a different E word, because sometimes when you say empower, it gives off this perception that the players can do whatever they want. And that's not true. It's still a business. And I like to talk about the education of it, because I think players being educated allows them to understand that they have options. What those options are, well, that's to be negotiated, but also it's to be understood. And a lot of guys don't really have a perspective of the business. It's been something they've been doing all their life. And you can be taken advantage of just playing the game.
I want to ask you about LeBron, because he's performed at such a legendary level for so long, under such close examination.
He's a GOAT.
What have you learned from him about how to be?
As he became more and more successful, the person in him became better. But also, just like everything I've done has been earned. Nobody gave me anything per se. I sacrificed to put myself in a better position because I didn't want to be dependent of LeBron. And so when I see people say, oh, yeah, lucky you, you met somebody in the airport and happened to be LeBron, and if it wasn't for LeBron, you wouldn't do this or that. I would have been successful at anything.
What would you want to be?
The commissioner of the NBA.
I believe it.
I'm gonna manifest that. Yeah.
You could be.
Yeah.
Your ecosystem, it's much bigger than LeBron. I mean, you have had these really, really important clients, but it's hard not to think about him just because he's starting. I think it's his 21st season.
Yes.
And I think he's like the 6th person to do that.
Yes.
It's very, very unusual. So I'm wondering what you want your life in the NBA and also outside the NBA to look like in a post LeBron world one day when he's ready.
It's gonna look the same. That's why I built it. You know, today in meetings, you know it's there, but we don't go in pitching LeBron. We go in pitching clutch. You know, and here's the thing: people say, "Oh, well, LeBron gave you an opportunity. Lucky you did this," but you don't talk about. I think Donald Trump's dad gave him a loan, right? James Dolan's dad gave him a business. Somebody gave Mark Zuckerberg a loan. What's the difference?
Yep.
Because it wasn't my dad, and you get what I'm saying?
Yeah.
Everybody has to have an opportunity from somewhere, especially me coming from a place where if you had any entrepreneurial aspirations, who's gonna look at your business? Who's gonna help you do a business plan?
Right. Here's an equity investment.
Right. And then who has the experience and the know-how and the resources and the relationships to help you even navigate to a place to where you're doing it properly.
My favorite character in this book is your father. He lived with another family, but he helped raise you.
And my brother and sister, yeah.
You mentioned his business, R&J Confectionery.
Yeah.
You write, Dad was the type of guy that everybody wanted to know, 5'7" tall with a 6'5" reputation.
Yes.
He got to work every day, I think 6 a.m.
6 a.m., yeah.
What did he teach you about how the business world works?
Oh man, I mean, he just taught me the importance of consistency, you know, getting up every day, rain, sleet, hail, snow. There was no holidays. I watched how he treated people. I watched how he went about his day. I watched the things, the detail of it. And he can see things in people that they probably couldn't see in themselves, and he took the time out to have a conversation with you. I watched how he treated other business owners around him. So I'm learning this business every day. And so it got to the point to where my dad could just sit in the chair and me, my brother, or my sisters could actually run the store.
Your dad is my favorite character in the book, but I would like to talk for a second about your mom because, you know, your depiction of your mom in the book is like it's not cliche though. It's not corny. You describe your mom as like not a bad person, just a person who was addicted to drugs for a long time.
Yeah.
But then your dad dies.
Yeah.
And after watching the impact of addiction on your mom, you make a decision whose context is like, you know, people should read the book to understand what's happening in your life at the time.
Yeah.
But you make a decision to sell. You don't do it for that long. It's like a part of the it's a part of the
my
book.
toe in the water, yeah.
Will you talk about like I was impressed that you spoke about watching addiction and making a choice to deal drugs. Like I found it like among other things just like very honest. Were you worried that it would somehow like impact your reputation or?
No, I mean, how many people in high positions actually are users today, still right now? You know, and that's not a decision out of survival. That's something that they choose to do every day because they enjoy it. So you can't judge, right? I was a kid trying to survive. And so, yeah, my mom was great though. My mom, she had an issue, no different than the issues right now with fentanyl in our communities. But I can honestly say, going through those things, watching my mom, watching other people's moms, watching other people's dad, I was lucky enough to have my dad. And I was also lucky enough for my dad to explain to us at a very young age what was actually happening. And so I never lost the respect for my mom. And my mom had so much respect for us that today I understand why she was absent, because she never wanted us to have a visual of that. And so the book, it was important for it to be real. Like I don't fake anything. There's no gray, there's black and there's white. And again, I'm blessed to be in the position I am today, but I'm also thankful for what I went through as a kid, because it's really, it was my assembly line. It really was, and it molded me.
It makes me think before we end that reputation, like if it lives long enough,
changes.
It turns into something else, yes, and then it becomes like your legacy.
Becomes legacy. Reputation becomes legacy.
What do you want yours to be?
You know, I think my reputation is pretty solid across America. You know, when I walk around in any neighborhood, people know, you know, that guy is a stand-up guy. My dad wouldn't want it no other way. But the difference is today, you know, I just want to be a great example. I want to continue being a great example, and not just making it about me, not just look what I did type of thing, but I want to build things, continue to be a builder. Today when I go to work, I have 80 employees, 75 employees, right? And they're young, between the ages of 21 and 55 probably. But continue that, you know, that opening different verticals of the ecosystem of sport and building things to where I can provide opportunity, if that makes sense.
You know what comes into my head as my final question when you talk about that? Building something, ownership.
Yeah.
May I ask?
I have no interest in owning the team. I don't. I know, you know, my competitors are trying to push that narrative out there.
Oh, is that
because-
right?
Yeah.
That they're trying to
they
say
tell
that you-
families that all the time. Oh, don't go with him. When LeBron retires, he's gonna go and own a team.
Mhm.
Like, but first, I don't have enough money to own a team. First of all, so let's just get that out the way. And then secondly, I think owning a team would hinder me. I'm a creative at heart, so I have to have a lot of different irons in the fire. Because one thing people don't realize, those owners, they built something. So they don't own a team all day, every day. They go to work. They run Aries, they run, Blackstone, they run, so many different businesses that they have. Carnival Cruise, all these different things that the owners have. They don't just own a team all day. So you think I'm gonna go sit on my couch and own a team? No, I don't wanna do that.
I could definitely imagine you like starting you mentioned Aries, like a private equity fund. Would that appeal to you?
Yeah, it would, yeah. And I just might.
What would you call it?
I got the name, but I can't give it to you.
All right, we better end there.
I'll give it to you off the air.
I'll hold you to it.
I got it.
What a pleasure. What a pleasure to have you. Thank you. Thank you so much for
Great,
joining me.
man. Thank you.
I enjoyed it very
Appreciate
much.
you.
All
Yep.
right, you take care. Coming up next, more reputation. This guest has a reputation for being able to do a lot of things better than many people, me included. She is a visionary about collective activism. She is funny. She speaks truth to power. She gets results. She is clear about the ways that she is limitless, and she is clear about the ways that she is limited. For example, she needs some help doing things that sometimes many people take for granted, like breathing or walking or talking. And Alice Wong, the author of Year of the Tiger, is also one of the most influential disability advocates in this country. It is a joy, as in like an actual joy, for me to have her here. Alice, welcome.
Hi, Max. Thanks so much for having me. It's a delight to be here talking with you.
I honestly, it's a delight for me to have you here. Let's get into the questions. So much of the reputation that disabled people have is built by non-disabled people, and it's built around ideas of misfortune, sadness, embarrassment, burden. What have you learned about the ways that reputations, even ones that are old and stale, what have you learned about the ways that like reputations can actually sometimes begin to change?
On reputation and reputation building specifically, so much of it is dependent on culture. Part of why I am a writer and activist is to help push the culture forward, but ableism is such an ingrained part of our society that change happens at a glacial pace, and it takes a collective effort, not just me or a handful of disabled people. Until non-disabled people reflect and confront their implicit bias about disability and do the work on unlearning their ableism, will disabled people be able to truly play a larger role in constructing their reputation? There will always be people in power who want to maintain the status quo and the ability to distort and erase disabled people's sense of self and their reputations because it serves them. I myself try not to care too much about what people think of me and continue to do work that gives me joy. And if that helps others see that there's more to life than a good reputation, that can be a positive step in the right direction.
Speaking of the work that you do that brings you joy, your work, your body of work, Alice, is so wide and it's so deep. You're the founder of the Disability Visibility Project. You're a co-partner on the political group that's called Crypt the Vote. You served on the National Council of Disability. You've edited anthologies of work by disabled writers, and you've done much more. What's the reputation, though, that Alice, that you want to have?
If I wrote my own reputation, it would be that I am someone who shows up, is thoughtful, accountable, and collaborative. That I am someone who welcomes critique and change, and that I want to learn and grow from my mistakes and do cool things with cool people. That's a mouthful, but that's how I would like people to perceive me, whether they are acquainted with me or not.
Alice, a lot of companies in this country and around the world, but not all of them, have a reputation for paying lip service to inclusion and diversity. I'm thinking about workers who are disabled, but also Black or queer or trans or Asian or indigenous, beyond. But the reputation is that they don't actually then do the real work of reshaping their own cultures after talking about it. What are a few examples, if you can name some, of companies and their leaders who really are, in your mind, really actually doing it right?
I think most companies say they want to do the right thing and fail from the top all the way down. It's not enough to have a disability-specific employee resource group, a day committee, an annual speaker or a consultant or certain metrics. There has to be a long-term commitment that is strategic, systemic, and sustainable.
I have felt so incredibly tempted to tell you about my brother, Tommy, who has, just real magic and humor and love as a person. It's really shaped who I am as a person. I'm sure it's shaped me as a journalist and shaped my sister Anna and our parents as well. But I'm going to resist because I feel like so much of the conversation around disabled people is often very personal and fuzzy and kind of sweet and very, very rarely about political things or very rarely systemic. Why? Why is that, Alice?
People are still averse to complex conversations about ableism because it makes them uncomfortable. We all have internalized or implicit ableism, and it is up to all of us to actually name it and unlearn things that have been designed to marginalize and dehumanize disabled people. For example, people may see me as a somewhat successful published author and editor, but if they took a closer look at my activism and writing, they will see that I openly talk about how because of Medicaid income and asset limits, I am unable to have more than $2,000 in my personal bank account. This has been the case since I turned 18, and I bet most of your audience cannot fathom what it's like to subsist on that amount. Later on, I do want to hear about your brother Tommy, because I am sure you have some hilarious stories. I am fortunate to have a tight-knit family, and much of the reason it is so tight-knit is because they have all supported me throughout my life, and what we experience as a family in the face of such an absurd, inaccessible, and discriminatory society is something that we just have to laugh if not cry about.
I want to share with our audience that I accommodated your needs by sharing questions for this interview with you a few days ago. and that's so that you could use your text-to-voice technology to answer them. And it reminds me that your muscles have weakened with time. You haven't always used this technology. And people, I mean, by the way, including me, I'm about to turn 40, people have very, very strange and complicated feelings about change and about their bodies changing and weakening. What have you learned about how you want to face those changes in ways that feel right to you?
Congratulations on hitting 40 soon. Can you believe this, but I'm turning 50 next year? Change is freaky and scary, but it's unstoppable and out of our control no matter how hard we try. Doctors told my parents that I wouldn't live to adulthood, so I grew up without an image of myself in the future. I couldn't see it, and while I have progressively become weaker and faced changes in my body and life circumstances, it is a freaking privilege and achievement to be this age, and not just surviving but thriving. A few months ago I moved into my own place for the first time. I finally have a home office rather than working from a small desk in my bedroom for decades. I adopted 2 cats named Bert and Ernie, who are my chosen family. I know people pity me and cannot imagine living like me, but what I have achieved and lost made me who I am, and I don't take anything for granted. Every moment with friends and family is a treasure, and I find joy amidst all the struggles and pain.
Alice, in the grand scheme of things, I really don't think it makes much sense to ask disabled people to help non-disabled people to just like be better. And yet I'm also wondering, like, if you were just completely like the queen of the world, what you would demand, what you would demand from your subjects.
Talking specifically about disabled people, in the United States, there is still a bias in Medicaid funding for institutional settings, where community-based services are optional for states while institutional settings are not. Many people think skilled nursing facilities, assisted living facilities, and nursing homes are safer because a person can get 24-hour care, but no one should be separated from society and hidden from the public. And by the way, institutions are not necessarily safe. In fact, they're rife with abuse and neglect, especially ones that are for profit owned by private equity companies. I would like to see a world where no one goes hungry and has housing, education, and healthcare, a world where bodily autonomy is respected, a world where communities and neighborhoods take care of one another, a world where disabled people aren't siloed by diagnosis, a world where we can rest, dream, and create. Those are a few things I hope to see in the future.
I want you to know, Alice, how grateful I am that you've joined us here. I'm hoping our paths will cross again one day. I'm grateful for your time, grateful for your energy, I'm grateful for you. Thank you so much for being on the show.
Thanks a bunch for this opportunity, Max.
The pleasure is mine. Almost everyone has a reputation, almost everyone has an inner life, and very few people see themselves the way their bosses or the market see them. When you sit down and talk to other people, as I did tonight, about who they are and what they've been through and how they see the world, the chances are good you're going to hear something new and interesting. And that's a good thing because it's nice to actually be surprised. When you want to figure out which reputations are better or worse than reality, it helps to start by asking questions. Our guests tonight were honest about themselves and their reputations, and maybe that will encourage you to ask other people about theirs. Or you can start by telling other people about you. Thank you so much for watching. We will see you next time.
I think the most important lesson you've learned in business is it's never personal. It's always business.
My current vice is watching a ton of TV. When I was able to eat, I loved eating salty and fattening food. Things like French fries, tempura, donuts, and pastries.
what's the most expensive thing I've wasted the most money on? I would probably say a car because it's a depreciating asset.
What kind of car was it?
All of them.
If you get to work and you find it's really hard to do your job with imagination, do not worry. Imagination is still really new. Dreaming is more than 100 million years old, but being able to imagine things on purpose began only like 70,000 years ago, and even then the reviews were mixed. Plato thought that imagination was kind of suspicious, and the Bible does sort of suggest that it is evil. I read in the heist issue of Business Week about a certain kind of imagination, creative thieves. Their recent hauls include 200,000 Cadbury cream eggs, $37,000 worth of cadaver parts, 1,240 cases of crab, a 4-meter-long whale skull, and 1 catalytic converter from the Oscar Mayer Wienermobile. How are you supposed to bring imagination to work, and how do you protect it from the pressures of the marketplace? We are going to try to imagine it together tonight. Welcome to the Business Week Show. Tonight, imagination. There are some wonderful people who do the same thing over and over again, and that can be interesting or imaginative. This guest is not one of them. Theaster Gates is interested in cities, space, land, planning, preservation, place, pragmatism, value, desire, development, capital, collecting, blackness, agency, and the art world itself. And that is a very long way of saying that this sculptor and performance artist and painter and scholar is one of the most imaginative people working today. Theaster Gates, welcome to the show.
Thank you so much.
You have this beautiful phrase that I think of as a kind of metaphor for imagination. You talk about the possibility of life within things. How do you find that life?
Well, it's interesting. So often the life is right up under our noses. And what I've learned from Shintoism is that there's a power. There's power, there's life within things. Wood, trees, water, a rock, right? If you respect that life, maybe it means that you have to work to care and to protect and preserve that life. I feel like there are moments, like with the Stony Island Arts Bank or other projects that I've done, where when it's dead, it's a reminder of the failures of culture to invest in a thing. But when it's alive, it's like a testament to what's possible when collective people believe in the power of regeneration.
The work that you do on the south side of Chicago has been to find, I think, the meat on the bones, that have transformed spaces that were underinvested into spaces for artists to live and artists to show, and places to watch movies and places to listen to music and places to show collections. Did you find that your imagination was listened to and respected by others? Did people disbelieve that you could remake these spaces this way?
Well, let's look at this over a course of years. When I moved to my neighborhood in 2006, to the Grand Crossing neighborhood, things were interesting. It was a normal neighborhood adjacent to the University of Chicago where I had just taken a job. In 2008, the market crashed.
Yep.
And the real estate values and the kind of speculators that existed on the South Side, they were no longer interested in the speculative land. I slowly started trying to figure out, if no one else is going to buy and protect these buildings and make sure that people on the South Side have opportunity, and in my case, that culture continues to live, is there something that I could do to try to acquire some of these buildings on my block? So one at a time, with my mom's help, with friends' help, with my own sweat, we would acquire the building next to the building that we own and then renovate them best we could. And until we found ourselves owning, over the last decade, a lot of buildings.
Have they had to make a new kind of language for, you're a developer, you're an urban planner, you're an artist. Are you inventing your own words so that you can explain what you've done and what you are trying to do?
Definitely. I'm definitely always both inventing words and trying to resist certain labels. But there were times where I had real translation issues. So I would go to the Department of Planning, City of Chicago, and I would walk in and I would say, I'm an artist. And I would go to my alderman and I would say, oh, I'm a local artist in your neighborhood. And that did not get me the traction that I wanted. So I had to put on my shirt and tie, change my language a little bit and say, hey, I'm a developer. I've invested $10 million in this neighborhood. I'm interested in doing another $100 million of investment in this neighborhood, and I'd like the attention of my alderman and the commissioner of planning.
I don't think imagination has to be generative or productive to be worth something. But when I think about your work, and I think about the cafe, and I think about your mill, you created actual jobs.
Yeah.
I think that falls under the rubric of economic development. Can economic development be something that's imaginative instead of destructive?
Yeah, dear friends of mine talk about, instead of talking about money, they talk about energy. What can I do to create varying kinds of good energy? And most of the time I start with, what do I want? And I want to be able to get a good cup of tea in the morning. I want to be able to hear great live music. I want to see amazing films. I want my friends who make films to feel supported in the production of their films. I want to listen to house music and I want to jack all night. I just locked in to my neighborhood and I'm like, oh, those things that I would normally try to find in another place, why don't I bring them here? I'm going to build the amenity. And if I build it for myself, it means 500 people, 1,000, 5,000 people could also benefit. And it also means that the model for neighborhood transformation, economic development, if you will, that model is playing itself out in real time. Then, and this is where I feel now as my hair whitens, that there's a way in which the work that's been accumulating, there are now other people who can grab the baton and do bigger, greater works.
without at all taking away from the beautiful energy that you're describing, there is something that a little voice in my head that scares me about what you're describing, because it reminds me of a very old lineage. Neighborhoods without resources, artists move in because the rents are affordable. Then developers come in because now the neighborhoods are a little bit cooler. Then rents go up, they're gentrified. What can you do, and what have you done on the South Side to make sure that the work that you're doing and the imagination that you're bringing is going to include your neighbors and not, eventually, I guess, like exile them?
Yeah. Well, right now, I feel like I'm in the middle of living this playbook that I'll eventually share with others. But a big part of it was the acquisition of land and then protecting that land so that it was always available for mission-based activity. Wildlife happens, and change happens in cities that will have 500,000 square feet worth of residential space, 2 million square feet of commercial and cultural space.
2 million?
That will protect, when this thing is over.
Yeah, sir. If you're talking on a scale of millions of square feet, I feel so sure that there have to be capitalists listening to this who are going to be calling you up and trying to say, these nonprofit investments you're making, you're a fool. You should be making money from this. Do you get calls like that?
Well, I would go back to this issue of the life and things. I think that one way of reading death is when a neighborhood has been underinvested in. Another way of reading death is when the fabric of the neighborhood has been forgotten and it's been replaced with gross reinvestment and redevelopment. The death of cities is not just the problem of gangs and violence. The death of cities is also when we become monotonous versions of ourselves.
Yeah.
And so I think that wealth has to develop more sophisticated tools for measuring health and life, and be willing to invest in ways that are more about what humans need than just about the bottom line.
I really like connecting the life of things with the death of imagination.
Yeah.
How have you learned to protect your imagination, the life of your imagination, and to keep it going? Imagination dies too, creativity. How do you protect it and give it life?
When I was young, and my dad would make me paint the baseboards of apartments that he was renting, and it was time to turn the apartments over because someone had moved out, and he was like, whatever you do, don't get paint on my floor. And so I learned to tape, and I learned to use a paintbrush so that I could fan white paint and make sure that I wouldn't mess up his walnut floors. In a way, my dad was inventing creativity in me, inventing a deeper imagination by telling me to paint the baseboards. The way that I protect my imagination now is by continuing to work. That everything I do, I'm trying to find good solutions for complicated problems.
What are you going to do next? I mean, what are your dreams, and what does your imagination tell you about what the future holds, and why, what's stopping you from doing it right now?
Well, maybe this goes back to Buddhism. I'm thinking about how to, it's been about 15, 20 years of building, and I feel like right now I'm preoccupied with how to give it all away, how to let go of this tight hold that I've had on development, and imagine it as a kind of long-term, durational performance. That I've been involved in a 15 to 20-year performance of neighborhood transformation. And at the end of the performance, the audience gets all the props back. So I'm learning a lot from people who are actively trying to say, I've been given too much, I've figured out some things, and I made a lot.
Goodbye.
Yeah.
Do you have an instinct about how you're going to start? How you're going to start saying goodbye?
With gifts.
Do you know yet who you want to give your first gifts to?
Artists.
Are there any journalists you know you'd like to give some of your records to? No, I'm just kidding.
Maybe I'll keep the records. We can swap records. We can swap
We'll
records.
exchange.
Yeah.
That was a pure joke. Yeah, Asher Gates, it's a pleasure for me to listen to you.
It's my pleasure.
Thanks for being here. I really enjoyed that. Up until just a few decades ago, the systems of American art had practically no room for women. Museums, galleries, auctions, schools, and mass media gave the distinct impression that men had a monopoly on imagination itself. The guest who's sitting with me at this table played a key role in changing that. Judy Chicago's painting, sculpture, photography, needlework, much more, has helped alter the shape of art itself. And at 84, she is getting her first major museum survey here in New York at a new museum show that's just brimming with color and generosity and imagination. It's really nice to have her here. Judy Chicago.
Thank you.
The art world has become a big business in the way that it wasn't when you were starting. So I'm curious to ask, like, what have you learned about big business and about how big business works and how it looks that you couldn't have foreseen back then?
Well, first of all, you know, I've been asked a lot about, oh, well, aren't you upset that this recognition has been so delayed and blah, blah, blah. Actually, I'm not. You know why? Because I had 5 decades of working in my studio without ever thinking about the market. So you have to really understand how outside of that I've been, because I had my own vision of what art can be, should be. I believe art is an act of generosity, and that I feel really bad for young artists because, you know, they get swallowed up, spit out like stocks on the stock exchange. But, you know, you can stand up to that. You don't have to do it.
Your work is willing to imagine something that, you know, I have a hard time with, which is, you know, not just the death of the world, which is something the art does deal with, but your own death. I was really moved by, I think it's called a mortality relief. It's this bronze piece in the exhibit, and it looks almost like a death mask in advance, but you clearly are able to imagine your end. What do you think about when you think about it?
I wanted to be able to face the end of my life with grace and courage, because it really isn't good to have an adversarial relationship to aging. I started out exploring, I always start with research, so I started looking at attitudes towards death going back in time. And of course discovered that, we are an aberration in terms of the way we shroud death, hide death, try to have battles with death. When they write about cancer, after a battle, give me a break. Nature's going to win.
Hearing you talk now reminds me that, I have a relatively romantic idea of imagination, especially when I'm sitting with a wonderful artist who makes work that I admire. I guess I'm tempted to think of imagination as this very beautiful thing that could take you to very beautiful places. But you are also willing to imagine horror and grotesquerie. And I think that maybe people are uncomfortable doing that.
There are a lot of people who are concerned about what's happening in our world, and they need to be encouraged to look at it, to think about it. We are encouraging people to participate in this digital quilt that I created with Dementi, the Web3 company, and Naja, one of the founders of Pussy Riot. And so there are a series of questions that I believe we need to answer, like if patriarchy were dismantled, would women and men be equal? Would men have permission to be gentle and vulnerable? Would women have permission to be strong? Would there be equal parenting? Would the earth be protected? I think there are questions that we need to come together and answer. We are so polarized now. But if we don't answer those questions, we're going to drive the world to destruction.
Judy, what you're describing when you talk about this work is the ability that an artist has to use her skills and to use her imagination to pose these difficult questions to people and make them think about it. But, it's like, Judy, I'm no artist. I don't have these skills. Is there something that non-artists can take from you where, like you, they can use what they're good at to make other people think in new ways? But for most of us, we're not able to paint and draw the way you can.
Of course, what we're looking at now is the pushback and the effort to push back all the gains that started in the 70s. It will take millions of people putting down their phones and going in the streets. I don't understand why there were not millions of people in the street after the Supreme Court overturned Roe v. Wade. Not protests, because just a protest doesn't work anymore. What is required is the same thing that propelled the social change movements of the 70s, which has to do with organization, all the things that aren't fun to do. Developing leadership, developing organizations that can take the protests and turn it into actual civil change. I want to tell you something. It's worth it to feel like you've made a contribution, to have the satisfaction of that. I don't care what the New York Times said over the course of my career.
I live right by the Brooklyn Museum, where the dinner party is the heart of this beautiful collection of feminist art. The center is named for a member of the family behind Purdue Pharma and OxyContin. Apart from just what everyone else says about philanthropy and money and naming, I'm just curious how you feel about that.
First of all, I'm going to answer you with a counter question. Elizabeth Sackler's establishment of the Center for Feminist Art has allowed dozens of unknown women and feminist artists to be exhibited. Does she get any points for that? Or does her name disqualify everything she has done? Patronage is complicated, and so is history. It's like when everybody wanted to just knock down the Confederates' statues and sort of erase our past. I'm like, what if we let Black people, African Americans, come and write their stories on the statues so that we would see multiple points of view simultaneously. The point of view of the oppressor, the point of view of the oppressed.
I want to end, Judy, with the future. I'm curious if you imagine, you know, what art will look like. We're living in this strange time of artificial intelligence. You know, I'm wondering if you imagine that AI will demand room for itself in the art world. I'm wondering if the opposite will happen and the infinite possibilities of computerized art will teach us to embrace craft and imperfection.
My answer is going to be really short.
Okay.
Many, many years ago, Bruce Nauman and I had a conversation about, we were in our 40s, about how art schools were getting rid of drawing. And we agreed that when you're a young artist full of bravado and energy, you can go a long way in your career. But when you get into your 40s and your ideas get more complex, if you can't draw, you come to a standstill. And I am somebody who believes in the hand. And I believe in the connection between the hand and the heart. And that's my answer.
Well, your hand and your heart and your imagination have changed other people's hearts and their imaginations. I'm really glad you've been here to talk to me about it. Really, really enjoyed it. Judy, Chicago.
Thank you very much.
Thank you so
You're
much.
very smart.
Imagine this. You've got an imagination, you've got a job to do, but you're not sure how to bring one to the other. These two guests tonight have used their imagination successfully in completely different ways. One of them has used his to transform his neighborhood inside Chicago. The other one has used hers to transform herself into a Chicago and to transform art history itself. Maybe you use your imagination inside the market. Maybe you use it despite the market. Either way, you can steal the tools of these two artists. Patience, practice, collaboration, voice, and fight. Thank you so much for watching. We will see you next time.
When all else fails, one must scream. Well, as we look at what's happened to our world, it makes me angry that more people aren't screaming.
There have been times in the workplace when I've said that things were good when they weren't good. Sometimes because I was trying to maintain staff morale. Sometimes I was trying to be optimistic, like this is gonna be good, even though it's not good today. And then there have been other times where I've known that the person I was talking to had such a fragile ego, and you gotta be sensitive when you work with other creatives.
That's enough already, guys. Now, come on. Come on.
Oh, wait, the mic, the mic.
I know.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
This is the shadow fleet. To actually see clandestine behaviour, that makes you think, well, what else is going on?
can you always tell a fake image from an authentic one? Deepfakes are undoubtedly one of the most challenging risks posed by artificial intelligence. These are the images, audio recordings, and increasingly videos, which look convincing enough to fool all but the sharpest amongst us.
What's really interesting is that fake images, even the convincing ones, aren't new inventions.
No, like that Loch Ness Monster picture. Or one of those creepy double exposure photos of a sad-looking Victorian ghost.
Right, but their sophistication is rapidly advancing. And many experts say that political disinformation campaigns using deepfakes are not only happening, but set to become a far bigger problem.
So, on this episode of AI IRL, we're going to hear things like this.
How do you have a society? How do you have a democracy if you can't agree on basic facts? We can disagree on what to do with the facts, but we should not disagree on actual facts.
And this.
Should it be an independent body? It depends. Who gets to be in that independent group? Are they appropriately speaking for what, everybody in the world?
As we try and answer the questions, what's next for AI and disinformation?
And is it about to get a lot worse? Annie Farid, thank you so much for joining us.
Thanks for
So you're a
having me.
professor at the University of California at Berkeley, and you've been specializing in digital forensics for quite a while.
Yeah.
So the analysis of deepfake detection, for example, for many years.
Yeah.
Set the scene today.
Yeah.
What is the state of disinformation pre-ChatGPT and post-ChatGPT?
Good. So first, I think it's important to understand that disinformation is not fundamentally new. It is being amplified and powered by AI today, but we've had disinformation well before there was AI, well before there was an internet, well before there was computers. So this is part of a continuum, but I think it's an important part because it is about democratizing access to technology that is typically used to be in the hands of the few and now are in the hands of the many. And the one thing we know that when you take a powerful tool and you put it in the hands of the many, the threat vector changes. Okay, so where are we today? So the average person can now go to a website and generate an image of a person who doesn't exist and create fake profiles online to perpetuate everything from crypto scams to romance scams to all kinds of fraudulent material. And those are trivial to do. You don't have to know no technical skills, go to a website, type something in, you get an image of a fake person. Okay. We also have the ability to go to a website or a service and type in, give me an image of, and describe what you want. Joe Biden having a meeting with fill in the blank, and it will generate that image for you. And the images are very, very realistic. We have services where you can upload 2 minutes of audio of your voice, or my voice, and clone that voice, and then type, and then have you or me say anything you want me to say. Okay, cloning voices. Solve problem. Okay? We have lots of services where we can now take videos. So for example, you could take this video that you're recording right now with that camera and replace my face with another face.
We're not going to
do that. Well, first of all, the viewers have got to start wondering, how do they know that it's me and not one of my grad students because I was too lazy to come over the bay in the morning. But we can do that.
So on the one hand, more people have access to these tools for fun purposes, like
yes,
pulling a practical joke on Nate.
Yes.
But it's also used from a more nefarious perspective to stoke unrest.
Yeah, or create non-consensual sexual imagery, or commit fraud, or push disinformation campaigns. And so I do think you make a good point, though, is that there's an upside to the social media. Is that when this stuff gets out there, there's a lot of eyeballs on it. But here's the thing you have to understand about social media. The half-life of a social media post is measured in minutes, which means half of views happen within the first 1 or 2 minutes. And by the time the fact checkers come around and fix the record, the vast majority of people have moved on, number one. But number two, and this is the important part, is that social media and human beings have made it so that even when we come in and fact check and say, nope, this is fake, people say, I don't care what you say. This conforms to my worldview. This does not conform to my worldview. I will believe it. I will not believe it. And why is that? So why are we living in that world where reality seems to be so hard to grip? It's because our politicians, our media outlets, the internet have stoked distrust of governments, media, and experts. You're the media and I'm the expert. And that, what I think is what is really disconcerting to me, is we've created these filter bubbles, these alternate realities. And here's the question you got to ask yourself, is how do you have a society, how do you have a democracy if you can't agree on basic facts? We can disagree on what to do with the facts, but I don't think we should be able to, we should not disagree on actual facts of what happened and where did it happen.
Are there some recent examples of like viral deepfakes that have given you real cause for alarm?
So there are two that I can think of in recent memory, and they've given me alarm for different reasons. So one was the Pope in the puffy coat.
Yeah.
And if you saw this image, it was just brilliant.
I was fooled.
Were you really?
I think so.
That's exactly why I was worried, is because journalists fell for it. And journalists who are smart and who are savvy and who are fundamentally skeptical about things.
Thanks.
He knows you.
They fell for it. That's right. So that's what the photo was completely innocuous. It was fine. I don't care about the photo, but a lot of journalists fell for it. And that's when I thought, we have crossed through, there's a tipping point here where the images have become so good that really smart people who are by design critical are falling for it. That was number one. But here's the other one that really scared me. It was a fake image of the Pentagon being bombed.
Yeah.
And it wasn't a particularly good image, by the way, but it got posted onto Twitter on a verified account. Thank you, Elon Musk. It went viral because it looked like a news organization, got retweeted, reshared. The stock market dropped $500 billion in 2 minutes from a crappy fake image.
How do you square off that we can move so quickly on the technology that can create deep fakes, but we're so slow to create the technology to combat it? Who's leading which camp, and should it be that way?
Well, you can make a lot more money from the creation of it, right?
Follow the money.
Like
that's all it is. Defense doesn't pay, offense does. Creating fake stuff is good. You can make a lot of money. It's creative. You can make things more efficient. There's not a lot of money in creating defenses, right? Think about the people creating malware and spam.
Here's a scary factoid for you. VC funds invested $180 million in this deep fake detection technology last year. And that was up from only $1 million in 2017. This year, it's at about $50 million. How much is it going to take?
And by the way, compare that to how many billions are going into the generative side of things from ChatGPT, OpenAI, and all these other companies. So I think that's right. I would say it's about 1 to 2 orders of magnitude difference. And by the way, you raise a really good point, is that follow the money. Where the VCs are putting money is where people are going to invest their efforts. And so the VCs are looking at this and saying, well, we can make money here. We don't think we can make money here. I think they're wrong, by the way. I do think that we are quickly entering this age where people are getting frustrated, not having the ability to believe what they see. And I think that is going to start to become the way privacy became an issue, right? Pre-Cambridge Analytica, everybody thought, whatever, privacy. And then Cambridge Analytica hit and we thought, oh man, this is bad. And we started to see a real shift in the way we as consumers, but also the corporations thought about privacy. I think we're going to see the same thing about trust and integrity and provenance and authentication. But I think that is going to take a little bit.
not just about detecting what is fake, but also believing when it's actually real.
Yeah. This is called the liar's dividend, right? When you enter a world where anything can be fake, anything you read, hear, or see, well, then you can deny reality. Let me give you an example of this. 2016 rather, then candidate Trump gets caught on the Access Hollywood tape saying some pretty bad things about women, okay? And what happened is he apologized. He said, I'm sorry, it was not appropriate, and tried to excuse it away, right? Now, fast forward 2 years. Deepfakes are on the rise, generative AI is on the rise, and he's asked about that, and he says, it's fake. Why'd you apologize in the first place? Doesn't matter. It's easy to deny reality when something can be fake. And arguably, I think that is the bigger threat here. I'm worried about non-consensual sexual imagery. I'm worried about fraud. I'm worried about disinformation campaigns.
Blackmail?
I'm worried about blackmail. I'm worried about the phone calls people are starting to get saying—
robocalls.
Yeah, robocalls in your loved ones' voices. I'm worried about all of those things, but that is nothing. It is nothing to not being able to hold people responsible for their actions. Police violence, fake. Human rights violations, fake. Politicians doing something illegal, fake. Where are we? Where are we if anybody can deny anything? And now we all become tribal. We believe what we believe, and there's no external information that helps us reason about a complex.
So how do we fix that? Because a huge part of that problem is not even to do with AI.
Yeah.
That is to do with people and arguably mass media and the internet and everything else. But that doesn't necessarily mean AI.
Good.
So can you solve it?
Yeah. There's sort of 3 solution bins, and I think we need all of them. So one is technology so that when I take out my phone or a camera and I record police violence or human rights violations or a politician speaking, it should, on the device, authenticate where I am, when I was there, and what I recorded.
Okay,
And
so
the
GPS,
hardware itself. GPS, date and time, potentially my identity if I want to give up my personal information.
They're already adding that into like the EXIF data in a JPEG, right? So
correct. Here's the second bin that's related to it. If you're an OpenAI or a Midjourney or Stable Diffusion or any of these companies that is generating this content from text, image, audio, to video, you should be doing the same thing, which is watermarking and fingerprinting every single piece of content so that when somebody uploads an image of the Pentagon being bombed to Twitter, they will know instantaneously that this is synthetically generated. That's not to say it should be banned. There's nothing wrong with it, but it should be labeled. 2 more things. One is sort of my bread and butter, which is that, as you said, these technologies are not perfect. They will take a while to be deployed. They will get hacked. So now you need the passive techniques. Give me an image. How do I analyze this to determine if it's real or not? And then the 4th one and the final one, and I think we need all of these, is we need regulatory pressure. We need the government to say, there's a carrot if you do this well, and there's a stick if you do not do it well. That is the government's role. Think about product safety, cars, pharmaceuticals, transportation, the food we ingest, and the government says these things have to be safe. Why can't we treat the internet like this? Why don't we treat information the same way? Why don't I put a nutrition label on a piece of information the way I put a nutrition label on every single thing I buy from a store?
Ruman Chowdhury, thank you so much for joining us.
Thank you so much for having me.
So you run a nonprofit called Humane Intelligence, and you also run a consulting firm called Parity, where you help companies like DeepMind, Meta, even governments on responsible AI practices and how to mitigate algorithmic bias. But I kind of want to take it a few years back to when you saw this play out on the inside, when you were director of machine learning ethics, transparency, and accountability at Twitter.
Yes.
So I would love to kind of get into what you learned about the state of misinformation and disinformation while you were there.
I think the biggest thing to understand is that it is a near insurmountable problem. The volume, the number of people inadvertently and purposely sharing mis and disinformation online is such an near impossible task to tackle.
Could you maybe define the differences between misinformation and disinformation for those that don't know the difference?
Right. So on one end, you get misinformation, which is almost like misdirection. So it often has a kernel of truth, but maybe it's shifting people to look at one thing and kind of saying, don't look at this other thing. Disinformation would be purely falsified information, something that's deeply untrue. In general, most of the information online that is false or fake traditionally has had some sort of seed in reality. My concern is that with generative AI, we can make much more convincing pure deepfakes, and anybody can make it. So we will see an increase in the kind of true deepfake technologies that will spread completely falsified information. And the other thing to think about is also the actors online who are sharing it. So of course you can have bots, you can have malicious actors, people who are purposely sharing it, but actually a very big percent of the information online that is fake is often shared by people who didn't know any better.
And we've talked about people. I mean, this is a bit, I suppose it's a bit controversial, but is part of the issue that people are the problem? I mean, I know it's kind of a contrary opinion, but we talk about blaming tech companies for making and spreading this stuff, but should we maybe be doing more to educate people into not believing it in the first place?
I think that is certainly going to be a step we will have to take in a generative AI world. I think we are sufficiently trained to not believe everything we read, right? You know the phrase, don't believe everything you read on the internet. What we are not sufficiently trained to do is look at images and video and listen to audio and have that same level of critical thinking. In general, if we see a video that looks real, for example, a bomb hitting the Pentagon, most of us will believe it and we won't question it. If we were to see a post and someone said, hey, a bomb just hit the Pentagon, we are actually more likely to be skeptical of that because we have been trained more on text than video and images. So I think you're correct. I think there is this level of education that people need.
So talking about some of these companies, and obviously you've worked at one of them, but there are many, so we'll talk in general terms here. Do you think that they actually can control this?
So there are ways in which they could take action. For example, DeepMind have introduced something called Synth ID, which is a technical watermarking of any photo. And there's a way to analyze the photo, no matter how it's cropped or changed or altered or filtered, that you can tell if it's deepfake or not.
Even if you take a photo of the photo?
Oh, I'm not sure if you take a photo of the photo.
Because this is one of the issues, right?
Yeah.
You know, like if you take a photo of a photo, it's a brand new photo. So you need to be able to analyze something that survives the route through compression and transmission and everything else and degradation that you get from compression.
Right. That's a great point, because often we think of these very high-tech ways people will break things, but to your point, most of the best hacks are incredibly low-tech. So I think you're spot on. I have no idea if Synth ID works if you take a photo of a photo.
So when it comes to flagging things, and even take content moderation, really at the core, that's at the core of controlling what comes online and what doesn't. Should there be an external government agency or just independent body that oversees this rather than it being controlled internally at the company?
And this is the ultimate discussion. And the phrase I've been using for all of this is, the question to answer is who gets to be the arbiter of truth? And it's such a difficult one to answer. Should it be an independent body? It depends. Who gets to be in that independent group? Are they appropriately speaking for what? Everybody in the world? We've not yet achieved that, like a fully representative body that represents everybody in the world that will be able to confidently speak on every issue.
I mean, technically, that's what we have elected officials for, though, to some degree now.
In the U.S., sure, but I think right now we are having a bit of a crisis of democracy where people do feel like they're not being represented in their own governments. The other part I'll add is, do we want this content moderation to inherently be political? Because that's what will happen, right? People will be elected, 2 to 4 years later, new people will be elected. Do we really want the decisions on what content is and isn't allowed online to be purely political in nature? I know there's accusations that these companies make political decisions. Frankly, companies make capitalistic decisions. They don't actually make purely political decisions. If we move it into the hands of the government, we are literally making them purely political decisions.
Let's lighten the mood a little bit and talk about putting executives in jail, which is a topic I love talking about. But it's really important where I'm from in Britain, because there is a bill in the works that, amongst many other things, does talk about essentially making executives at companies personally liable if their companies help in disseminating what they would call online harms online. It's still all up in there at the time we speak. But I wonder, do you think threatening executives with potentially being locked up, even if it's an extreme case, is that helpful? Could it be helpful?
I don't know. I think it is what we want as human beings is to have a single person to blame. We want there to be a good guy and we want there to be a bad guy, frankly, right? Like, just in general, as human beings, we love to have hero culture, and when hero culture means we have villain culture. Frankly, a lot of these people are also larger than life and, comically villainous people. That being said, to what extent is throwing Mark Zuckerberg in jail going to fix the problems of social media writ large? Probably not very much, because Facebook and Meta or Google, they are a giant machine, right? They're massively global companies. There are decisions being made by many, many people. It's part of a company culture. Putting one person in prison may be almost theatrically a pleasing thing to do for some folks, but I don't think it would actually solve a big problem.
It's like it's the nuclear deterrent. It's the equivalent of a nuclear deterrent, right? It's there as a potential threat that forces a different general way of behaving, even if the actual, launch button or the prison sentence never actually happens. It's interesting.
Yeah, I mean, it's interesting if we think about it maybe game theoretically, right? So I can't help but be a quantitative social scientist sometimes, and I like to think of things in terms of what are people's incentives. So the question is a social media company incentivized to spread mis and disinformation? Actually, they're not. They don't want that because it makes them look bad.
Let me push back on that a little bit, because I do think the widely held belief, and even with our previous guest, was that social media companies' business models are at the core of why disinformation proliferates, because it puts more of a value on content that's engaging, even if it's not true.
So what I'd say is the cost of identifying misinformation, as I mentioned, is so massively expensive. Balancing that with making sure people have an experience they want is a very difficult thing to do. So is an engagement-based model leading to problems of radicalization, misinformation? Yes. Are social media companies actively trying to sow misinformation? No, they're not. And that's what I'm getting at, versus, let's say, somebody who's actively trying to do a bad thing. So for your prison example, if the CEOs of these companies were actively trying to spread misinformation, then I'd say, yeah, you know what, throw them in jail, they're bad people. I think on the other end, it's recognizing that this is an incredibly difficult problem, and what is the level of transparency and access to these models, or understanding the impact of these models that we may need that is maybe different from what we have today. So I look at the Digital Services Act in the EU, which is really fascinating. So their audit methodology is based on having these companies prove to an independent technical auditor that their models aren't, for example, influencing free and fair elections or violating fundamental human rights online.
So I'm curious about your former team at Twitter, also known as X now, how they feel about going back into content moderation work at other tech companies that are now jumping into AI, where this role is also going to be critical.
Yeah, so to start, Twitter and X are two totally different companies in my head. Companies are driven by the culture and the people who are there. They're two totally different places, but I take your point. Well, I think the people who are drawn to this work, whether it's trust and safety, ethical and responsible AI, which is the work my team did, we're drawn to the mission and we're drawn to the meaning of the work. We understand it's going to be hard. We understand that sometimes we can't solve problems, and frankly, we can't save the world. But I think that there's a fundamental good feeling we have about at least trying our best and being part of the solution. So I've found that every single one of them wants to continue work.
What's something that no one's talking about that you think they should be, as far as AI and ethics and your expertise goes?
Yeah, we touched on this a little bit earlier. And the thing I worry about, there's such a rush to governance. There's such a rush to say, let's pass laws, let's regulate companies, let's slap them on the wrist and fine them and throw them in prison. I think we need to take a step back and think about what we are doing with these new laws that may create new paradigms of government overreach into private companies. in an almost abstract sense, right? There's a reason why government and private companies in countries like the United States tend to be very separate. We may not always like the outcomes of that, but let's be clear, the opposite, like the extreme opposite, is a purely state-run economy. So we want to say things like, for example, the government should compel tech companies in the US not to sell to enemy states. Do we really want the government to be able to tell for-profit private companies where they should or shouldn't be selling their goods and products?
I mean, we did sort of see that with the previous US administration and Huawei, and basically saying you can't buy these companies' products and you can't sell your components to them. And that resulted in that company getting a lot better at developing its own stuff. And there's a risk that maybe backfired in some people's eyes. It's sort of tangential to the conversation about disinformation, but it all supports your argument.
Right. I mean, it all just ties into the sort of let's be careful of where we're shifting this power. Like right now, I think a lot of people feel that tech companies have an oversized amount of power. I think that's a fair thing to feel. Now, I don't want to rush into saying, well, then the government should clearly be taking some of that power away. Well, what about maybe developing a world of independent auditors and independent actors? That's what we do with my nonprofit, Human Intelligence. We're trying to build the independent community of people who are critiquing technology and actually helping drive and shift it towards benefiting human beings, right? So the term fiduciary duty got to mean something to a lot of us at Twitter last year. And I carry that lesson forward when I think about companies who want to do things for good and what it really means.
Facebook and Instagram have about 3 billion and 2 billion users a month, respectively. No single country in the world is home to that many people, and it's why Meta, which owns them both, attracts fierce scrutiny from governments and critics.
And that was before terms like generative AI became commonplace. But for years behind the scenes, Meta's been building a vast network of AI researchers, and it's used what they come up with to show people content and ads it thinks is going to keep people clicking.
That's not always worked out for the best. The company's long been accused of having an outsized influence on the spread of disinformation and social unrest far beyond the shores of its Californian headquarters. And that's led people to question whether switching on even bigger, faster, smarter forms of artificial intelligence is actually good for the world.
Meta says it is, and its boss, Mark Zuckerberg, must know what's at stake if his company gets it wrong.
So, on this episode of AI IRL, we're speaking to Sir Nick Clegg, once a nearly 20-year veteran of British government, now the man Meta's got in charge of convincing the world's public that his employer is doing the right thing for us all. So Nick Clegg, it's great to have you here. Thank you so much for joining us. Now, the Brits watching will remember you as the leader of the Liberal Democrat Party from your time in government. You were at one point the Deputy Prime Minister here in the UK, but for years you've been at what was Facebook, now Meta. So give us a sense, how is AI changing what you and the company does at the moment?
So in one sense, it's a continuation because AI, of course, I mean, AI is not, I mean, I know the hype almost suggests as if it's just been invented yesterday, but of course it's been talked about since the 1950s. And as far as Facebook, now Meta, is concerned, almost every aspect of what you see on social media is in one way or another affected by, ranked by, sorted by AI, and has been for many years. And we've, as a company, have long had a pretty strong pedigree in cutting-edge AI research, which we then open source. We have open sourced and shared over 1,000 AI databases and models over the last decade or so, and quite a lot of the foundational technology that's used in the industry. PyTorch, for instance, you know, the sort of AI libraries was devised by Facebook researchers. That all being said, I think clearly generative AI, the development of these large language models, and now these image models, is a qualitative step in a new direction. And that, in terms of particularly the work that I do, is of course accompanied by a lot of time and thought is invested into how you can innovate with generative AI in a way that is responsible, that is safe, that is thoughtful, and we do that very openly and collaboratively with researchers, with academics across the industry, and of course governments are trying to grapple with this, and they're trying to work out whether and in what way they should regulate.
Not to ask people about their bosses, but you know, Mark Zuckerberg, how is it changing his priorities? Because for a long time, you know, he seemed very focused on building a metaverse, and now, you know, we tend to just hear about the AI side of things. I mean, I'm just curious to get your sense of how those priorities are shifting. Are they shifting?
He would say they're not incompatible. In fact, they're sort of mutually dependent on each other. You can't really build a sort of metaverse suite of products, namely the idea of moving from a sort of 2D internet where you're looking at something on a flat screen to actually being immersively in an environment where even if the three of us were physically apart, if we were wearing virtual reality headsets, we'd be able to communicate with each other as avatars now, in the future hopefully as holograms, feeling really we're breathing the same air. Now that technology cannot be built without AI. Well, you certainly can't build content for that, for those experiences without AI.
But it certainly seems like the rollout of some of those headsets just hasn't quite caught on at the speed at which it was initially promised. And now you have generative AI just catching wind really quickly since last year. You have new generative AI tools that the company is releasing. How would you rank kind of those two priorities, though, given the headsets just aren't quite catching on at the same speed?
So I don't think we ever actually claimed that the headsets were suddenly going to sweep the board. That would be wholly unrealistic. You don't build Rome in a day. You certainly don't build a new computing platform in a few months either. We've always accepted this as a long-term investment. And by the way these things catch on tend to go in waves. I mean, I've read about, you know, ChatGPT exploding, and then particularly when kids started going left the end of term and went on summer holidays, it subsided in terms of its user base. You know, these things fluctuate. I think, as I said earlier, AI is not new for us, but at the same time, I think I wouldn't look at generative AI as a kind of just as a product. It's not an app. It's not a piece of hardware. It's much more foundational than that. It's like an operating system. It's a completely different. It's the sort of scaffolding, the infrastructure. I'm mixing my metaphors. I hope you know what I mean.
So how are these changing some of Meta's core products then? You talked about the generative AI that's going to form a core part of the business. Can you just sort of talk us through? I know a lot's new at the moment. What is changing there?
So I think if you look at, for instance, at the where content comes from that is being recommended to you on Instagram, we've been very open about the fact that over the last year or two, we were already leaning into having more recommended unconnected content. In other words, content that was not connected to your family and friends, but that our AI systems have been able to scour the internet and say, you might be interested in this, you might find this amusing, you might find this fun, you might find this educational. I think you'll see an acceleration of AI systems not only recommending content, but now increasingly generating content. So one of the things that we've been working on is how to make sure that people can distinguish between the provenance, the origin of something which is generated by AI rather than generated by human beings. So we will have visible, clear watermarks on the photorealistic imagery that people will be able to use in something called /Imagine, which is our photorealistic tool integrated into Meta AI, which is our sort of Meta sort of ChatGPT equivalent, where you can ask it anything from a restaurant recommendation for this evening to how to plan your next summer holiday.
And this is going to be baked into Messenger, into WhatsApp, into things like that.
Exactly, and I was going to say, and all of that gets then baked into all of the platforms, into the messaging apps as well as the social media apps. And then again, I think this is a new departure, not entirely new. Some companies look at Character.ai, for instance, they've tried this. Is we will be leaning into the development of AI characters, personae, from Jane Austen to, a Tom Brady style,
It says
sports
a lot about
expert.
your taste right now.
Well, yeah, it's a big range there.
So as more people start to use these tools, which sound really exciting, I imagine that creates a really robust data set to train these models. Do users have the ability, though, to opt out if they don't want to be part of that training set?
Yeah, they do, and they have the ability to, for instance, delete the data which they have when they're interacting with some of these AI characters, these AI personae that I spoke about.
And those
earlier.
personas, sorry, just to interrupt, but are they an alternative to having a friend? Are they can you message someone that you wish existed and who doesn't, or is this an
existing?
Well, I think it'll be very interesting to. Well, actually, I think the truth is, let's see how people use them. Often, it's the most sort of unexpected use cases that really take off, but you will be able to, you'll be able to bring in these AI persona into a group chat. So you have a mixture of. So if you're a group of friends who are organising a holiday, you'll be able to all together chat with one of these, with the travel agent who is an AI persona, who'll be able to give you recommendations in that chat group.
And for these product development roadmaps, how early in that process do you personally get brought into those in terms of making sure that what's being considered by engineers, by developers, actually tick the boxes that obviously regulators and governments and people worldwide need ticking before they are adopted by millions of people?
Right at the outset. So I think the kind of way in which we become more and more joined up, the bigger and bigger that the company has become, as you quite rightly say, in order to anticipate some of the legal, regulatory, moral, ethical, cultural issues which these new products might bump up against, the more we can plan for them, and the more. And by the way, you will have seen when we open sourced our large language model, we produce a 75-page research paper, explaining exactly how that AI model was assembled. Yeah, we have provided unprecedented amounts of information about what data is and is not used, making it very clear, for instance, that the data of your communication with family and friends is not included in the training data, as well as what you can do to control your experience and the use of your data. And I think that is all to the good. The more open we can be about how these new technologies operate, the more open we can be about what the risks and the benefits are, what the controls are for users, and also how we need to work with others. We've had thousands of hours of red teaming, stress testing to make them as safe as we possibly can. We can't guarantee that they won't spew something inappropriate or something, unwelcome at any point, but we can keep retraining it. And we try and do that as openly as possible with other folk in the industry. Because if I can just take one specific thing, which I feel really strongly about, you can't reassure people about a new technology if you can't detect it in the first place. That requires high levels of industry cooperation, which is not yet fully mature, but it's something we're trying to lean into through something like the Partnership for AI, for instance.
The way you're innovating responsibly, it sounds like, has a lot to do with your open source philosophy, which not every AI company out there is adopting. Some are closed source models. And this came up in talks in Washington where leaders were, just a few weeks ago talking about why they adopt a certain stance versus another. Why did Meta decide to go in this direction, especially because critics would say perhaps open source models can actually make it harder to police and then hold that company accountable?
Yeah, we just see it very differently. First I should stress, one shouldn't get theological about this. There's space for closed models and open models. And by the way, we don't open source some models and tools where we think it would be ill-judged to do so. Just over the summer, there was an AI tool that our researchers came up with, which can take literally a snippet of your voice and then extrapolate it absolutely perfectly. And of course, that would be irresponsible to open source instantly. I totally understand, and I really don't mean this critically, I totally understand why for other companies, it is a competitive advantage to keep it as a proprietary property, which you then charge basically people to access. We just literally flip that round. We think that the more people use our generative AI tools, the more they will innovate and we'll be able to incorporate those innovations into our own products. So, we're a company, we're not a charity, we're not doing this just for sort of charitable purposes, though I do think it has a tremendously positive effect on democratizing technology. Just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have any of the private or public entities that have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things. So we think in the long, well, not even in the long run, actually, relatively quickly, shared technology tends to be safer technology.
One of the, just moving things on forwards a little bit here, There's a really interesting bill that's working its way through Parliament here in the UK as we speak. And one of the things, it's called the Online Harms Bill, and one of the things that it deals with, obviously, is, as you know extremely well, is online harms and keeping social media companies responsible online. And there's an interesting line in it that essentially threatens leaders of companies with prison, essentially, or punishment personally for failing at their companies to keep their companies from causing online harms. And I'm just curious to get your sense of whether that is an appropriate threat, do you think? Is it overkill? And do you think holding execs personally liable could be helpful?
So I think this issue of liability, which of course is not new, you see it in the banking industry and pharmaceuticals. Sure. It's not. I really do think the devil is in the details. You know, it clearly would be both unworkable and absurd. Yeah. You know, the notion that
that Mark Zuckerberg could go to jail.
Well, not that. That the United Kingdom is going to lodge an extradition request to the authorities in California because there's one piece of content they don't like which has appeared on, in Instagram in the UK. That would not. But to be fair, that's not actually what the bill, as my understanding, says. It says something quite different, which is if there's systemic and repeated failure to even cooperate with the regulator in question after repeated requests and I think then even a court order, at that point executives become liable. It seems to me that is not a wholly unreasonable approach to saying in the absolute extreme case that a sort of rogue company refuses to engage with, refuses to cooperate, doesn't make any even best efforts, even after the regulator has gone to court. I think it's somewhat difficult to then suggest that is.
The line I picked out was the individual has failed to take all reasonable steps to prevent that offence being committed. The offence being online harms, like it's all steps.
No, I don't think it is that. I think if you, to be fair to the bill, though I'm not a legislative lawyer, but I think to be fair to the bill, it is much more heavily caveated than that. Having said all of that, I do think all democracies, including the United Kingdom, always need to be very mindful that where they legislate is where other, sometimes less scrupulous jurisdictions might choose to follow. And so one of the things that I sometimes feel is lost in the debate in a place like the House of Commons is that if you overdo it in legislation, then it's very easy for the Iranian authorities or the other less scrupulous authorities say, well, if they're doing a version of this in legislation in democracy A, then why can't we do it in our country B? And that's one of the things I somewhat worry about sometimes, which is that the debate around controlling content online, which of course I understand the political instinct because it's all about exercising political sovereignty over things that your citizens see, can often almost accidentally aid and abet those people who actually want to censor speech around the world and pressure private companies to do their bidding. And that's why one needs to, I think, tread extremely carefully in taking on powers like the one that you've just cited.
Let's bring it over to the United States for a bit. There's a fear among researchers and other experts that artificial intelligence could turbocharge misinformation and disinformation. And recently, you as well as some other tech executives had said that disinformation on platforms right now, even amid the rise of ChatGPT, isn't as bad as expected. What sorts of changes is Meta making to its algorithms and products to ensure that it's not caught off guard ahead of the 2024 election?
Yeah, so this is an adversarial space, right? So people who want to, by the way, just to be sort of tediously semantic, we draw a distinction, just to be clear, between misinformation, which is where you're saying stuff that is partly false or slightly false, or it's deliberately designed to mislead, or it's accidentally designed to lead, to disinformation, which is the much more deliberate use, usually of fake accounts to interfere from outside into domestic elections. The key thing is when misinformation goes viral, and we have a number of increasingly sophisticated tripwires which say, this seems to be going viral. You might want to have a look at this, and then it's for independent fact checkers to decide.
Is it too late by then? Would it be better to catch them before it gets spread?
Well, how do you do? You can't vet what someone posts before it's posted. So the speed at which you do it is crucial, and that's my point. AI has allowed us to become faster and faster and faster. At flag or identifying potential viral content which might need to be scrutinized, and of course that's our job, and that's why we've invested $16 billion, I think, over the last 5 years. We have thousands of people working on this. I keep reading about, oh gosh, we're letting our guard down. No way. We are putting a huge amount of time and effort into preparing for these rash of elections we have next year. India, UK, possibly US, Mexico, and so on. I think 2 billion people or thereabouts are going to voting booths next year. But the point is, our systems, in a sense, our systems shouldn't care about whether something's produced by AI or it's produced by a human being. If it's misinformation, it's misinformation. But I think it's right to anticipate that all of that will happen more quickly. I think that is a reasonable expectation. It's one we're sort of trying to plan for.
Layoffs in the tech sector really rattled trust and safety teams, which includes a lot of the content moderators that deal with disinformation online. How has this affected the teams at Meta that are charged with ensuring Meta's AI models are in fact developed responsibly?
So we continue to have, I honestly don't know what the precise tally is. Of course it varies over. We have around 40,000 people working on safety and integrity in our company. But crucially, the answer to your question is yes, absolutely. We want as much as possible to have new AI tools to facilitate the way in which we keep our users safe and the way in which we enforce our policies and ensure that content that violates our policies is acted against. Because it doesn't matter if we employed 400,000 or 4 million. It still would never, and you can't solve this problem by just employing more people. And I would strongly urge people not to regard this as just as a sort of headcount issue. Honestly, a few hundred or even a few thousand people here or there is not the issue. The issue is one of technology. We won't always be perfect. There will always be parts of the system that don't operate as they should. But is the answer in the long run AI-fueled technology rather than, a few extra people here or there? Yeah, absolutely, undoubtedly, yes.
So where does algorithmic bias factor into that? If these are, largely what the company's going to be relying on to detect misinformation and disinformation?
So you mean bias in AI systems?
That's right.
So bias in AI systems is something which we spend a lot of our research, it's called FAIR, Facebook AI research team, has done a lot of groundbreaking work on this, and you can do a considerable amount in the training phase of these models to ensure that bias is anticipated and that stereotypical content is not relied upon. You then have to use a sort of feedback loop where when everyday users are using these AI models to make sure that bias is not creeping into the way that the systems operate. I think we've made huge advances in that.
So let me ask you, Meta and Facebook were at one point the poster child for move fast and break things. And you had a lot of technology 10 years ago, you have a lot of technology now. So how can you be confident that people can trust that you aren't still moving fast and breaking things, but with AI now?
I think transparency and accountability. I think we need to be as transparent as we realistically can be and need to be held to account for how our systems operate.
How should we hold tech companies to account, though?
Well, let me give you a very good example. We're literally the only tech company that in exactly the same cadence as our financial results, every 12 weeks, we publish exhaustively data about the 2021 categories of content which under our community standards, we don't want to see on our platform. And we're completely open about how good we are against terrorist content, hate speech, bullying, harassment, IP fraud, you name it. All of these different categories, and we stipulate where our systems have detected that content before any human being has reported it to us. And more than that, we get it independently audited. So EY audits it, because you're not going to believe our homework. And to give you an example of the progress, exactly the issue we've just talked about, hate speech, the prevalence of hate speech now, according to the latest audited statistics that we've published, is down to 0.02%. That means for every 10,000 bits of content, if you were scrolling endlessly on Facebook, two bits of that those 10,000 bits of content would be hate speech. And that is down by about 50-60% on where it was 18-24 months ago, for one reason only, because of AI. Because our AI systems have got so much better.
Well, I think that is a very optimistic point to leave this on. Nick, it's been a great pleasure. Thanks so much for taking the time to come in and talk to us today.
Thank you.
Thank you.
The rise of artificial intelligence is raising fresh fears about technology's role in distorting the truth. It's setting up a test of the strength and resilience of democratic institutions across the globe.
And it comes at a time when many governments are grappling with the power of social media and its ability to stoke division.
So in an effort to sidestep mistakes of the past, lawmakers are racing to put up guardrails for a technology they don't fully understand, while AI leaders vie for a bigger role in shaping them.
Now, both camps don't exactly have a great track record here, so why would AI be any different?
In this episode of AI IRL, we'll explore what's at stake for democracy if it isn't. Congressman Ted Lieu, thank you so much for joining us. So you're a representative of California. It's home to some of the biggest companies leading the AI boom. And it's an exciting time in technology, but also a somewhat precarious chapter in society. You know, we saw how social media undeniably played a role in eroding the public's trust in institutions. What risk do you think AI poses to democracy?
As a recovering computer science major, I am enthralled with AI. It is going to move society forward. It already has. There's already some big risks that we also see, and we have to mitigate those risks while reaping the benefits. So in terms of democracy, AI is very good at doing fake videos, fake voices. If you give an AI algorithm half an hour's worth of your voice, it will sound just like you, Jackie. If you give it 2 hours worth of your voice, your family members can't tell the difference. And then you can see how that could be quite disruptive to democracy and just to regular scammers in everyday life where people might get tricked by AI.
How worried are you?
I'm somewhat worried because when social media first came out, people were fascinated by it, they took it seriously, and then over time they realized, oh, we shouldn't trust everything we see on the internet. And that's what I want people to see with AI and the internet. They need to have some skepticism and not trust everything that they see and do some double checking.
I mean, it's not new that legislation plays catch up with technology a lot of the time. We saw that with, even over the last 20 years, Napster, more recently, look at something like the Cambridge Analytica scandal with Facebook, Meta now. And I wonder, should we believe that AI can be any different in terms of how legislation can help?
So my view is AI is like the steam engine, which was quite disruptive when society first saw it work. It's going to become a supersonic jet engine in a few years with a personality. And I don't think we're ready as a society or as a government to see all the amazing benefits of AI, but also the disruptions. For example, in terms of the labor force, AI is simply going to eliminate a number of jobs or make a number of jobs more efficient. Well, what do you do with that? Do you go to a 4-day work week? It's my vote that we do that. Or do you fire a quarter of your workforce? Or do you make them work 25% harder? These are all decisions that we have to make, and I'm not sure we're ready for that.
One of the things people are concerned about is that being able to discern the veracity of the audio or images that we see online is just going to get even more difficult as AI gets more sophisticated. Do you think AI has the potential to decide the 2024 election?
I don't think so. I honestly think it's going to be decided on one issue, abortion, and I don't think the Republicans are going to be able to overcome that issue. But AI can be disruptive in putting out fake videos and making people think that, for example, Joe Biden said something that he didn't, or that Donald Trump said something that he didn't. And again, I want people just to be somewhat skeptical when they see videos, especially political videos.
When it comes to reining in AI, you and some lawmakers have proposed that a national commission take a deeper look into what actually needs to be regulated before actual regulation is written. Talk to us about your thinking there.
So I've introduced bipartisan legislation that will create a national bipartisan Blue Ribbon Commission to make recommendations to Congress as to what kinds of AI we might want to regulate and how we might want to do that. There's precedent for this. In the DoD military side, there was an AI commission that did quite well, made some good recommendations. This is the same for the civilian sector. And when we look at AI, because it's so massive and so broad, I think we need a commission that is transparent, that can narrow down the issues we have to focus on, and then give us some recommendations on how to go forward.
But is there a risk that we miss the window to regulate it because we're busy creating a group to structure that regulation where AI is just, it's going to keep going?
So the intent of this commission is not to delay regulation. It's pretty quick. If it becomes law, it requires a report within 6 months and then a second report within a year. And then in the meantime, you can continue to pass legislation. So there's certain elements of AI that you don't need a commission to talk to you about. For example, AI that can destroy the world. So right now,
How do you even start there?
So there are these weapons in Department of Defense known as autonomous weapons, weapons that launch automatically. So I've introduced bipartisan legislation that basically says no matter how amazing AI ever gets, it can never launch a nuclear weapon by itself. There's got to be a human in the loop. So that can proceed and become law, and other sorts of bills can become law while this commission looks at the broader pictures of AI.
You've talked about tapping experts to help you kind of develop some of that understanding. And Congress people have invited people like Sam Altman and other tech leaders on the Hill to really talk about their view on how this technology should be regulated. But do you think that lawmakers have gotten too cozy with some of these tech leaders?
That is always a risk. So I worked with the vice chair of the Republican caucus. I'm the vice chair of the Democratic caucus, and we brought in Sam Altman for a bipartisan dinner. It was a terrific dinner. He was very instructive, and I thought it was very helpful. I also made a point to bring in other civil society experts who had different views of AI risks and AI bias, to make sure that members were getting both sides of AI.
This AI National Commission bill that you put forward, it's a bipartisan effort, but I'm curious what your thoughts are on how a Republican administration would regulate AI.
I think the best way to think about AI is it's not a human being, it's not sentient, it's a tool. And tools can be used for good purposes or bad purposes. So there's nothing particularly partisan to me about AI or about technology in general. And that's why I think if you look at Congress, we've done a number of bipartisan bills, for example, on cybersecurity. And to me, AI is in a similar realm where it's not really a partisan issue. It's how do we want to make sure that we reap the benefits and mitigate the harms.
Do you think it's a unifying issue in some ways?
It could be. So, we don't want, AI to destroy the world. So hopefully we can unify on that.
Do you think that AI can help with some grassroots campaigning?
Right, like write me a fundraising email in the style of a Taylor Swift song.
Yeah.
Or something silly.
Would pay attention to.
AI could totally do that. And so I am assuming both political parties are going to be using AI not only in this election, but in every upcoming election. But when you mentioned Taylor Swift, that was interesting because part of their problem with AI is how do you monetize what is happening? You have these large language models that are scouring the entire internet to train themselves. Part of the internet are copyrighted Taylor Swift works. Do you compensate her for the training of AI? I don't know. Then the second question is, well, if this AI algorithm generates things that sound like Taylor Swift lyrics, do you compensate Taylor Swift? I don't know.
Well, on the topic of kind of the relationship that the technology industry has with Washington, it's undeniably going to have to be much more intertwined, given everyone is still ramping up their understanding of what AI is actually capable of doing. Do you think leaders like Sam Altman are in some ways more powerful than lawmakers themselves?
I don't. I think he's helpful in providing information and providing insights into how these large language models work. And I think it might be good to sort of step back and give you my view of how I look at AI as a lawmaker. And to me, the best analogy is sort of two bodies of water. You have this large ocean of AI and then this small lake. So large ocean of AI is all the AI we don't care about as lawmakers. So if your smart toaster has a preference for bagels over wheat toast, we don't care. But in this small lake are the AI aspects that we care about. So one of them would be destroying the whole world. Second bucket would be AI that isn't going to destroy the world but can kill you individually. So there's a lot of AI, for example, in automated cars. And if your cell phone malfunctions, it's not going 40 miles per hour. But if an automated vehicle and AI malfunctions, it can kill you. It's killed people. And there's a lot of AI in moving things, planes, trains, automobiles. And my view is we need to have more federal regulators more attuned to unique aspects of AI to deal with those specific issues. And the last bucket is the hardest, which is AI algorithms have some sort of bias that's harmful to society or harmful to individuals, whether it's hiring algorithms or algorithms that deal with bank risks and credit risks. That we have to grapple with, and that's much more complicated.
Moving forward, do you think artificial intelligence will fortify democratic institutions or erode them?
I have no idea. And I think...
I love an honest answer. I really love an honest answer.
That's a great question. I don't think anyone predicted how social media was going to look like decades later. I do know that most people aren't particularly happy with how it turned out, which is why I think you have more of a movement in Congress to try to regulate AI, because no one wants AI to look like social media decades later.
So you definitely think some regulations should be in place before the 2024 election?
I do. So for example, one of those is disclosure. I support legislation requiring disclosure of who pays for social media ads. If you watch a federal TV commercial, at some point if I do a commercial, it's going to say, you know, I'm Ted Lieu and I approve this message. Well, in social media ads, you have no idea who paid for it. So for example, now if Russia is going to pay for an ad supporting Donald Trump, at some point it's going to have to say paid for by the Kremlin. And so people will know, oh, that ad was paid for by this organization or this country.
Indira Simbuli, thank you so much for joining us. So you're a policy analyst and a researcher studying the impact technology has on institutions, diplomacy, media, entrepreneurship, culture, all of it. And you have a particular expertise in Africa. Could you tell us a little bit about how you're seeing AI play out in the region?
Thanks for having me. AI is playing out in both the good and bad, I guess the double-edged sword way that we'd expect. On the good side, we are seeing exciting innovations in use of voice in Rwanda, in Kenya, in Uganda, where we're seeing local languages being captured in voice databases that are then being used for service provision. In the case of Rwanda, I've heard from the government that they're using that voice that has been recorded through AI projects with civil society to expand service provision to local communities, which is exciting. On the other side, we have the usual markers. Disinformation is propagated faster by technologies that are able to be, co-opted for such purposes. In Kenya, for example, during our last election, we had a very familiar situation where obviously bots or disinformation for hire accounts were proliferating and actually sullying the information environment.
Are there any specific countries, you mentioned Kenya, for example, are there any other kind of country level examples that you can give us around how AI makes its way into democratic institutions?
I think writ large, any country on the continent that is leveraging social media is the first entry point. So Kenya, Nigeria, South Africa, practically most countries on the continent that do not face wanton internet shutdowns during moments like elections. We have seen a variation of these tools sort of being leveraged either by politicians or other groups that have been interested in trying to sully the information environment. And it hasn't just been tied to elections. We have seen anti-LGBTQ messaging really proliferate. We have seen messaging against or trying to sort of intimidate, pro-rights groups. We've seen, and some of that has also not just been from the continent. development we've seen. I think there's a case of in Kenya and a few other countries, Spanish-affiliated right-wing groups that were leading these anti-abortion messagings that were proliferating everywhere. Then we have the case where it's particularly, very prevalent on the continent, and I think across all countries, with what we call dark social. So groups like WhatsApp, where these messages are then taken and we can't see the effect of that. And I think the most interesting one was even just the speculation of use of AI in Gabon during the 2019 elections there, where there was a rumor that there was a deepfake video of a president who hadn't been seen in public. He had issued an address to the country, and that in itself, the speculation around whether it was a deepfake or not, led to a coup attempt then.
So, I mean, of the countries in Africa that are using AI, which are equitable?
Equitable AI, the elusive search for equitable AI. That's hard to tell because I guess it depends on how we're gauging that. Is AI being deployed by government, say for service provision? We're starting to see signals towards that. So some countries like Rwanda, Mauritius, and others are signaling AI strategies. A country like mine in Kenya, there has been a program run by the government that we didn't even know about that is trying to use automated decision-making to allocate affordable housing. So on that level, we're starting to see that how transparent, how accountable, how equitable these systems are in administering what they're supposed to do remains an urgent task for us to sort of audit. When do you audit? Do you audit after the effect? Do you audit before it's deployed, during? All these are mechanisms that we have to develop in real time and have very contextual conversations around. In the space of social media, obviously, it's not equitable because many of these companies, I think actually all of them are not equitable, they're not accountable to our regions. In Kenya, for example, one of the most interesting cases that you wouldn't think to tie to the AI discourse as we have it, but is very relevant to it actually, is the case of the labor force that has trained ChatGPT and other AI systems to actually label this data. So the workers who had been employed by a third party that had been contracted by OpenAI, Meta, have been taking those companies to court for the adverse labor practices and everything from what has been human trafficking has been mentioned, PTSD, lack of care considerations, just precarious labor working environments have been mentioned. So that, in that regard, obviously, that is not equitable.
I'd like to take a step back because you make a good point in kind of illuminating these different examples that are proliferating across countries in Africa. And we often take such a US-centric standpoint because that's really where a lot of these companies who are creating AI technology are based. And you've said that Africa's digital transformation is really a frontier for the geopolitics of digital technologies broadly.
How are you seeing this play out with AI, and what can the US learn from it that perhaps we're just underestimating?
Africa and perhaps Asia and Latin America currently are in an interesting position where everybody, that is the US and China writ large, are trying to get them to fashion their transformation pathways to their image. So you have either the kinds of technologies you're told you can use. I think Huawei was familiar in the US context, being banned in US. That argument to African countries is moot because that company and Chinese technology has been the backbone of the infrastructure that has connected us today. But at the same time, while they have the hardware element locked, the social media, the application layer is predominantly US companies that we're leveraging, and then the entry of TikTok. So those geopolitics of decoupling then tend to be moot in our context with AI. But what that translates into practice remains to be seen, because a lot of this tends to follow a cut and paste model, erase Europe, add Africa in there, and then launch it, shake hands, and we call it a strategy. But is it representative of the not just the governments but other stakeholders who are supposed to buy into it and be guided by that in AI adoption? So there's a lot of that that wrestling that we don't, and jostling, I should say, that informs a lot of what is called African digital policy making. But I think what has been emerging more and more from African policymakers is that for them, the most urgent task is how to leverage digital to deliver dividends, addressing jobs, addressing climate change. We have a climate summit going on in Kenya right now. The big question would be, if you say AI, what does that have to do with the climate urgency that we have to do? So those practical questions still color and bring an interesting pushback to the typical geopolitical conversation on technologies.
There's one interesting thing that one thing I find particularly interesting about Africa as a continent is the number of languages and regional dialects that are spoken by people, often by groups that aren't very large. And although we sort of briefly touched on this at one point, I wonder if you think AI could help either bridge the gaps between communities or languages spoken, whether that's to help spread information or just, in general, help people feel better informed about what's going on around them.
More represented.
Yeah, exactly.
Oh, absolutely. That's where I can definitely, smile and give a positive outlook, because the diversity of languages also means diversity of knowledge, wisdom that hasn't been, captured, that can help us, reorder the world. AI technologies like the Common Voice project that Mozilla and others have been running can help us capture that knowledge, again, with the conditions that this is not just for extracted for some company somewhere to go and sell some intellectual property limited sort of like, bounded instrument, but will actually help us build a new commons that is more representative of the world and representative of a majority of a people who have not informed how the world is ordered today.
To shift it back to the United States for a bit, one of the fears swirling around AI right now is that it could further erode the public's trust in institutions here, especially as we have a democratic or an election coming up in 2024. Do you think, in some of the countries you spoke about, do you think that AI can actually help empower people to participate in the political process?
I think it can, but again, it's not just about the technology itself. I think AI is just the latest iteration of technology spread.
So it's too late.
It was too late. I mean, now that, that we can fact check after the fact, but if people were willing, there's a readiness to believe that speaks to other, discontentments that, the perfect opportunity arose to feed that. I wouldn't want to make it a causality, but there's absolutely something there that speaks to the fact that the way AI works is delivering in the way that society is already primed for it to operate.
Artificial intelligence has been used in Hollywood for years, but the recent boom in generative AI has sparked one of the biggest upheavals the film and television industry has ever seen.
The latest technology can generate scripts and replicate faces and voices of actors without them ever stepping foot on set. It's raised alarm among creatives who are concerned about how their work will be used and whether AI will render them obsolete.
Proponents argue AI can bolster creativity, not diminish it, by automating mundane filmmaking tasks that require more time and money when left to humans.
So on this episode of AI IRL, we'll hear from experts across the industry who have different visions of how artificial intelligence will transform entertainment and where that leaves human ingenuity.
If there's one thing everyone can agree on, it's that AI-generated films and TV will hit the red carpet sooner or later. The question will be, who gets the credit? Duncan Crabtree, Ireland, thank you so much for coming on the show.
It's a pleasure. Thanks for having me.
You're the National Executive Director and the Chief Negotiator for the Screen Actors Guild. AI has emerged as a key issue among Hollywood actors and other creatives, but it's been used in the industry for years. What is it about generative AI that poses such a threat?
Well, I think really it's the fact that the capabilities of generative AI really haven't even been tapped. The surface hasn't been scratched yet on them. And the idea that, that there could be an AI tool that could help do traditional editing a little more efficiently or provide some additional capabilities there is one thing. The idea that you could have an AI tool that's used to create digital replicas of performers and then actually convincingly create performances that appear as if they did them when they had nothing to do with them whatsoever, that is a sea change in the capability of this type of technology. And it's one that our members are hugely worried about, and rightly so. And frankly, all of us in this society should be worried about this kind of capability.
I mean, just to be super clear, just for anyone who's not aware of the technical requirements of doing something like this is the idea of essentially capturing an actor's likeness, potentially their performance style and their voice, and then saying, well, we've got that now, that's in the system. We can just essentially reuse that for whatever we want in future.
That's exactly right. And in fact, lest anyone think that this is some sort of overwrought concern or something that is just speculation, the studios and streamers literally proposed that they should have the right to do that in this negotiation. On July 11th, they gave us proposals in writing that said that background actors should be able to engage them to work for one day, pay them for one day's work, create a digital replica of them by scanning them, and then have the right to use that digital replica forever with no further consent and no further compensation. And they made a similar proposal for principal performers, that's like speaking part performers, for any kind of franchise.
Well, how about Indiana Jones, where Harrison Ford was de-aged using AI? What role should artificial intelligence play in Hollywood going forward?
When we came into this negotiation, we could have proposed just a ban on the use of AI as it relates to performers. We did not do that. We came in with 4 very complex and nuanced proposals that were designed to really let the industry use AI as long as it was being done with informed consent on the part of the performers affected and fair compensation for whatever's being done. So when we talk about things like de-aging, other types of uses, that's absolutely fine if it's done with the consent of the performer. And that's something that certainly, if using that example for the Indiana Jones movie, obviously they planned that out. That wasn't some sort of last minute surprise that they were going to use de-aging technology for that. And from what I understand, that was discussed with and approved by Harrison Ford. So, the kind of use of these technologies, when done with the informed consent of the performer, it can be helpful to production. And it's not something that we're opposing. What we're opposing is companies feeling like they have the right to just do that without getting any kind of informed consent.
And are these, as far as negotiations on deals and things are concerned, are these non-negotiables from your standpoint? And what other non-negotiables are there?
Well, I mean, the principle is non-negotiable. The principle that actors need to have informed consent over the creation of a digital replica and the use of that digital replica and fair compensation, that's not negotiable. Clearly, I mean, we need those are basic principles that need to be enshrined. The mechanism by which those would be carried out, absolutely is negotiable. We negotiated over it for 35 days with the companies. We would have been negotiating over it more since then if the companies would have come back to the table instead of having us be out on strike for 75 days with no discussions over these things. So, we don't come to negotiations saying, there are conditions on these negotiations or this and that are non-negotiable. Having said that, if the principles we're talking about are enshrined, we are very open to discussing the mechanism by which that happens, and we have been.
In terms of like the history of technological impacts on cinema and Hollywood, where does AI in this current debate sit in terms of severity? Is it unprecedented?
So these are, in our view, existential issues, and they're issues that we really have to address now, because given the developments in generative AI over the last 12, 18 months, we certainly can't wait another 3-year contract cycle to address them. We can't even wait a year to address them. I had 14-year-olds come up to me on the picket line at Disney saying how concerned they were about not being able to have a career as an actor because they felt like AI was going to take away their jobs. I mean, when 14-year-old performers are saying this to you, you really have to listen.
Unprecedented times, Jackie.
Definitely. Do you think AI will continue to be a sticking point in negotiations going forward?
We did make some progress during the first part of negotiations, but as I mentioned before, there were proposals put out right at the end of our negotiating period that were really inconsistent with the idea of informed consent and fair compensation. And so the only AI deal that we're going to agree to is an AI deal that reflects those principles. How it's implemented, still some bargaining to do, but those principles must be enshrined in the contract.
Do you think we're going to get replaced, Jackie?
I hope not.
Yeah, me too. Well, Duncan, thanks ever so much for joining us.
Thank you.
Absolutely. It's my pleasure. Thank you for having me.
Tim Weber, it's great to have an Oscar winner on the show today, so thank you very much for coming in.
Pleasure.
You're a visual effects supervisor, chief creative officer at Framestore, which people will remember from Harry Potter, Gravity, of course, the Avatar films. You've been behind a huge number of blockbusters over the years. So let's start big. What has the generative AI boom done for the visual effects industry?
I think the first thing it did is worry a lot of people initially, because everyone looked at it and it could do such amazing things that were so impressive in short clips, in demos, that we all thought, it's, our jobs are going. But quite quickly, we looked at it and realized there were lots and lots of limitations, and it wasn't going to totally revolutionize the world immediately, but it is still going to have a big evolutionary effect, almost revolutionary effect, I'd say. It has a lot of potential in a lot of different areas, and when it does apply to a certain process, it makes a big change. It typically can speed certain things up by factors of 1,000.
Yeah. So what are some examples of things that we might have seen on screen that has used some of the more advanced AI tools?
I mean, there's the obvious stuff where faces have been replaced with someone else. A stuntman has an actor's face put on them, using the deep face technology that we're all quite familiar with. But it is used, we developed a piece of AI technology that enabled us to, when we build a virtual creature or a virtual human being, we build them from the inside out. We build skeletons and then muscles and then skin, and the animator will move the skeleton and the computer will work out how the muscles move and how the skin slides on top of that and how the light reacts to it. Now, the process of doing that could take sort of 40 seconds. You make one move of the skeleton, and it could take 40 seconds to update all of that. But we were able to accelerate that process to make it almost immediate. And what that meant was an animator could move a character in some way, and they could see a genuine representative of how it was going to look in the final image, because all of the subtle details would change too.
Where does AI play a more intensive role, and where does it have more of a potential to kind of take off some of the more labor-intensive tasks?
Where it is taking off now, I would say, is in the early stages of working out. At the very beginning of a project, for example, we do concept design and we draw up how the director wants it to look. Now, tools like Midjourney can create images very, very quickly from scratch. But even there, they're not good enough to create our final image, but good enough for people to go, I like that bit and I don't like that bit, or I want it a little bit like this.
The initial inspiration.
The initial inspiration, yeah.
Thought provocation.
Thought provocation,
Okay.
yeah. We used to do it by searching the internet for existing images, and it was hard to find something even close. So AI in that space gets us quite a bit closer, but still a long way from what the concept artists can do when they can, juggle something into exactly what the director is after.
Hollywood actors and writers have been in intense negotiations with studios, and artificial intelligence has emerged as a key point of contention, specifically because they're afraid that their work, their image and likeness might be used to eventually put them out of work. Does a similar threat or concern exist among visual effects artists?
I think it will, there's a lot of people in our industry worried that they're going to be out of a job, and I think the job market will change, but it won't put people out of a job. And I personally, I believe the same is true in writing and acting. I think it changes the way things are done a little bit, but you can't currently. The more I look into it, the less I worry that it is going to replace us. It so still needs the human input.
One of the things I always think back at when I think of examples of amazing technological moments in film is Toy Story, back in 1996. Is there a feeling that we're at a similar point now, or is the hype kind of getting away from us?
Well, I think it'll be interesting. One of the amazing things about Toy Story is they took technology that was still quite nascent and they created a new form of films, computer animated movies. At the moment, there is no Toy Story equivalent for AI, and I think it might take a while and it may never happen, because one of the things about AI is it is used, as I've sort of described, in a number of different areas to help speed up little bits here and there. It's not like a whole new way. I mean, if we get generative video where you can do voice prompts and you can control the video and it will look sufficiently good quality, possibly there may be something new out of that, but I think that's a long way away.
In the case of visual effects, will it always kind of require this additional layer of technical expertise?
I think, and I'm talking about visual effects at the high end. What you know, where we work is right at the high end. I don't see that can happen at the high end. You know, you want to be led by a master storyteller, by a Steven Spielberg, you know, and it takes them years and teams of experts to help them craft their movie. The movie that will be crafted out of AI, and you know, look at what ChatGPT creates. It assembles all the words from the internet and spews out something that is plausible and is often useful and often correct, but not always correct, but is often very useful. But for it to, you know, that is different to being a perfectly crafted, original piece.
Using your imagination a bit, what are you most excited about when it comes to artificial intelligence and its potential to transform VFX?
I think there's a number of things to be excited about, but one of the big ones to me is how it can bring VFX to wider areas. You know, it can, because you can render very quickly, it could allow us to create what I'm going to call a volumetric movie. So, you know, say you're watching a movie, but one where it's like a 3D movie, but it's more genuinely 3D. It can encompass you, and you know, as you move your head, there's three-dimensionality to it. It's not just stereoscopic vision. So that would be a whole new way of showing movies. It would be all the more powerful.
As an Oscar winner, someone who's received an Academy Award, do you think there's a future where an artificial intelligence and I'll say itself, could be worthy of winning the award rather than a human being?
I mean, I think there's significantly far into the future, there is all sorts of possibilities. You know, if we get to the point where an artificial intelligence could be winning the Oscar, we're also at the point where an artificial intelligence could be the Prime Minister or the President or doing all sorts of other things, at which point I think we'll have an awful lot to worry about, and it may be great, but there'll be a lot to worry about.
Tim, thank you so much for joining us.
A pleasure. Thank you.
Edward Saatchi, thanks for coming on the show.
Yeah, thank you.
So you're the CEO of Fable, a company that's used artificial intelligence to create original South Park episodes. It was something as a proof of concept, but still pretty cool. You did it with a tool called AI Showrunner. Could you walk us through how that works?
Yeah, so, you know, we've been in AI for about 5 years, and every single year other than this year, we've always felt AI just isn't good enough to be funny, to really make a work of art. And this year, it really did change. And so we were still reading, articles and people saying, "Oh well, of course, it's never going to be funny. It's never going to really work." And we thought, well, actually, that's not what we're seeing, and we should maybe illustrate what we're seeing. And so we thought that creating the AI showrunner would be a good way to kind of wake people up to just how good AI has become. So we used as an example South Park, which is obviously an incredible television show, and very funny and very anarchic and irreverent, and not sort of an AI telling terrible stand-up jokes, but something really quite sophisticated in its comedy. And I guess you have to have a lot of understanding of like world events and like what's going on, and the satire of it. And so we thought that we'd create a tool to make infinite South Park episodes, just for our own research. And we created, I think, maybe 10 or 15 just to kind of illustrate the point and release them. We also worked with journalists so that the journalists could come up with their own story in a sentence, and also put themselves in that story, just to illustrate that you can do whatever you want. And yeah, I think people were both very angry that we did this during the strike, and very shocked that they laughed.
You mentioned the writer's strike just now, but before we talk about that more, do you know if Trey Parker and Matt Stone, the creators of South Park, saw any of the episodes that were made?
No, I don't. And we're huge fans of theirs. But I do think that the episodes were hopefully helpful to the conversation around the strike, so that more controls can be put in place around AI.
Right. And do you think they were then? Do you think that something like what you did was helpful in moving this debate forward?
Well, I think in any negotiation, more information is better, because you can negotiate not in a fog of war, but in a real sense of understanding. And the timing of the strike meant that it was happening at a moment when there was a lot of fog of war around what is AI going to be used for. There were reports of studios literally scanning extras and then saying, we now have the rights to your scan forever, which is completely disgusting and insane. And so there was a lot of worry. And also there was some complacency around, well, of course, AI can't write anything good. And so I do think that giving more information means a stronger hand for the negotiators to say, we want to have AI only used with the permission of the artists, not producers saying, okay, well, why don't we just get rid of why don't we get rid of everyone? It'll just be us, the producers, talking to our computers, and we'll be so profitable. We've got to make sure that that doesn't happen.
Okay, but the South Park episode wasn't just a stunt. You're actually producing an AI-generated TV show called Thistle Gulch, and it's sort of like set in a simulation of a Western town where AI characters are exploring the Wild West. What kind of effort does a project like that really take when you're using AI?
Yeah, our goal is to make AI people. And so that's why we build simulations. And in the process of building that, we realized that actually having a sort of reality TV of what's going on in this simulation, a little bit like the Truman Show, would be really cool, and that you'd get great results. So we didn't just create the ability to make episodes of South Park. We actually made a simulation of the town of South Park. And those episodes represented things that were happening in South Park. And then with Thistle Gulch and with some of the other simulations that we're building, you'll be able to see both inside the simulation and also get reality TV episodes of what's going on with your AIs. Just as in the Truman Show, you got those episodes coming out of that fake world that Truman lived in.
Let's talk about the profits behind making an AI-generated television show versus if you were doing it the traditional way.
Yeah, obviously the costs are much lower. I think the exciting thing for us with Showrunner and allowing people to make new episodes of simulated shows is that creators could actually start to earn money. That's our key metric: is how do we get the top creators, so the top 5% who create really good new episodes of shows, how do we make sure that this is financially good for them?
It makes me think about those that go to school to study film and how to make TV shows, and whether AI will just render that obsolete. And brings me to the question of, like, what is the creative element? Where's the human component in creating shows if AI is making it super easy? Where do you see that going in the future?
Yeah, I think the area that I'm the most excited about is AI movies, so feature films entirely made by one person. And Orson Welles, maybe the greatest filmmaker of all time, said, I've chosen a terrible life in that I spend 99% of my life hustling to make money or to get money from the money men and women. I have to be nice to all these people that I hate. And it's not a life. I get to do 1% of my time doing something that I love. And I'm very excited for films, the making of films, to become more like the making of novels, more like the making of paintings, where one visionary, a kind of writer-director who's got a vision in his or her head, can, with AI, actually bring that to life.
Sorry guys, all these people behind the cameras here, like, we don't need you anymore. Apologies. Me and Jackie are going to do this on our own.
Artificial intelligence is ushering in a new era of scientific research. From biology to physics, AI-driven tools and techniques are poised to expand our understanding of the world.
Forms of artificial intelligence have been used in science for years, but the rise of generative AI is unlocking greater speed and accuracy.
AI-driven simulations have the potential to streamline the search for new drugs. And in genomics, algorithms can sift through genetic information, identifying patterns and disease markers that would have otherwise taken years to uncover through human efforts.
And it can help with hypothesis generation by analyzing papers, suggesting new research directions, and even predicting potential outcomes.
So in this episode of AI IRL, we'll explore what having an AI assistant in the lab will look like, and what science moonshots AI will bring closer within our reach. Sam Rodriguez, thanks so much for coming on the show.
Of course, yeah. Great to be here.
So you're a scientist and an entrepreneur that's spent his career developing new technologies that help neuroscientists better understand the brain. You also just started a new organization called Future House that's backed by ex-Google CEO Eric Schmidt that's dedicated to science moonshots using AI. Why don't you talk to us about some of the breakthroughs you're hoping to achieve?
What we're interested in doing is building an AI scientist. Okay. And, essentially what that means to us is building an AI to which you can delegate some of like the tasks of science as scientists. So I'm a scientist, right? Like you said, I've been a neuroscientist, a bioengineer. I actually started out originally as a physicist. Throughout all these different areas of science, basically, you encounter situations like, for example, maybe you have an idea and you really want to know, like, has anyone done this before, right? Has anyone studied this before? Has anyone tried, building this device or like conducting this experiment or whatever? And you literally like cannot go and read the entire literature on your own, right? Or like, another example, you collect some data set and you have like 100 different ideas for how to analyze it. And you literally don't have enough capacity as one person to go and like analyze your data set in all the different ways that you can imagine doing it. Science is like really bottlenecked by like, our ability to go and do these tasks. And so our idea is that actually we're getting to the point where we're going to be able to build AIs that can like do science themselves, that can assist us with tasks like analyzing data, like going and searching the literature, et cetera. And that this will lead to a major speed up in the pace of research throughout science. And so we're really focused on biology, but I think that the impacts here will be everywhere from like, physics, chemistry, like climate, energy, like basically all areas of science are going to be touched by the AI scientists that we're trying to build.
Future House is a nonprofit organization. Is there a reason you didn't want to do this as a private company?
Our 10-year mission is to accelerate the pace of discovery and to make cutting-edge access to cutting-edge scientific expertise like available worldwide. That is not a mission that will necessarily yield a profit in the next 10 or even 20 years. It might, but it might not. If we were for profit, we would get pushed into making a drug really, really fast so that we could provide returns to our investors. And obviously drugs are important, but we think we can have way more impact if we pursue this longer term vision. And we're lucky enough to be backed by people who want to support us in doing that.
So let's say I'm a scientist. I have my AI companion helping me crunch some of the numbers. Where do I fall in the scientific process? Where do humans' role come in?
At the end of the day, AI is a tool that like allows us to do the things that we want to do better. The fundamental thing that humans will always do is decide what they want. Right. So if I'm a scientist, I will be saying, hey, I would like to investigate this. I would like to study, for example, how neurons are connected to each other in the brain. And I want to test like specifically these hypotheses. And then you'll have your AI assistants or the AI scientists that you're working with that will go off, and you'll be able to direct them in particular directions to go and come up with hypotheses or go through the literature and come up with experiments, like plan out those experiments, execute those experiments, et cetera. But like the humans at the end of the day are going to be like the directors, right? The orchestrators. They're going to be the ones who are deciding what needs to be done, evaluating the evidence and figuring out basically where they want to put their resources.
Talk to us about some of the limitations and also the risks of using AI in science, because I know ChatGPT is only one example, but it's still fairly, in the early stages, and it's inaccurate sometimes. The stakes are much higher when it comes to things like drug discovery.
Oh yeah, and I think that the inaccuracies that you need to worry about, it's like whether these tools can be used for like, antisocial purposes, right? Whether people can use them to come up with bioweapons and things like that. Huge, like really serious risks here, and these are things that we think about a lot. And so I think the main thing is making sure that you have partnerships and dedicate a lot of resources whenever you build a new AI-powered tool to testing how it can be used nefarious or otherwise ill purposes, making sure that you put safeguards in place so that it cannot be used in those ways.
When it comes to bioweapons, that sounds terrifying. How big of a threat is it right now with AI in its current form?
It's difficult to make bioweapons for like the same reason it's difficult to make drugs, actually, that like we really don't understand human physiology. We lack a lot of basic information about human physiology, and so therefore it's like very hard to cure disease. It's also like very hard to develop like targeted weapons that can like mess with your body. So I'm not meaning to minimize the risk, but I think that like this is not something that I am personally like acutely worried about in the near term.
So it's not like someone in his garage has the potential of building a biological weapon.
Yeah, I think at the moment that is highly unlikely. We have a long way to go before we're at the point where someone could use the AI to build a biological weapon in their garage in a way that they could not do without the AI, right? So like already, I mean, you can search Google and you can, try to figure out how to make a biological weapon in your garage. And people could do that before they had ChatGPT. And there are people studying right now whether ChatGPT makes it easier or not. I think that there's a long way to go before it becomes like really, easy enough that it's really scary.
And I think that's really useful because you help us paint that picture that this isn't about throwing an AI at a problem and suddenly solving a question that we couldn't solve before, but it is about speeding up the process that is involved in trying to answer that question. And I think that's really useful exactly to keep in mind, right? And that's what we're talking about almost with bioweapons. Like it's all part of that same argument that we have so much to do. AI just helps us get through some of that stuff, not actually solve the problems.
It helps us get through it, and it will help us get through it much faster. Building an AI scientist will not just help science, it will help AI also.
What is the next frontier?
The next frontier after the AI scientist.
Yeah, after you solve all this AI scientist related stuff, it sounds like a walk in the park. So
yeah, we'll be, check back in a few days. We'll probably have finished it, right? Accelerating discovery research, after we have access to an AI scientist that will make science move much faster, we need to understand how fundamental biology works so that we can cure diseases. And, I'm hopeful that there are many, many diseases that we currently struggle with that we will have treatments for or cures for in our lifetimes by virtue of the acceleration that will come from, from combining AI, from bringing AI into science. So that's thing number one. And then thing number two is on the other side, once we have an AI scientist and people are able to benefit from access to that expertise, I really hope that the quality of medical care, for example, will get much, much better worldwide.
Sam, thank you so much for joining us.
Thank you. This was great.
much for joining us.
Great to be here with both of you.
So you're President Biden's scientific advisor, and you also lead the Office of Science and Technology. You also spent a lot of time at DARPA, which is the federal agency that developed technology like GPS and the foundations of the internet. Many people don't know that. And that's because government today isn't exactly known for being at the cutting edge of technology. Can the rise in AI mark a change in that, where government plays a bigger role in driving innovation versus playing catch up to the private companies that are developing it?
Well, AI is changing a lot of things right now, and that's why President Biden's been extremely clear that it's one of the greatest opportunities of our times, and it's going to come with risks that we have to manage. And the work that's underway, the White House has been driving a lot of forward action here in this area. That work is about managing risks, but it's also about seizing the opportunities. And some of those big opportunities from AI are about the research that continues to be funded by the federal government.
So do you think that government can be a driver of innovation in this new age of AI versus just relying on private tech companies to come up with that technology?
Well, we're seeing a surge, and we're very happy that that surge in AI technology has come from American companies. It builds on the shoulders of many, many, many decades of publicly funded R&D, and now what the companies are doing on top of that. So I very much see it as a system where all the pieces have to work together. I spent half of my professional life in public service, but the other half in commercial technology, and every big thing this country has ever done has taken all of us, and that's certainly going to be true for seizing these opportunities from AI as well.
What are some of the moonshots that the US government is currently working on that could incorporate AI in advancing them?
President Biden likes to talk about this being the only country in the world that can be defined in a single word, and that word is possibilities, and that's what science and technology is all about. So I'll mention a couple of areas. One very important area of focus is changing health outcomes. And in this area, the President and the First Lady last year reignited their cancer moonshot. It set an extremely aggressive goal of cutting the age-adjusted cancer death rate by half over the next 25 years. That's about double the rate of progress that we've been making on cancer. The other goal that went with that is to change the experience of people and their caregivers and their families as they are all going through this cancer experience. And if you think about it, who isn't touched by cancer? This is one of the most foundational things, and an area where everyone in this country can pull together for a moonshot goal that really, really matters. Well, how are we going to do that? Well, to do that, we need to prevent more cancers. We need to detect more cancers quickly so that they can be caught. And we need better treatments for when cancer does move forward. And in every one of those areas, from public health to developing new drugs to tailoring clinical care for an individual, every one of those is an opportunity for AI to help accelerate progress in some very dramatic ways. So that's one huge example. I could tell you a similar story about dealing with all the effects of climate change as they're coming, modeling extreme weather and helping the country be more prepared for resilience.
Could you expand a little bit on your outlook on how that could be achieved?
Well, let's step back for a minute. What these AI systems are so powerful that they can seem magical, but really what they are doing is statistics at an extraordinary scale. So large language models that led to chatbots are about training these systems on human language so that they can build statistical estimates of answers to your prompts. When you're thinking about something like weather, that's another very, very, very complex system. Think about how huge the atmosphere is that surrounds the world. Think about how complex the calculations are when we run simulations to try to estimate how the weather will progress in the short term. And then think about how hard that problem is when we're thinking about climate effects over many years and many decades. That is the complexity that AI helps wrangle because of this new approach of training a computer on a lot of data so that it can build better estimates of what could happen in the future. And harnessing that power is going to lead to some very practical advances, we think, in both understanding weather better, but also understanding long-term climate effects. That's what's going to help us be more prepared and more able to deal with what's coming.
And obviously, the US is a huge key driver in developing AI technologies. But I'm curious, as a non-US citizen, who do you see elsewhere in the world doing interesting things?
Well, this is a global technology. First of all, again, AI, it seems like magic, but it really is human beings and corporations that are building compute, that are training it on data. They're using algorithms that are developed in research communities and widely shared. And so the ability to build AI of various sorts, it happens around the world. And in fact, I think that's good because there's so many applications globally that we'll want to pursue. But of course, it does mean that it really comes back to the question of what kind of a future we're going to build. And if you think about it, it's such a powerful force right now. Every country around the world is using AI to build a future that expresses their own values. And I think this is why it is so important that like-minded countries with democratic values and norms come together and agree about how we're going to build the rules of the road for AI.
You're advising President Biden on this new age of artificial intelligence. How is the Biden-Harris administration thinking about AI?
The starting point for this administration is what the president talks about every time he talks about AI. He sees its power and its potential. And every time he talks about it, you can hear his optimism about all the things that it's going to bring. And he's very clear-eyed that that doesn't come for free and that managing its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
Anima and Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand, and AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
if you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you. It's
Thank you,
been
Maud.
fascinating. Yeah. Thank you for taking the time.
Yeah.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy. We're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? The China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. It's AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
This is Horizon's Middle East and Africa, our top stories this morning. President-elect Donald Trump vows to impose additional tariffs on China, Canada, and Mexico, saying they need to clamp down on migrants and illegal drugs. The dollar rises and Asian stocks drop on the prospect of an additional 10% levy on Chinese goods and 25% on North America's regional neighbors. Plus, Israel and Hezbollah are inching closer to a ceasefire deal that may be concluded in the coming days. In the meantime, the two sides continue to fire artillery and rockets. Good morning. It has just gone at 9 a.m. across the Emirates, 7 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizon's Middle East and Africa. Africa. And really the big story of today are those potential tariffs that we did get from Donald Trump, reverberating again across the markets. If we just take a look at where we're at right now, it's proving to be a risk-off day as the markets react to that news from the president-elect, but not before Monday, which did see a positive day for U.S. small caps. Clearly, we're seeing the Russell 2000 down, though, right now. The Bloomberg dollar, though, trading in the green, which is significant because we are seeing the currencies of those countries that are targeted by Trump, including China, Mexico, and other trading partners, weaker. Right now, the Bloomberg dollar up just about 0.2%. The U.S. 10-year we have on the board as well. It's little changed right now at about 4.29% there, but it did end Monday lower than the 2-year note. That was the first time we saw that move since early September. We're seeing the news that Trump nominated Scott Bessent as the next Treasury Secretary, sparking a rally broadly across the bond market with long end yields leading those gains. The 2-10 curves also inverted again for the first time since September, as we mentioned there. And we also have Brent crude on the board, up about 0.4%, just over 73.31 cents a handle, with the price action really following the news of a potential Middle East ceasefire. We also received word about that OPEC Plus meeting that's coming up in just a few days now, being online. But I do want to bring you this chart over here. We're mentioning the significance of the impact of this potential tariff. And this is just a look at the 3 countries that are targeted. They make up over 40% of the U.S.'s total imports as of the second quarter of 2024, which is about $812 billion, just to understand the potential scale of this impact. But let's check in on how markets in Asia are faring, how they're potentially responding to the news. Avril Hong is standing by in our Singapore studio. Avril, what do you have?
Oh, well, Jen, it is mixed in the region as investors react to the tariff man, right? Trump's plans on these levies for its top trading partners. It's risk off. So we're seeing Japan, South Korea, Taiwan. Those are the markets that are underperforming. But it's really interesting to see Chinese shares managing to clock some gains on a day like today. Some of our colleagues have highlighted that turnover is low, so there's not much strength behind the gains. Others have attributed the expectations of fiscal stimulus. Now that we have this plan for China tariffs, that might be fueling some of the climb in Chinese stocks. I also highlight what we're seeing on the Nikkei today. It is the underperformer. And this is, as some of our colleagues have been highlighting on the MLive blog, you think about how Trump is essentially wasting no time in, quashing potentially these global trade norms. That's going to put further pressure on Japanese export-related names, particularly the ones with really high overseas exposure. And there's an added headwind today for some of these Japanese names in the climb in the Japanese yen. And this is following on from Prime Minister Ishiba's comments on wages. So this is what you're seeing for now in the Asia Pacific. Jen?
Thanks so much, Avril Hong in Singapore for us. We'll check back in with you in just a bit. Let's go back to our top story, though. President-elect Donald Trump has threatened more tariffs on China, Canada, and Mexico, citing concerns over migrants and illegal drugs. Let's bring in our chief North Asia correspondent, Stephen Engel, who is joining us. So, Stephen, this came as quite a surprise for the markets. We anticipated this may come. But what do you make of the timing of this and also the scale at which Trump is saying he will impose these tariffs?
Well, I think the president-elect is wasting no time also to get that threat out there. We all know, and we've talked about it ad nauseum, about the pledge of 60% tariffs on Chinese goods all across the board once he takes office. And he says tariffs will be at the top of his agenda as soon as he does take office on January 20th. But there's been a little bit of measured dare I say, optimism that perhaps that 60% threat could be negotiated down with the Chinese. He's just getting a jump on that as well to say that he was going to add 10% tariffs on Chinese goods if China does not respond in the way that he is hoping on the issue of fentanyl. Now, fentanyl is something that China has never admitted that it is supplying to the United States or even through Mexico. Xi Jinping did agree with Joe Biden at the sidelines of APEC in San Francisco to essentially work together to battle the supply chain of precursors to that drug. But again, China has said it has been doing everything it can in those commitments. But Donald Trump says it's not enough. 10% tariffs on top of the 25% tariffs that are already in place on $300 billion worth of goods from China to the United States, and on top of any more additional tariffs that he's pledged on the campaign trail, up to 60%. So we're talking perhaps much more than that, but again, that could be negotiated down. So the more interesting part of this, perhaps, since we've already been prepared up here for the tariffs on China, is his pledged action against his two closest neighbors, Mexico to the south and Canada to the north, saying there'll be 25% tariffs on day one in an executive order if Canada and Mexico do not do their part in securing the borders and also preventing the illicit trade across those borders of illegal drugs like fentanyl.
Right. Still waiting to hear the reaction from a number of leaders. Our chief North Asia correspondent, Stephen Engel in Hong Kong, starting us off. Stephen, thanks so much. Let's continue on with the story. Donald Trump has roiled markets with a threat to curb global trade flows with tariffs on all products from Mexico and Canada. For more on the market reaction, let's bring in Bloomberg MLive strategist Mark Cranfield, who's joining us now. Mark, we mentioned the currencies are having quite a reaction, of course, the dollar, but also some of these other countries that are affected. What would you say, though, is moving the most post this announcement?
Well, we're living up to the fact that we realize that when Donald Trump gets back in to the White House, people who can remember 4 years ago, it's headline fever time for foreign exchange traders, and we're getting our first dose of that today. It's a bit of deja vu for people who were around during his first administration. In Asia especially, we were getting bombarded with these headlines of whether it's about trade tariffs or other matters. They would often come early in the Asian session, and we got a big taste of that today. Is moving the currency markets all over again. There's a lot of irony involved as well, because really Donald Trump has said before that he actually really prefers a softer US dollar, not a stronger one, but actually he's getting a much stronger US dollar because of the initial reactions to this, whether it's the yuan getting weaker, the Canadian dollar, the Mexican peso. They're all reacting very negatively, and traders are using that as an excuse to buy US dollars. So he's not really getting what he wants in many ways. He's certainly roiling the markets. He's creating plenty of volatility. We can expect a lot more of it from January next year as well. So as one analyst recently said, if you're good at trading headlines, you're going to love the next 4 years. And this is exactly what it's starting to feel like. Intraday and short-term traders are really in the best place. If you're a long-term trader, much more difficult.
And Mark, he hasn't even been inaugurated yet. I think we should remember. Let's take a look at what we've seen in treasuries, because on Friday we did mention the reaction in the bond market to Scott Bessent being named as Treasury Secretary. Have we seen a complete reversal, though, of some of those early moves?
Not a complete reversal, but certainly traders have been backing away from their initial thoughts yesterday. That first blush, when they took it to Mr. Bessent, they thought he was going to be a fiscal hawk, that he was going to help to restrain American spending. That would be good from a treasury market point of view, because it would probably help to keep long-term yields down a fair amount. 30-year yields dropped quite significantly yesterday. We're starting to see some of that dialed back, because it looks as though, in certain respects, Donald Trump is overriding some of the things that Mr. Bessent had to say yesterday. So there's a conflict here, and traders don't like it. When they hear people from the same administration, whether it's central bankers and finance ministers or whoever it is with a lot of authority, when traders see us with a conflict between some of the biggest voices on the same team, supposedly, they will take defensive action. In this case, it's bond yields starting to go a little bit higher. So even though equities are pretty soft, we've seen a sell-off in S&P markets. It has recovered a little bit, but we did see some pretty big weakness in the European futures as well, and that would normally be a haven bid for treasuries. We are not seeing that. So you can tell that the bond vigilantes are not in full force yet, but clearly they're watching very carefully what Mr. Trump has to do.
Yeah. Bloomberg MLive strategist Mark Cranfield, great to get you on this morning. Thanks so much for joining us. Now, still ahead, Israel and Hezbollah are inching closer to a ceasefire deal that may be concluded in the coming days. We have the details next. This is Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaccia in Johannesburg. Now, Bloomberg has learned that Israel and Hezbollah are inching closer to signing a ceasefire deal that may be concluded in the coming days. But the two sides continue to fire artillery and rockets at one another. Israel's Security Cabinet is expected to vote on an agreement later today. For more on this, Bloomberg's UAE Bureau Chief Dana Quraish is joining us now from Dubai. So, Dana, what do we know so far about the ceasefire deal and where the gaps still are from the sides?
Good morning. Yes, we know that it is becoming very likely that Israel would agree to a ceasefire agreement with Lebanon, particularly Hezbollah. We know that the cabinet, the Security Cabinet, is meeting tonight and that there will probably be an agreement. Now, this has come almost 2 months after negotiations have started. We were here about a month and a half ago in October when Israel agreed to a U.S. and France proposal for a ceasefire agreement, and then we saw Israel not backing this deal. So there could be some sort of, backing out of the deal by Israel. There is some opposition among Israeli officials to that deal. So we want to be cautious, especially in the Middle East. We saw a lot of negotiations for ceasefire falling, not collapsing and not getting where we want. So there is a likelihood the ceasefire agreement will take place. It's a 60-day ceasefire where initially Hezbollah has to withdraw from the border, which is the Litani area, from the border with Israel, and seeing the Lebanese army and UN peacekeepers deploy there.
And Donna, we know in the past there have been disagreements, obviously, about some of those terms you just mentioned. Are we likely to see some of those disagreements collapse this potential for an agreement now?
I mean, it's hard to predict that, right? There were things that Lebanon wasn't 100% sure of, the Lebanese officials, and then they eventually agreed to it, which is, of course, Israel's right to defend itself in case there is a violation. So reports said the agreement now has that clause in a way that also guarantees Lebanon's right to defend itself, but that Israel would do that as well, meaning strike Hezbollah infrastructure or strike Hezbollah group if they see a violation of course, the UN Security Council Resolution 1701. Other obstacles could be from Israel's side, because Lebanon, as you know, is completely very much desperate. Lebanon and Hezbollah as well. They've been under massive pressure, including on strikes on their infrastructure, missile storage, and all of that. They are in a very critical point, and they probably want the ceasefire more than Israel.
Dana Quraish, Bloomberg's UAE Bureau Chief. Dana, thanks so much for joining us. Now, on the ongoing Lebanon and Gaza conflicts, they're heavily weighing on the Israeli economy. Israel's central bank has left interest rates unchanged at 4.5% as it weighs a war-related economic slowdown as well as quickening inflation. Israel's currency has advanced as optimism builds around a ceasefire with Hezbollah in Lebanon. Joining us now is Shumel Abramson, the chief economist at the Israeli Finance Ministry. So, Shumel, thanks so much for joining us. Let's just start here. Is your expectation that this war and the prolonging of it will continue to hurt the economy? What effects do you see the continuation of this conflict having on the economy?
So, good morning from Jerusalem. First of all, we do expect the conflict to wind down, and our base scenario actually expects a renewed growth next year. We expect above 4% growth next year in our baseline scenario. According to what we also hear in the news, this is probably a very realistic scenario. So after a quite tough year for the Israeli economy, which we weathered well, but still, of course, had its tolls, we do expect a new positive year.
What is giving you that optimism, Shumel?
We can see it through various indicators. We can see the way investors see the Israeli market. We've seen that in the past year, our stock exchange has been, stock markets have been trading at record levels. We've been seeing an increase of roughly 20% in the prices of stock markets. We've been seeing in recent weeks a lowering of our spreads, lowering of the CDS, and we can see all the indicators supporting this very positive outlook. We can see it. You mentioned the currency, so the Israeli shekel, the currency is trading at stronger levels than it has been on the eve of the war and so forth. So there's a bunch of indicators that support this view.
What would be potentially a risk, though, to that view, Shumel? We mentioned how there have been false starts in the past for resolving this conflict. If this conflict, in fact, does continue, could that be a risk to this renewed growth that you're seeing for 2025?
Absolutely. Absolutely. It will all rely and almost solely rely on the way things end up on the security front. There's still issues need to be done and agreement need to be dealt with. The situation with Gaza, there's the issues with Iran. Of course, there's many other question marks beyond the situation with Lebanon, which we hope will also be resolved. But there is still substantial uncertainty that needs to be resolved.
What do you think for an investor, from an investor perspective, the uncertainty that is still not resolved? Is there something, messaging perhaps from the government, that could give investors renewed confidence and optimism like you have?
Absolutely. So as we've been seeing over the years, the Israeli government has been very, very keen and very dedicated to fiscal responsibility. And we see that same story this way. These days, the government has just approved a budget for 2025, still yet to be approved at the parliament. But the base scenarios, the base figures, the forecasts and the basic planning suggest a deficit that will stabilize our debt to GDP and will eventually enable the debt to GDP go back to its previous levels. So that's a very key component of our policy to fiscally conservative. That's one thing. And then there's a bunch of fundamentals, very strong fundamentals that we've seen already in this past year that supported our ability to this crisis, this war, substantially, despite the very substantial needs of financing. We have a central bank with ample levels of foreign reserves, for example. We have a very strong financial base and so forth.
But you mentioned the budget, Shumel. Do you believe that it can actually pass Parliament? I mean, that's one of the concerns here. And if you say that is contingent on renewed optimism, is it possible that we see some conflicts in Parliament to actually getting this over the line?
We are definitely positive that it will pass in the Parliament. Naturally, the parliamentary process is always somewhat tough with negotiations, but we have confidence that it will pass fairly similar to the way the cabinet has proposed. Yes, at the end of the day, this is a coalition parliament that the cabinet, the government has quite strong control over.
And then finally, Shamil, I mean, your expectation for the credit rating for Israel. Again, you're quite optimistic about what 2025 can hold for Israel. Do you expect the credit rating to reverse itself from some of the downgrades that we have seen?
Well, eventually, yes. I don't know when it will happen. This is the credit ratings decision, of course, and they will evaluate as they do all the time. But eventually, yes. I think that definitely, at least for some of the credit rating agencies, the scenarios they put weight for, high weight, heavy weight, did not fulfill and are not expected to fulfill. So I think that definitely in the medium run, we will see improvements also on that front.
All right, we have to leave it there. Thank you so much, Shamil Abramson, the chief economist at the Israeli Finance Ministry, joining us there from Jerusalem. Now, coming up, Zimbabwe's chief debt negotiator says he's determined to clinch a restructuring deal before the end of his term at the African Development Bank. We'll discuss the prospects for an agreement next. This is Bloomberg.
Your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Debate over a potential U.S. rate cut in December is ramping up. Minneapolis Fed President Neil Kashkari told us what he's watching for.
Right now, we know that inflation is somewhat above our target. It's running at around a 2.5%, 2.6% run rate right now. I have some confidence that it's gently trending down. And right now, the labor market remains strong. The question in my mind, the biggest question is, where is the neutral rate environment? You know, we've had relatively high interest rates relative to the prior 10 years. And the U.S. economy has continued to grow with great resilience, and the labor market has been resilient. And so how do I reconcile the fact that the policy rate has been relatively high and growth has been sustained? That suggests to me that perhaps the neutral rate environment is higher than it was in the past, and that perhaps monetary policy is not putting as much downward pressure on the economy as I would have expected. And so this is what I'm trying to understand right now, is how much downward pressure are we putting on the economy, and what is the path for inflation? But right now, knowing what I know today, you know, still considering a 25 basis point cut in December, it's a reasonable debate for us to have.
Why not pause? You talked about how resilient the economy is. You talk about how resilient the labor force is. You talk about how resilient all the factors are. And add to that, we have, this rally in the stock market. Why not just pause?
Well, you're making good points that would argue in favor of not cutting rates. On the other hand, if I look at the underlying components of inflation, goods inflation has fallen all the way back down to pre-pandemic levels. Services inflation is trending down, and that's tied to wage growth, and wage growth is slowly trending down. And what's left is housing inflation. Housing inflation is still high, but if we look at forward-leading indicators of where housing inflation is likely going, and that's the inflation of new rents, that new rental inflation has already come back down. So that suggests that housing inflation ought to come back down. Ultimately, we want to get inflation back down to our 2% target. We're not aiming to undershoot it, and so we do have to make some judgments about what is the path ahead for inflation, and that's going to be an important determinant on what we do with monetary policy.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Horizon's Middle East and Africa, our top stories this morning. President-elect Donald Trump vows to impose additional tariffs on China, Canada, and Mexico, saying they need to clamp down on migrants and illegal drugs. The dollar rises and Asian stocks drop on the prospect of an additional 10% levy on Chinese goods and 25% on North America's regional neighbors. Plus, a booming services sector sees Nigeria's economy grow faster than expected in the third quarter. We have more on that in a bit. Good morning. It is just gone 9:30 a.m. across the Emirates, 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. And the markets really reacting to what we heard from President-elect Trump. As we can see on the board here, what we saw on Monday, though, U.S. equities ended the day slightly higher. Right now, we're seeing U.S. futures little change, but the Russell 2000 hit a new record high on Monday after retreating a bit to the close right now. We're seeing some downside. The 10-year yield is also up here on the board. It is little change right now at about 4.29%. But Monday did end lower than the 2-year note. It's first time doing that move since early September. We also have Brent crude on the board up just over 0.2% there at about $73.21. $73.21 a handle. This is coming after news of a potential Middle East ceasefire agreement, which pushed the commodity lower. We also heard from OPEC Plus on Monday announcing that it will hold its next meeting online. And an Iranian official actually told a state-run news agency that there's little scope to increase production. And next year, we'll likely see an oversupplied market, which we've been talking about for quite some time. Also have the Bloomberg dollar up here, rebounding strongly on that Trump tariffs news, up just over 0.2% there. That also sending currencies of China, Mexico, and other trading partners weaker now. And I want to bring you this graph here. The three countries I just mentioned there make up over 40% of the U.S.'s total 812 billion imports as of the second quarter of 2024. Just to give you some impact and potentially understand the scale of what those potential tariffs could impose, this is just a look at some of those countries. Potentially, if we do see more of that reaction coming, we could see even greater impact going ahead further. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, Asia shares are mostly lower, except in China. Slight gains there. But I also wanted to highlight what we're seeing in the currency amid the greenback resurgence. The renminbi is getting hit as well. It's squarely in the crosshairs of Donald Trump. And it's really interesting to see how Chinese authorities have recently been seeming to ramp up support for the currency via the yuan fix. If you look at the fix today versus the traders' estimates about 400 pips, it's not a lot. But versus where offshore yuan had been trading up about 700 pips, that seems quite aggressive. And some of our colleagues, we have MLI's Mark Cranfield already highlighting that the last thing that China wants to see when it's trying to stabilize the stock market is a renminbi in free fall. So keep that in mind as we see the support from the PBOC on the Chinese yuan. Aussie also in focus, steep losses earlier, pairing some of that now. This is, of course, an economy that has its fate closely tied with China. Jen.
Avril Hong in Singapore. Avril, thanks so much. Now let's switch from Asia to Africa. Zimbabwe's chief debt negotiator is pushing to clinch a restructuring deal before his term as president of the African Development Bank concludes next August. He was responding to Bloomberg questions at a debt conference held with creditors in Harare. Let's speak with Bloomberg's Ndiro Oganga, who has been following this story. So, Ndiro, tell us more about the situation and what we heard.
Morning, Jen. So Dr. Adesina is hell-bent on ensuring that this restructuring is done by the time he leaves office. However, he has his work cut out for him. If we look at Zambia, it took 4 years for them to get a deal, which goes to show that these talks can be painful, long, and tumultuous. But he's determined. He says that we need to get Zimbabwe to a good place before the end of his tenure. And it's really important because he was speaking at a debt conference where creditors were there to mean that some lessons could be exchanged, some headway could be made. And he also said said that AFDB may tap into the Africa Development Fund, which is always used to help clear arrears for vulnerable countries. This has been done for Somali. It has been done for Sudan also. And they're going to place a request to have it set aside during the Africa Development Bank's 17th replenishment to allow for resources to be made available to help Zimbabwe clear its piling arrears that has been mounting for years. The president also says that the country is currently in negotiations with IMF for a staff monitored program. And this is crucial because it's a very necessary step in the debt restructuring talks. The only downside to this is that these programs come with very tight reforms which are likely to affect the vulnerable people of Zimbabwe. This is a country that is grappling with low wages, inflation is high, their currency is not stable, unemployment is high, and now drought has ravaged them and there isn't enough food in the country. The import bill is really, really high. So the government will be working, even as they're looking for this program, to ensure that their vulnerable people are protected.
Right. And what exactly, Andiro, are we hearing from the government in regards to this debt restructuring? You mentioned the difficult situation that the country is already in. What can the government do? What are they looking to do?
Jen, the first step will be reimbursing white farmers who lost their land in the year 331 million. And as a sign of good faith, about $35 million has been set aside and payments are set to begin this year. And this debt restructuring is very crucial because the arrears have been mounting since Zimbabwe defaulted and they've been locked out of the international market. As a result, they're not able to borrow from multilateral lenders such as the IMF, and they're forced to resort to their central bank to fund their borrowing needs. This has put a lot of pressure, funding inflation, and also jeopardized all the efforts that they've tried to put in place to have a stable local currency. So that is why we saw the government enlist the help of the Africa Development Bank, and they want to get these talks done. They want to get it out of the way. And Dr. Adesina has likened this mounting arrears to trying to run uphill with a backpack full of sand. It's a really, really difficult task. He says it's high time that this anomaly is cleared and Zimbabwe is given a new lease of life, not just the economy, but the people of Zimbabwe.
Bloomberg's Andiro Ganga joining us from Kigali on Zimbabwe. Andiro, thanks so much. And now let's turn from Zimbabwe to Nigeria. And joining us now is Bongo Adi, who is a professor of accounting, economics, and finance at the Lagos Business School, to talk to us about the expectations that we were expecting with Nigeria's GDP and what we actually got. Bongo, thank you so much for joining us. Give us your initial reaction to this print that we got. It rose more than most economists expected. Are you in that camp that was surprised as well?
Yes, I am really surprised. Not just me. A lot of people, many economists and many observers of the economy in Nigeria are really surprised because if you consider the other macroeconomic indicators, be it the interest rates, which has been very high and hampering investment in the risk sector, or the high level of inflation and stable exchange rate is also very high, which has actually constrained, producers. So it will be difficult. I mean, it's really a surprise that the economy turned up at the level that they gave it, 3.44% or thereabout, which shows that the economy is resilient. But then I think what's happening is that some sectors which have low, employment potential and capacity driving the growth, such as transportation and of course financial sector, which has always seemed to have not really being connected strongly with the rest of the economy because it seems to perform in opposite direction. But manufacturing, the risk sector has not done so well. So that is what we observed to the recent GDP figures.
Do you attribute any of this to some of the reforms that we've seen from President Tinubu? We did hear him reacting after we got this print. Is some of this because of the difficult reforms that he instituted?
Well, yes, the reforms, I mean, there's a mixed result to the reforms. Agreed, some sectors are beginning to backward integrate in order to find substitute to the imported products, which have come under very hard times as a result of the devaluation of the currency. But beyond that, even the finance institutions both the World Bank and the IMF seem to be in disagreement regarding the outcome of the reforms. Whereas the World Bank thinks that reform is working because government revenue has improved, so the fiscal deficit is beginning to somehow reduce. But the IMF seems that the reforms have not worked in any way. And then I think that has raised some issues with the presidency and other people, in the government. The government is facing a lot of criticism. Some people think that the challenge of the economy is more structural rather than monetary, but it seems that the approach towards it has been more of taking a monetary stand, a hawkish monetary stand actually. And the expectation is that when the Monetary Policy Committee meet again, that they're going to raise the rates, even though people think that it's not actually helping, rather worsening the situation in the economy.
Do you think that they should be raising rates? Because we've talked about how a number of African economies, or African central banks, are starting to ease or pause. Nigeria is the outlier here. What do you think the decision should be this week then?
Yeah, so given the level of inflation, which has started to, because there was a time 2 months ago, we started to experience some level of disinflation, but that seems to have been reversed as inflation has started to rear strongly, on. So the expectation is always, what they've always done, which is to raise the rates. But on the more conservative note, I think they should keep it where it is. But most of us believe that the challenges the economy is facing right now are not just driven by monetary factors alone. There are more structural elements to the challenges, and therefore the government should take a more robust approach rather than just approaching it from a monetary point of view. When you look at the monetary policy, the monetary policy rate, if you graph it, chart it against the real sector growth, so you see that there doesn't seem to be any sort of, they are correlated strongly. So as the inflation is going up or the monetary policy rate is going up, it seems that the economy is underperforming. So I think it's important for the Monetary Policy Committee. But again, they will look at the GDP figures. So they will claim that the GDP has been resilient, therefore the monetary policy rate is working. But then we have to look at those sectors that are working, because those seem to be recession-proof sectors. The other risk sectors of the economy are not responding that much.
Right, and we'll obviously see what the decision is this week. Bongo Adi, Professor of Accounting, Economics and Finance at the Lagos Business School. Thank you so much, Bongo, for your insights this morning. Now, coming up, G7 foreign ministers are set to increase pressure on China for allegedly supporting Russia in its war against Ukraine. More from their meeting in Italy next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, G7 nations are set to increase pressure on China for allegedly supporting Russia in its war against Ukraine. That's according to an early draft of the communique seen by Bloomberg as foreign ministers meet in Italy. Bloomberg's managing editor for European economy and government, Ben Sills, joins us now for more. So, Ben, what exactly can we expect from the meeting today? And tell us more about this draft that was seen.
Well, I think that the main thing we're looking for is the evolving position on Ukraine and the Middle East to a certain extent. What we've been seeing, we were in Rio last week for the G20. We have colleagues in Fuji in Italy this week for the G7 foreign ministers. And what we're seeing is a lot of countries are really shifting their positions, really firming up their positions, actually, in anticipation of Donald Trump's arrival in the White House in January. And I think that's the context in which you need to consider this draft statement that we got yesterday, which as you mentioned, has the G7 really committing to firm action on the Chinese companies that they see aiding the Russian war effort.
Are we anticipating any more escalation in terms of rhetoric, Ben, or is this really going to be the focus of this meeting with the foreign ministers?
Well, actually, I would say that we are already seeing action to back up that rhetoric. Last night, we had a late breaking scoop out of Brussels that the EU, which obviously makes up a large proportion of the G7, is proposing sanctions on a series of Chinese companies that they have found to be supplying the Russian military. So, we're already seeing action to back up those words, and it does appear that the lines are being drawn in ever more stark terms between the Western Bloc and those countries like China and, of course, North Korea, who are supporting Russia in its war against Ukraine.
Right. Bloomberg's managing editor for European economy and government, Ben Sills, joining us there. Ben, thanks so much for that reporting. Now, coming up, ThyssenKrupp's steel unit is planning to reduce its labor force by about 40% this decade. More on Germany's deepening industrial downturn next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, ThyssenKrupp's steel unit is planning to reduce its labor force by about 40% this decade, a move that would shrink a business that's lost billions of euros to a global steel glut and rising energy prices. It's part of the German conglomerate's broader overhaul, adding to a deepening industrial downturn in Germany. For more on this, let's bring in Bloomberg's Oliver Crook, who's in Berlin. So, Ollie, just how bad are things getting in Germany's industrial sector? We know you've been watching this quite closely and reporting on it. Give us some insight.
Yeah, Jen, I feel bad coming on air every day and really just giving very bad news about the German economy, but that has basically been the job for the last 2 years. And we talk about it in kind of the abstract when we look at the charts. We talk about German manufacturing PMI. Last time there was a positive print there was in July of 2022, I think. So we're talking about 2 years of manufacturing contraction in the German economy. That all sounds sort of theoretical when you see it sort of illustrated on charts and on paper. This is now the reality of what we're talking about. We're talking about thousands of job cuts. We're talking about tens of thousands of job cuts across the economy that have been announced over the last few weeks. ThyssenKrupp is just the latest one to announce it yesterday, talking about 11,000 job cuts, 40% of their workforce in their steel division being cut across the board. But that adds to what we heard from Bosch on Friday, 5,500 jobs. Ford, 4,000 jobs last week. Volkswagen, we don't have the figure yet, but this could be well into the 5 figures. So we're talking about a minimum probably of 30,000 job cuts over the last sort of month within the German industrial sector. And we're not talking about little companies. We're talking about sort of mainstays of the German economy. You know, Bosch, Thyssen, these have been around since the 1800s. Ford has been operational in Germany since 1925. So this is really very significant. When I talked to Carsten Breschke yesterday, the sort of chief macro analyst over at ING, talking about where are we in the cycle? Is this the beginning of the end? He thinks we're really smack dab in the center of it, that there are more job cuts to come. We got it from the suppliers. We got it from some of the auto manufacturers. We haven't heard anything yet from BMW, Mercedes. That could be coming next. And another sort of little piece of EFO survey we got a couple of weeks ago, just looking at that, the share of German companies that actually a fear for their economic survival has risen to 7.3%. That's up from 6.8% the month before in October. That's up a ½ percentage point.
This is not what Germany needs ahead of the election, Ollie. How do you anticipate this could potentially affect what we do hear from lawmakers just going into the election?
Yeah, Jen, I mean, listen, you don't want to be the incumbent coming into this. You're talking about companies cutting 30,000 jobs just in the lead up to the election campaign. For Scholz and the SPD, this cannot be a very positive thing. It'll just sort of add to the narrative that they've managed to sort of mismanage the economy over the last couple of years. There's a couple of ways that this could play out. You could see it, for example, favoring, as you have a lot of fear in the German economy, some of the sort of Germany first parties, the AfD, the far right and the far left, Sarah Wagenknecht, that could favor them to a certain degree, but they don't really have the economic policy chops. So really, I think for many people, they're seeing this favor the CDU, and their sort of recipe for fixing the economy is a sort of traditional tax reform, cutting pensions, cutting spending, all of that sort of thing. Though that can help to a certain degree, what that fails to do is address the main problem that Germany has right now. It does not have the strong export markets that it used to have. The Chinese economy is slowing down. We're probably going to get some sort of tariff, at least discussions from Donald Trump. That will put the German economy in a very difficult position because their traditional form of just making really great products at the lowest possible price becomes a lot harder when you have those tariffs, when you have high labor costs in Germany, and when you have high energy costs. All of this a very sort of dangerous cocktail for the real sort of formula that has created huge amounts of wealth in this economy for the last few decades.
Appreciate your reporting there. Bloomberg's Oliver Crook in Berlin giving us the rundown there in Germany. Thanks, Ollie. Now, for a look at some other stories we're following, Nissan will reportedly reduce its U.S. output by 17% through the end of March. The Nikkei News says the extension of ongoing production cuts will affect plants in Mississippi and Tennessee. Nissan had already cut output at the two factories, which are now operating 4 days a week instead of 5. U.S. lawmakers say Hong Kong has become a center for financial crime as Beijing tightens its grip on the city. The heads of the House China Select Committee says 2020's Beijing-imposed national security law has shifted the city from a, quote, trusted global financial center to a critical player in the deepening authoritarian axis of China, Iran, Russia, and North Korea. The lawmakers have questioned whether the U.S. should continue its current policy towards Hong Kong's financial and banking sector. And finally, billionaire Steve Cohen, who injected capital into golf's PGA Tour earlier this year, says he believes the group can find a way to reunite with top players who left to play for LIV Golf. Saudi Arabia's public investment fund started LIV as a rival to the PGA Tour, luring a number of big-name players and sparking a feud before the sides agreed to a deal, which didn't come to fruition, but still waiting how that will play out. And let us look at where markets are right now ahead of the trading day. We mentioned that markets really still interpreting what we did hear from President-elect Trump on those tariffs. If you take a look, though, at U.S. equities, not doing too much, but we are still seeing S&P futures above that 6,000 print. We also did see U.S. small caps doing quite well on Monday, although we are looking at more of a risk-off environment now that we have heard from President-elect Trump on those tariffs. And just on that, we are seeing the dollar stronger, and also oil is in focus. Let's take a look at where Brent crude is right now. Brent crude just a bit stronger, about 0.3% there at 73.23. Also paying close attention to a potential de-escalation in the Middle East conflict. That is Horizons Middle East and Africa, though. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. European futures slide as Donald Trump vows to impose additional tariffs on China and 25% levies on imports from Canada and Mexico, hitting America's three biggest trade partners. Israel and Lebanon's Hezbollah are said to be close to finalizing a ceasefire deal, with the Israeli Security Cabinet set to vote on the agreement later today. And the EU proposes sanctioning Chinese firms that it says are aiding Moscow's war effort. More restrictions on Russia's oil tankers are also said to be under consideration. Happy Tuesday. European futures then to the downside, and quite dramatically, maybe European equity markets and European investors asking the question, is Europe next after the Trump tariff threat aimed again at Canada, Mexico and China? European futures then down almost a full percentage point as things stand. FTSE 100 futures looking low by 34 points. You're looking at S&P futures currently flat after some softness yesterday. NASDAQ futures currently flat, I should say. US stocks ended with gains of around 0.3%. So there was some optimism by the close of the play yesterday stateside, but now being recalibrated around these additional tariff threats coming through from President-elect Donald Trump. Let's flip the board and have a look cross-asset. Then you saw, of course, that rally in Treasuries on the nomination of Bessent as Treasury Secretary. We'll see, of course, if he gets confirmed. Some of that being unwound then in the last 12 hours or so on the back of this news from President-elect Donald Trump. 426 right now on the US 2-year. Currently unchanged. The US 10-year as well in focus. Yields have come in around 4 basis points, dropped about 14 basis points since November the 5th in the election of Donald Trump. Euro dollar currently at 104, a little softer by 0.2% on the single currency. Brent 73.26, currently up 0.3% on oil after the moves that we saw yesterday lower on those ceasefire expectations. We have OPEC Plus and that decision coming up this weekend. Bitcoin at 94,708, currently up 1%. Let's get to the details then in terms of what we've been hearing from President-elect Donald Trump, saying he will impose an additional 10% tariff on goods from China and 25% on all products from Mexico and Canada, citing a clampdown on migrants and illegal drugs. Let's bring in our chief North Asia correspondent, then Stephen Engel, with the details, of course, and the focus on what is happening, the implications for China as well. Steve, what is behind this move then? What is the rationale?
Well, Donald Trump, 2 months before he takes office for his second term on January 20th, is kind of, again, ratcheting up the rhetoric as far as the threat of tariffs. This is not in relation to that campaign threat of 60% tariffs across the board on all Chinese imports to the United States. This is in addition, based on other campaign promises to seal the border and also crack down on illicit trade across those borders, including fentanyl. And he has firmly blamed China for at least helping facilitate that with the precursors potentially coming from China and then processed in Mexico and then brought across the border. So in addition to essentially putting an additional 10% tariff on all Chinese imports to the United States, regardless of that threat of 60%. This would be on top of the already 25% tariffs that were instigated in his first term. He's basically saying China needs to respond and react to this claim that they are facilitating the fentanyl trade. It's something that China has denied. And Donald Trump says so far all his efforts and the pledges of the Chinese government are for naught. So he's going to push ahead for that. Perhaps even more interestingly is this threat of 25% tariffs on day one, on January 20th. He'll sign an executive order for 25% tariffs on Mexican exports to the United States as well as Canadian exports. Probably the Canadian one is significant because of all the oil and gas exports that Canada provides to the United States, as well as auto parts and autos themselves. The automobile supply chain between Canada and the United States are heavily intertwined. Those are the two big export products from Canada. So we're going to have to wait and see. But right now, 2 months before the inauguration, Donald Trump is stirring things up.
Yes, it certainly is, isn't he, Steve? And as you say, look, stinging criticism of these trading partners, but also the potential massive impact of these threatened tariffs. What has the response been so far?
Well, so far we have heard reaction from China. We're hearing that Liu Pengyu, he's a spokesperson at the Chinese embassy in the United States, saying again, there will be no winners in a trade war or tariff war. He says China has taken measures to combat drug trafficking and has informed the United States of the progress of its anti-drug law enforcement operations. Keep in mind, Presidents Biden and Xi came to some sort of agreement on the sidelines of APEC in San Francisco that China would do what it could to crack down on the supply of those precursors for the potential creation of fentanyl and other illicit drugs, perhaps in places like Mexico, without necessarily admitting that China is responsible. We're also hearing that Prime Minister Trudeau has had a phone call with Donald Trump explaining Canada's and the United States' long-term position as cooperative neighbors. Chrystia Freeland, as you can see on the screen here, the Deputy Prime Minister also highlighted those strengths between Canada and the United States and went on to remind in his statement that 60% of America's imported fuel needs come from Canada.
OK, Chief North Asia Correspondent Stephen Engel, thank you very much indeed on the details. Let's get the market reaction then to this story and check in on how Asian markets in particular are faring with Avril Hong joining us out of Singapore. Avril, what is the picture right now?
It is mixed, Tom. Really interesting to see. I mean, we see that knee-jerk risk-off reaction in Japan, Taiwan, South Korea. Those are the markets that are underperforming, but it's not as bad on Chinese stocks. We actually saw some of these gauges managing to clock gains earlier in the session, though note here that turnover is low, so there's not a lot of strength behind the gains. Some are attributing what we're seeing in Chinese stocks today to the idea that we're going to get fiscal stimulus and maybe also the idea that there's room for negotiations on these potential tariffs. Let's flip the board because I think the clearer read on these narrative surrounding tariffs is on the currency space. If we can take a look at this next page, it'll show you how the currencies are faring today. The Aussie got hard hit. I mean, this is an economy that's closely tied with China, of course, and we saw it losing 1+% against the greenback, pairing some of those declines now. The offshore, onshore renminbi both weakening towards the 627 handle, 726, 727 thereabouts. The Japanese currency, really interesting to say, is among the top gainers today, and this is a bit of an old school haven play, perhaps also traders warming to the idea of a December BOJ rate hike. Let's flip the board and take a look at this chart. In the context of the yuan weakness we're seeing today, I wanted to highlight what Chinese authorities have been doing recently in terms of ramping up support for the renminbi via the yuan fix, which is of course the rate around which the Chinese currency is allowed to trade. And we're seeing that it's been much stronger than estimates recently. And something that our MLive colleague Mark Cranfield, I love quoting him, he's been highlighting that when you're seeing China, trying to stabilize the stock markets, the last thing that they need right now is a free fall in the Chinese currency. So keep that in mind, that support for the currency. Tom?
OK, pronounced support coming through for the Chinese yuan, reacting, of course, as well, and facing the pressure coming through from this tariff threat. Avril Hong with a deep dive on the market reaction to that story, joining us out of Singapore. Thank you. Let's get more analysis right now on the moves that we're seeing, particularly with the strength in the US dollar, with the Bloomberg dollar index up 0.3% right now. Yields up 1 basis point on the US 10-year, which is yielding you 4.28. Of course, the ripple effects across the global financial markets on the back of these tariff threats. Let's bring in Valerie Teitel for the details. Val, talk to us then about the potential impact of 25% tariffs on key trading partners for the US. Mexico, and Canada.
Look, so far, Tom, in this knee-jerk market reaction, we're seeing most of the reaction in FX. We had the Mexican peso sliding 1.3% versus the U.S. dollar. The Canadian loonie also sliding nearly 1% versus the U.S. dollar. But, Tom, it's notable to see that they are well off the lows of the session. If you flip on, we can just take a look at how these currencies traded on that announcement. They have strengthened back from the lows. The Canadian dollar, the Mexican peso weakened 2.2% at one time during that announcement. It has now come back. So it's showing you a bit that the market is stabilizing. We're also seeing a bit of that stabilization when it comes to the equity market. Those S&P futures broadly unchanged. If you flip on, we can take a look at them. But what's really noticeable, Tom, is these Eurostoxx 50 futures. That's sizable weakness so far in this morning session, down 0.9%. Perhaps it could be just Europe is bracing for their own Trump memo on tariffs, but it is very noticeable to see the underperformance in European futures. Maybe it's to do with their more broad links to China and that the tariffs could hurt the Chinese economy globally. But very interesting to see the underperformance is centered in Europe.
Yeah, bracing for maybe a tweet when it comes to Germany or the Eurozone from incoming President-elect Donald Trump. Talk to us about what this means. This is obviously, you pass this very closely, Val, which is the impact on the Fed, the Fed's thinking. Where does it leave the Federal Reserve?
Very interesting to ask that, Tom, because we actually heard from Fed Kashkari speaking to Bloomberg. He was talking about tariffs, and for the Federal Reserve, they're only concerned about a broader inflation impact if we get retaliatory tariffs. It's probably too soon to tell if we're going to get some sort of retaliation from China. The Fed only meets in the next 2 weeks, but it is notable to see that we have seen pricing for this Fed meeting basically subside in the market. We're now looking at a 14 basis points of a cut for that December meeting. And over the next 2 meetings, we are now only pricing in 20 basis points total, cumulative over the next 2 meetings for a cut from the Federal Reserve. Kashkari also told us overnight in this interview that he very much is keeping the door open for a Federal Reserve rate cut. We have yet to hear any strong narrative from a Fed official that they're going for a pause in the December meeting, but the market is increasingly pricing it in.
OK. Bloomberg's Valerie Teitel, thank you very much indeed on the market reaction to this story of the day, of course, coming through from President-elect Donald Trump and the market adjustments to that. Now, to one of the geopolitical stories of the moment. Bloomberg understanding that Israel and Hezbollah are inching closer to signing a ceasefire deal that may happen in the coming days, possibly as soon as today. Let's bring in Bloomberg's Paul Wallace in Dubai, who leads our MENA, of course, Middle East and North Africa economy and government coverage. Paul, how close are we then to a potential ceasefire deal in this region?
Hi, Tom. It is possible that the Israeli Security Cabinet, when it likely holds a vote sometime this afternoon local time, approves a truce with Hezbollah. It's a little bit unclear at this stage when a ceasefire would actually start if that agreement is approved by Israel's cabinet, and also if it has to go back to Hezbollah for its own approval. So there are a few steps that remain unclear at this stage, but certainly it seems as if we are very close to a deal. Of course, we've been in this situation many times before, particularly when it comes to Gaza, and in Gaza's case, no deal was reached. But this time with Lebanon and Hezbollah and Israel, it does seem a bit different. It seems as if enough people within the Israeli government and security establishment and within Lebanon and Hezbollah want this to happen to make it seem like it is very close.
OK, so we look at that potential ceasefire. What are the potential obstacles, Paul? You suggest that maybe this should be framed slightly differently from the ceasefire talks around Gaza. What, though, are the potential obstacles that have to be overcome?
Well, one of them is the thinking in Israel. Certainly there's some far-right members of Benjamin Netanyahu's coalition that don't want this to go through. One of them is Itamar Ben-Gvir, the national security minister. He thinks that Israel should instead just crush Hezbollah, continue going militarily until the group is effectively no more as a military organization. He thinks it would be a missed opportunity if they do go for a ceasefire. So that is a big obstacle. The other thing is just the messiness of the proposal that's on the table, this US-led draft. I think it was always going to be complicated and kind of riddled with contradictions, but it's difficult to see how this will be held together, a truce, if it does go ahead. I mean, effectively, Israel wants Hezbollah fighters to move away from the Israeli borders. You're talking You're talking about 30 kilometers or 20 miles away from the border, and for Hezbollah not to operate in southern Lebanon on the Israel-Lebanon border. It's difficult to see at this stage how that's going to be, enforced. There's talk of the Lebanese army, which is separate from Hezbollah, going into the region and policing the area to make sure Hezbollah doesn't operate there. But that's something that's in the past has just proved to be very ineffectual. Yeah. And then if Hezbollah does break the terms, if Israel does start striking Lebanon again, does that mean the truce is over and we're back to war?
Okay, so still some important question marks to be overcome, but we look to today potentially for some more details on that. Paul Wallace, comprehensive in terms of what we've been hearing around this potential ceasefire between Israel and Hezbollah. Thank you. Now, coming up, the EU proposes sanctions on Chinese firms. That's as the G7 prepares to boost pressure over alleged support for Russia's war efforts. We're going to bring you the details on those measures next, that they're currently being weighed up. Stay with us. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. Happy Tuesday. Welcome back to Bloomberg Daybreak Europe. Right, G7 nations are set to increase pressure on China for allegedly supporting Russia in that war against Ukraine. That's according to an early draft of the communiqué seen by Bloomberg as foreign ministers meet in Italy. Bloomberg's managing editor for European economy and government, Ben Sills, joins us with the details. Ben, what do we know? What are we expecting to hear in terms of this communiqué, the potential measures, the potential steps that the G7 are looking at taking on this front?
Yeah, so this is a pretty major escalation from the G7 in terms of their rhetoric. Last time the foreign ministers met in April, they were calling on China to ensure that companies within their borders weren't supplying military equipment to the Russians. This time the G7 are proposing to take measures themselves to stop that supply to the Russian military. Within hours of breaking the news of that communique, we had more news out of Brussels with the EU. As you say, they're proposing its own sanctions. These are the measures that we're talking about on Chinese firms that it says are supplying the Russian military.
Okay, so we look to see if those get across the line, because of course I think it's my understanding that 27 nations have to approve this. You can correct me if I'm wrong on that. What's happening on the oil front as well? There seem to be additional measures that G7 countries are looking at when it comes to potential further restrictions on oil trading out of Russia. Is that something they're considering as well?
Yeah, they've been trying, since early on in the conflict to find ways to limit the amount of revenue that the Kremlin gets from the oil trade without going so far as to disturb the global market, boost prices for Western consumers. The latest thing that we're seeing on that is new measures from the EU, actually, who are looking to impose additional sanctions on Russian oil tankers. This is the shadow fleet that Russia has been using to supply its clients around the world. What we've seen in the past is they have targeted insurers and some of the services companies that facilitate that trade. So we'll be paying attention to exactly how those measures shape up as they come down the channel in Brussels.
Yeah. Okay, Ben, thank you. And you're right. I should have specified that these are measures being considered by the EU, not the G7, when it comes to oil. So thank you for clarifying that. Ben Sills with the details on some of those potential sanctions on China as well that Europe is considering in terms of some of the linkages between Chinese companies and Russian firms supplying arms to Russia in that conflict against Ukraine. Now, the US Justice Department is dropping criminal charges against President-elect Donald Trump, including those related to the 2020 election and mishandling of national security information. Trump's re-election has shielded him from charges while in office. Coming up, we take a look at who is backing UniCredit's bids for Banco BPM and if the offer could succeed in creating Italy's largest lender. The details coming up. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back to Bloomberg Daybreak Europe. Now into the banking space. We're going to be watching UniCredit shares very closely at the open later today. That's after Monday's lower close, following the Italian bank's almost $11 billion bid for domestic rival Banco BPM. It opens a second takeover front after UniCredit's Commerzbank approach, of course, with that transaction facing stiff opposition from the German government. Joining us for the details in what are some fascinating moves in the banking space is Bloomberg's Jenny Serene, who follows all of this very closely for us. Jenny, what do we know then about this latest bid by UniCredit for BPM, what it tells us about the appetite, what the size of the deal, the likelihood of it getting across the line?
Yeah, so, I mean, the likelihood is the hardest one to answer. That one, obviously, the Italian government has been very pro banking consolidation, and they've been looking to line up a third competitor that could take on the likes of UniCredit and Intesa there. And so they've been very, supportive of things like a tie-up between Banco BPM and Banco Montepaschi. And so it's sort of interesting to kind of see them now squirming and saying, well, we were supportive of that kind of M&A, but, maybe not so much this kind of M&A. And I think that's, just exactly what Andrea Orcel, the CEO of UniCredit, often does is, really puts a spotlight on some of the regulators and the local government officials and kind of puts them in the hot seat in a way.
Yeah, well, indeed. That's really interesting. They had a framing around the kind of tie-up that they were looking for when Orcel comes in around the side and says, hang on a second, maybe this is the kind of tie-up. So what does it mean for his potential takeover? That was dominating our discussion earlier in this year, the building out of the stake by UniCredit in Commerzbank. What are the implications for that potential deal?
Yeah, so we're still doing a lot of reporting around this. As far as what we heard yesterday, Andrea Orcel, the CEO of UniCredit, he talked a lot about the reception that they were getting in Germany, which was very negative. And so you see him here really kind of taking a step back, maybe putting a few more irons in the fire in a way, but certainly didn't say anything about completely abandoning the Commerzbank takeover or, having any different calculations or rationale for not pursuing that in favor of this. I think this is a person who is a skilled deal maker. And so if he wants to do both, I'm sure he could find a way to do both. And then obviously, he doesn't really mind if he rankles a few feathers along the way.
Yeah, and he's certainly doing that, isn't he? And no doubt going to be keeping you and the team very busy. Jenny Serene, thank you very much indeed. And the latest that's come through from Orcel as he makes his moves in the banking space, both in Italy and in Germany, of course. Coming up, Germany's industrial downturn deepens. Talking of Germany, with ThyssenKrupp's steel unit planning to cut 40% of its workforce. We're going to get the details on that story. Let's check back in on European futures right now, shuddering under the pressure. Is Europe next, will be the question for some investors when it comes to these new tariff threats from incoming US President Donald Trump, with European futures currently down 0.8%. The messaging has been around Canada, Mexico and China in the last 24 hours or so, but there will be a concern that Germany and the Eurozone will be next in the hot seats. US futures, meanwhile, currently flat on the S&P E-minis. NASDAQ futures just pointing to very modest gains of under 0.1%. There's plenty more coming up. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. European futures slide as Donald Trump vows to impose additional tariffs on China and 25% levies on imports from Canada and Mexico, hitting America's three biggest trade partners. Israel and Lebanon's Hezbollah are said to be close to finalizing a ceasefire deal, with the Israeli Security Cabinet set to vote on the agreement later today. And the EU proposes sanctioning Chinese firms that it says are aiding Moscow's war effort. More restrictions on Russia's oil tankers are also said to be under consideration. The market impact then on the latest lines coming through from Trump, the latest tariff threats. You see European futures down so far in the session, with maybe concerns that Europe will be next in terms of the target for incoming President Trump. Currently pointing lower by 0.8% after a flat session for European stocks yesterday. US stocks managed to eke out gains of 0.3% yesterday. Currently, US futures are a little lower. FTSE 100 futures currently pointed to losses of 31 points. S&P E-minis flat. They were lower. They're currently flat. Nasdaq futures currently pointing to very modest gains of about 19 points at 20,900. Let's flip the screen and have a look across asset. We've been hearing from Neil Kashkari saying the door is still open for a December cut from this Federal Reserve, pointing to a neutral rate of around 2.9%. Currently, the 10-year is at 4.28, yields up just 1 basis point as markets readjust to the tariff threats after, of course, Treasuries rallied on the back of the appointment of Bessent as Treasury Secretary late on Friday. Bloomberg Dollar Index currently up 0.3%. Its dollar strength is a key part of the story today, pressuring some of the commodity players and Asian FX as well. And gold trading at 2,622, currently down 0.1%. Brent in focus. OPEC Plus will be meeting on the weekend. $73 a barrel, currently up 0.4%. Certainly expectations of a ceasefire between Hezbollah and Israel will be consequential for the oil markets. Let's get to what's happening right now. The latest in terms of the woe rippling across Europe in terms of the job situation, certainly in the latest lines coming through from ThyssenKrupp, the steel unit, planning to reduce its workforce by about 40%. The steel unit of ThyssenKrupp, they could be looking to reduce that headcount by 40% this decade. The group's woes reflect a bleak outlook for many of Germany's biggest industrial companies. Let's bring in Bloomberg's Oliver Crook in Berlin, who charts all of this for us. Ollie, just how bad are things getting in Germany's industrial sector? We seem to come to you day in and day out for more news and more downside in terms of the prospects of the industrial base of Germany.
Yeah, absolutely, Tom. And it feels sort of bad going on air every day talking about the sort of decline of the German economy. But frankly, it's been the job for the last 2 years. And you say sort of charting that course. We've been charting that course in the sort of abstract, on the charts, on the PMI charts, on the industrial production charts, all of these sort of things. We've seen it on the charts, right? We've talked about manufacturing contraction in Germany for over 2 years. We're talking about the last positive print in July of 2022. That all remains fairly theoretical when you see it represented on charts. The reality of that is coming now the last few weeks. And we've had it just across the board, Tom. We had ThyssenKrupp, the latest. We're talking about 11,000 job cuts. That's 40% of their steel division. That follows Bosch on Friday, cutting 5,500 jobs down at their automotive unit. Ford last week, 4,000 jobs. We haven't got the final figure here at Volkswagen. That is what they're in intense negotiations on right now. But we're talking potentially well into the 5 figures there. So we're talking over the last couple of weeks and months, Tom, a minimum of basically 30,000 job cuts across this sort of industrial base across the board. forward. I'm trying to figure out, where are we in this cycle? Is this sort of the beginning of the end? Is this the middle? I talked to Carsten Breschke yesterday, sort of head of global macro over at ING, who's been a great sort of prognosticator of what was going to happen in the German economy and has had it sort of bang on. He says that we're really in the middle of this. There is more to come. It started with the suppliers. We're getting it from the automotive companies. We've heard nothing, for example, from BMW and Mercedes. Are they going to be the next to announce some layoffs? I should also say, Tom, another piece of EFO data that I did find interesting a couple of weeks ago, it's not just these big companies. It's the small companies, the SMEs. The share of German companies that fear acutely for their economic survival, we're talking about companies that are able to survive, has increased to 7.3%, up half of 1 percentage point from just a month earlier in October. So again, a sort of very grim picture and unlikely to turn around anytime soon.
So what is all of that doing then to the US, to the German election? We can move on from the US election. The German election's happening in the early part of next year. You're going to be covering it for us. The impact on the politics of Germany.
So listen, what I would say is I wouldn't want to be the incumbent party coming into this election campaign where you're talking about 30,000 plus job cuts going into this, right? This could speak very easily for the sort of the detractors to the SPD and Olaf Scholz, saying that they basically mismanaged the economy. You can look at this at a couple of ways. There's, on the one hand, you could see this potentially helping the sort of Germany first parties, the sort of AfD, the far right and the far left, those who say you really need to put Germany's interests above everybody else and sort of ignore all the others. However, these are parties that don't really have the economic chops. They don't have the really credibility and the economic realm. Who tends to, often in the minds of the Germans, is the CDU, and you can see that they're leading there. They've maintained a very sort of comfortable lead there. But what they are sort of prescribing is this sort of classic thing, right? Tax cuts, cut bureaucracy, cut regulation, cut benefits, cut pensions. This is something that may be able to boost the economy in the short term. But Tom, what it fails to sort of address is the main issue here for the German economy, which is one of not having the sort of traditional export markets that it used to have, namely in China. That's in part due to the slow Chinese economy, in part due potentially to more rising trade barriers, and of course the possible Trump presidency. I mean, if you're sitting here in Germany, you see the headlines crossing about Mexico and Canada, you cannot feel at ease because these are the sources, these are the markets that have generated all of that wealth over the last couple of decades. The main question, though, for the Germans and for the German government is not just going to be sort of marginal changes around the edges. Is this, what industries can you really be competitive against China in the United States, and how do you position your economy to really conquer those? Because even in the automotive sector, with the EVs sort of pulling ahead, that is not necessarily the future-facing industry that Germany currently has dominance over.
Okay, the near-term and longer-term questions for Germany. Bloomberg's Oliver Crook in Berlin with the latest. Thank you. Staying in Germany, former Chancellor Angela Merkel and Bavarian PM Markus Söder said they are open to reforming Germany's strict borrowing limits in a departure from the traditional stance of the conservative Christian Democrats, who are leading, as Ollie said, in polls ahead of February's election. The rules established following the global financial crisis limit net borrowing to no more than 0.35% of GDP to help keep the budget deficit in check. Shares in Tesla ended the session lower after California Governor Gavin Newsom announced that Elon Musk's company would be excluded from the EV rebates the state is considering. The decision may heighten tensions between Newsom and Musk, who have already clashed over California's politics. Tesla still accounts for more than half of all new EVs sold in the state. And Bloomberg has learned that Qualcomm's interest in buying Intel is cooling. It upends what would have likely been one of the largest tech deals of all time. The complexities associated with acquiring all of Intel, worth more than $100 billion, is believed to be the main hurdle. Now to the UK, where the most powerful business lobby has warned the government is in danger of losing the trust of corporate leaders if it fails to mitigate the impact of last month's budget. Chancellor Rachel Reeves addressed the CBI's annual summit in London, saying it was important to put the public finances on a firm footing.
I've had lots of feedback on the budget, but what I haven't heard is any credible alternatives to what I did to put our public finances on a firm footing. What I am really clear about, and I've said it already a couple of times today, that public services now need to live within the envelope that we've set. We will not be coming back to top up those budgets. We have set the envelope for public spending.
OK, the Chancellor of the UK, of course, Rachel Reeves. Let's bring in Bloomberg's UK correspondent Lizzie Burden standing by on set for us. Lizzie, what reaction did we hear then from business to what we heard from Rachel Reeves?
Well, I mean, I was at the summit last year and I remember very clearly Keir Starmer was a rock star last year, but that was in opposition. Now they've had this budget, £40 billion of tax rises, most of that lobbed at business through the employer national insurance contributions rise. And, yeah, business is saying through the CBI, if you don't make up for that through rates reform or the apprenticeship levy or the employment bill, then you're not going to be the party of business anymore, which, of course, is important because Labour's top priority is growth. Their reputation hinges on getting that investment. But the CBI's latest survey says that half of businesses are looking to cut jobs, and all the economic data has been pretty dour recently. So the government's response will partly come today. They're going to be introducing this white paper, Get Britain Working, and the idea is to take away welfare from people who are refusing to go into education or training. And, of course, it's going to be controversial within parts of the Labour Party because the message is get on your bike. But as you heard there from the Chancellor Rachel Reeves, it's all about fiscal responsibility. And they say that this is going to increase the employment rate to 80%, or at least that's the target. OK, yeah, sounds like a policy taken from the Conservative Party, doesn't it? So the white paper that you'll be monitoring for us, that could be important later today out of the Treasury in terms of how to get Britain working. Lizzie Burden, who was, of course, covering the CBI for us and the corporate and business reaction to what we've been hearing from the Chancellor. Thank you, our UK correspondent. We're going to be talking, by the way, exclusively to Matthew Long, the Director of Payments and Digital Assets at the FCA, or the Financial Conduct Authority. That's at 8:30 a.m. UK time on the opening trade. So tune in for that interview. Now, to Ireland, where voters in that country go to the polls on Friday with a very different dilemma to many of the elections we've seen in Europe this year. The country is flush with cash from a surge in corporate taxes from US firms, leading political parties to make big promises on what they plan to spend it in. Yeah, that all sounds very different to the UK and the rest of Europe, doesn't it? Our Dublin Bureau Chief, Jennifer Dugan, joins us for the details. Jennifer, this is part of the Bloomberg Big Take today. It's a great read, so counter to what we hear in terms of the fates of other nations. How much money does this Irish government have to spend?
Yeah, so the expected Irish budget surplus this year is in the region of 25 billion. That's been boosted by the 14 billion Apple tax, the rebate from Apple that the European Court ruled. So yeah, there's a lot of money. Most of that comes from, as you mentioned, corporation tax receipts. There's a huge number of US multinationals in particular in tech and pharma that have their headquarters based in Ireland, and a large percentage of the tax comes from those companies.
How vulnerable is, how sustainable is this revenue stream? And again, this isn't a Bloomberg Big Take, so correct, that's a BN priority. Anyway, so for our viewers, check it out, whatever, on Bloomberg.com or on the terminal. How vulnerable is this revenue? It's a pretty admirable revenue stream by comparison to many other nations out there, but it's potentially vulnerable to trade frictions from the US.
Yeah, for sure. It's very highly concentrated. So only 3 firms, we don't know which 3 firms they are, but certainly there have been a lot of guesses, but only 3 firms are responsible for 43% of the corporate tax take in Ireland. So it's highly concentrated and therefore very vulnerable. So it makes it very vulnerable to shocks within those particular companies, geopolitical shocks. The US election is obviously of concern as well, given the protectionist measures that are being discussed. So any change in either tariffs or US corporation tax could very definitely be a threat to that income stream.
OK, Jennifer, it's a fascinating story. It's the BN priority. It's the Bloomberg News priority. Check it out on the website or on the terminal. Thank you very much indeed. Bloomberg's Dublin Bureau Chief, Jennifer Dugan, on the $100 billion dilemma for Ireland as they lead up to that vote on Friday. Coming up, President-elect Donald Trump has vowed additional tariffs on China, as well as US neighbours Canada and Mexico. Roiling markets, of course, that is the focus. We'll bring you the details in terms of how the markets are reacting to that. That's coming up. This is Bloomberg.
every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is what I'm trying to understand right now, is how much downward pressure are we putting on the economy and what is the path for inflation. But right now, knowing what I know today, still considering a 25 basis point cut in December, it's a reasonable debate for us to have.
Minneapolis, Fed President Neil Kashkari there, keeping the door open to a potential cut from the Fed, another cut in December. Talking of which, the dollar is up today after President-elect Donald Trump says the US will impose additional tariffs on China, Mexico and Canada. My next guest believes this could be the time to start thinking about shorting the greenback, at least fading some of the gains. I'm joined by Sophie Huen, Senior Cross-Asset Strategist at BNP Paribas Asset Management. Sophie, thanks for joining us bright and early this morning. Talk to us about your views on the dollar then. We're seeing the Bloomberg Dollar Index up around 0.3% in the session today. It's up around 3%, I believe, since Trump was re-elected November the 5th. It has seen those gains. You want to fade dollar strength at this point?
Yeah, so if you look at our framework and our model, we basically see that the dollar index is currently around like 4.2% expensive versus monetary policy news. If you compare where we were back in 2016, we're approximately at the same level. And then our other signal on the momentum side is also showing some signs of like max bullishness. So I think at this point, rather than adding longs, we would rather fade this move on the dollar.
OK, so you'd fade the move on dollar. In terms of some of the hedging currencies out there as well, whether it's the Swissy or the yen, how are you thinking about positioning into those currencies as potential hedges in what many expect to be a more volatile environment?
So exactly. So the more volatile environment, there's a wider range for the outcomes for the Fed, for rates, as well as for equities. So we think that this hyper-focus on the positive outcomes of this Trump scenario should start fading in the coming weeks if we start to have like a more hawkish Trump scenario. So we think that having portfolio protection at this point makes sense. And we think that yen at this point, with the Bank of Japan clearly putting a ceiling on how dollar yen could go, is definitely a good candidate. So cheap hedge. We think that the Swiss franc as well is very attractive as a short leg for any kind of bet you want to take on the FX side. They started to talk about negative interest rate policy. They're going to leverage a weak currency to start and keep easing their monetary policy.
OK, so short the Swissy, lean into the Japanese yen. Sophie, we saw that pronounced market reaction on the back of the nomination of Bessent as Treasury Secretary under incoming President Trump, with yields lower on that news. Did markets overreact and overinterpret that nomination?
I think it's still to remain seen. We still don't know what they're really going to do in terms of policy. We're going to have more clarity January onwards. I think what's going to matter for us is there's been this focus on the reacceleration as well as potential supply demand side. And if you start to play the side of scenario, then the 10-year treasury in terms of like range would be closer to 5.5, 6%. If you start to talk about a hard landing, the 10-year treasury would be closer to 3.5. So I think at this point, rather than nomination, I think in terms of like the actual policy, as well as the macroeconomic backdrop and how resilient the US economy is going to be, is more going to be important to determine like which level of 10-year treasury we're going to have in the next 12 months. But as you can see, the range is very wide at this point.
Yeah, it's a wide range, as you say, between 5.5% on the US 10-year down to, what, a little over 3%. I mean, today has been a reminder, hasn't it, of the trade volatility that we need to brace for with the threat of additional tariffs on Canada, Mexico and China, which leads me to the question as to how much of this is kind of currently priced into the markets, or how difficult is it to price this kind of volatility, these kind of lines from Trump into these markets at this point?
I think the focus should be, if you look at what's been priced in terms of since the election to here, there's been much more pricing of the positive outcomes of a Trump scenario. If you look at the top three priorities, which are tariffs, immigration, as well as fiscal policies, the first two is growth negative. It's not going to be adding to the flow in terms of better growth outlook, and that's what the market is not pricing. So if you look at the rally on small caps at this point, it's more pricing the positive outcome rather than like a bit more of the negative outcome. So I would be a bit more worried about that.
What are the implications for European equities? There seems to be a mood in the session today, European equity investors starting to consider the prospect that Europe will be in the crosshairs once again. How do you play European stocks at this point?
It's been very frustrating, as in like the bearishness of Europe versus US is so extreme at this point. So if you look at all the outlooks for 2025 or even internally, people have been piling on this long US versus Europe across asset classes. So FX, equities, really all asset classes. I think at this point, you need to think about how much pessimism is already priced. Is there going to be a wake-up call? But I think in terms of the tariffs, we could see in Q1 next year and implementation in Q2. What if we have a front loading of orders ahead of tariffs? And usually that's positive for the goods-oriented indices, and European equities could potentially benefit at a time where the earnings expectations are quite low versus US peers.
That's really interesting in terms of that potential sequencing of the implementation of tariffs and front-loading for European corporates. Thank you very much indeed for that cross-asset check with a view, of course, and a lens on the FX space. Short the Swiss go long the Japanese yen. Some of the calls there coming through from Sophie Huen, Senior Cross-Asset Strategist at BNP Paribas Assets Management. Thank you. There's a lot more coming up. Stay with us. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
At the Fed, at the end of the day, no matter who is in these various positions, we know what our job is. We have to get inflation all the way back down to our 2% target, and we have to try to keep the labor market strong, and we're committed to doing that regardless of who's in the executive branch or who's at Treasury.
Okay, Minneapolis Fed President Neil Kashkari speaking to us exclusively in terms of his thinking around December, keeping the door open to that potential additional cut coming through from the Fed. The market's pretty split on that. The last time I checked, there was about a 60% chance. Market's pricing in about a 60% chance of a cut in December, though that debate, of course, has ebbed and flowed in recent days and weeks. Neil Kashkari also saying that he sees the neutral rate probably around that 2.9% that's been flagged by the Fed, by the FOMC. Here's how the markets have adjusted, though, in terms of fading out some of those additional cuts expected that had previously been expected from the Fed. You now see fewer than two, just at the net, fewer than 50 basis points, I should say, by June of 2025. You don't get below 4% until about September of next year. That's how the markets are pricing at this point. Just fewer than 20 basis points priced in over the next two meetings for the Federal Reserve. Let's flip on and have a look at how the markets are reacting then to the latest headlines around these additional tariff threats coming from incoming President Donald Trump. You have seen that impact primarily, of course, on the currencies of three nations in focus, Mexico, Canada and China. And you've seen some readjustments, some fading out, some of the heavier losses, but that is a key story for us today. The opening trade is up next. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much, we want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Donald Trump doubles down on his pledge of more tariffs on China, Canada and Mexico. The dollar gains and European futures are lower, but US futures edge higher. Israel and Hezbollah are said to be close to finalizing a ceasefire deal, with the Israeli Security Cabinet set to vote on the agreement later today. Plus, the EU proposes sanctions on Chinese firms it says are aiding Moscow's war effort. This as G7 foreign ministers also weigh more measures targeting Russia.
Let's do a quick check on these markets, because maybe a little bit muted reaction in U.S. futures, maybe a little bit muted in Asia, but here's where you're getting most of the pain. Eurostoxx 50 futures down a whopping 0.8%. The FTSE 100 right on its heels, down by about 0.4%. As Anna mentioned, that dollar strength across every major currency, the Canadian dollar, the Mexican peso, and of course the Chinese yuan, not to mention the euro. The Bloomberg Dollar Index is flying this morning. The 10-year yield hovering around 4.28. We're going to dive into these market dynamics. The countdown to the opening trade starts right now.
Tuesday morning, good morning. So the narrative yesterday was Scott Bessent, the incoming Treasury Secretary, would basically put guardrails around the Trump administration when it comes to the most outlandish and outrageous economic policies that could be potentially put in place. The headline this morning is that Trump is back, he's in charge, and the tariff agenda is firmly back on the agenda, and we should react to it. Just been hearing Kriti talk about the fact that there is a market reaction. You're getting it in the currencies, but you're not getting it in US futures. Why on earth are European equities down as hard as they are this morning? I don't understand the market reaction this morning. I don't understand trading headlines in this way, and I don't understand the headline I read first thing this morning that markets are roiled. To a certain extent, yes, but really?
Some of that roiling's been unwound, I think, is perhaps the solution to that one. But yes, some of the initial moves we saw in the Aussie dollar, fixed futures, in stock futures, in gold, all unwound to a certain degree, as if we were trading the headlines, as you describe, as we remember from the first Trump administration. But maybe the market is going to deal with these quite quickly. We did see the Mexican peso drop to close to a 2-year low. We saw the Chinese yuan just edge lower, which in itself is interesting, as if the PBOC is trying to draw a line in the sand and say we are not going to respond to this in the way that you might expect us to. The dollar is stronger. That is having a little bit of an impact on some of the metals prices. But to your point, we saw these initial moves. We have to get used to trading the headlines. This is President Trump, and we know what that means. But we don't have to linger, perhaps, on the effects for too long.
But I think the reason that maybe Europe is taking a bigger hit is, one, because we don't actually know the specifications around what the tariffs actually apply to. There's always carve-outs. There's always layers. This is on top of the existing tariffs that are already in place.
But he didn't even mention Europe.
No, but he will.
But
is that what we're trading on?
I think it is.
But in the first Trump administration, when you look at the market reaction, Europe always took a bigger hit. Even if it was China and the U.S., it always took a bigger hit than American assets and Asian assets, despite simply because it doesn't have the defensive bid into the U.S. assets that so much of that got.
And you look at the trade deficit between Germany and the United States, and that'll be what's on people's minds, won't it? Because they know that that's something that Trump cares about, as well as the stock market reaction in the US. But these are things that drive his thinking. And so I suppose that's why Europe takes this more seriously.
But this is a very specific... He's talking about very specific things. He's talking about the border north and south. He's worried about immigration. He's worried about fentanyl. These are unrelated subjects to anything in Europe. Are we trading...
Just a reminder of his operating strategy and the fact that this comes at strange hours of the day. That's the other thing that needs to happen in the first Trump administration.
That's also true.
That you have to be on guard 24 hours because it comes on social media.
But US futures higher. The dollar's moving, obviously. US futures are higher. Europe is still down by 0.8%. Does that close as we approach? In the next hour, does that close?
I think the other piece of that is yesterday Europe outperformed every other market. It was higher by 0.8%. So I wonder how much of this is just simply paring back yesterday's move as well.
We will talk more about that in just a moment as we approach the market open. 55 minutes until we get there. The other factor we need to fold into all of this is what is happening on the geopolitical story. We spent last week talking a lot about what was happening in Ukraine and how escalation, de-escalation could ultimately work. We're now looking at a potential deal, we think, surrounding Israel and Hezbollah. We've been here before. Is this going to be something that is delivered upon? This feels like we're further forward than we have been for a while in terms of making these talks work. But do we need to believe it? Should markets price it until we get it?
The timing is really fascinating here. And to the market's point, you're not actually seeing a move in the commodities to the extent that maybe we have on Middle Eastern headlines in previous form. To me, what's interesting is that in the last couple of months, you have heard comments, I believe the Washington Post reported this as well, that the Israeli officials actually wanted a ceasefire deal with Hezbollah as an early foreign policy win to Donald Trump. That's a quote from Israeli officials quoted in the Washington Post. So I'm curious that this is happening a couple of months ahead of Donald Trump actually taking power, if that is indeed the political landscape. We'll see whether or not this, of course, comes through.
Yeah, we did see a substantial move in oil yesterday, didn't we, on the back of this? And on the expectation, as you say, it is still just expectation, and we've been up this hill before, but maybe we attach more credibility to it. And we are just, quote, unquote, just talking about a 60-day suspension, so where that goes. But the fact that the oil price reacted so severely tells me that people are taking this seriously. It was above $75 on Brent before these lines dropped, and then it was 73 by the close of yesterday. But still big questions. You know, the Israeli cabinet can vote on whatever it wants, but we still need to get Hezbollah's, OK through the Lebanese government and the like.
It does. It's a very incredibly complicated process, and drawing a line between it and what happens with oil. Does this affect the Houthis in terms of what happens with the Red Sea as well? How will that affect the story in Gaza? There's lots of moving parts to go around this.
Yeah.
Really hard to price in, and therefore I wonder whether the market beyond oil does price it in or just ignores it until it knows exactly what it's ultimately dealing with.
Well, I think we've had a real kind of narrative shift of foreign policy now driving some of these markets and geopolitics driving some of these markets. We know that we were kind of on edge waiting for the tariff story, but now not only the approach to the Middle East from the new Trump administration, but also to Ukraine as well is a big one, especially how the Europeans are going to be combating maybe some of what the headlines coming out of the U.S. as well. The EU is really getting on top of this, though. They are now looking at sanctioning Chinese officials around their potential help in Russia when it comes to the war in Ukraine. I think this is really crucial as well because this will be a key topic at the G7 ministers meeting later today.
Yes, and this is specifically around those Chinese actors who've helped Russia supply drones and other things. Also thinking about increased restrictions on Russian oil tankers. This feels quite iterative, though, doesn't it? Because we already have substantial restrictions on the way that Russia can transport its fuels and the role it can play in the international market. So that feels like a sort of additive sanction. But we watch the G7 nonetheless.
We will, with a great deal of interest. Let's talk about what we've got coming up on the show and figure out what is going on here. Madeline Jones, Oaktree Capital Portfolio Manager, is going to be joining us. Julius Bendikas-Mercer, European Head of Macro and Dynamic Asset Allocation, joining us a little bit later. We need to talk about crypto. America is charging ahead. The UK taking a more cautious approach. Matthew Long, UK FCA Payments and Digital Assets Director, will be joining us for a broadcast exclusive, Chrissy. Broadcast exclusive.
It's an exciting conversation, certainly one that we're going to be keeping a very close eye on. And we'll talk about the daybook as well in terms of what else we've got in the next 24 hours. We're, of course, keeping our eye out for all the headlines on both sides of the Atlantic, arguably both sides of the Pacific as well. But in the meantime, we get U.S. new home sales data, consumer confidence, a slew of data coming out of the U.S. at around 3 p.m. UK time. But then I think a lot of the focus is going to be on that G7 foreign ministers meeting, 3:45 p.m. UK time. And then, of course, the FOMC at 7 p.m. Those minutes. How are they talking about the election? We're going to find out.
Yeah, were they talking about the election at all? I mean, that probably not. Seems to be the conclusion I get from some of the reading. But this, just as a reminder, this is when they did 25 basis points after the one they'd done 50. And this was the one that was hot on the heels of the election and where actually it wasn't the moves that got the headlines. It was the defence of Fed independence that really got the headlines. Now, is that something that the FOMC picked up on, or was that a different conversation that Powell had been having with others? Because it was clearly planned. He clearly came out with a message on Fed independence that day, didn't he?
He did. You do wonder whether or not there was this whole idea that once we had the cabinet in place, once we were into the kind of grey area, end of the Biden administration into the Trump administration, that we would refocus back on the data and that the Fed become more important once again. We don't seem to be talking about the Fed as much as we did recently. Does that happen with Trump trading, with Trump trading headlines, headline trading Trump? I don't know.
Yeah, if the Fed won't talk about Trump and the market is all about Trump,
Yeah.
And the market manages to put the Fed aside. Yeah.
Well, I think this question of independence is a really crucial one, because something that we haven't talked about, maybe got hidden into kind of the Lutnick and Besant kind of narrative and headlines, was that Russ Vought was chosen to be the head of basically the executive branch budget. He is the writer of the Project 2025 that really endorses and helps create more executive powers in the branch. So that's something that he now has on his team, despite on the campaign trail trying to distance himself from that. I thought that was a key kind of piece of his strategy as well.
And we're all chatting about where Lighthizer fits into all of this as well. We were talking about it before we came on air. And kind of, does Lighthizer have this kind of overarching trade strategy which basically dictates everything? And it goes from Trump to Lighthizer to ultimately all the other branches of government, and that is how this tariff policy is dictated. I don't know, but and that's the point. We don't know yet.
If that's actually effective. I was just in Brussels, though, and last week, and a lot of what they were talking about was the one they were asking me about these cabinet picks. I didn't have an answer for them. But then they also were talking about the fact that they think that there's inefficiencies going to be baked into this government. I think that's where Trump really has to show that these picks can actually execute what he wants them to execute, and there's a chance that they may not be able to.
Well, that was the problem in the first
Trump
administration. He's trying to deal with that in the second Trump administration. We'll see how effective, as you say, he potentially could be. Let's talk about some of the other things you need to know this morning, running through some of the other news. The former German Chancellor Angela Merkel and the Bavarian Prime Minister Markus Söder say they are open to reforming Germany's strict borrowing limits in a departure from the traditional stance of the conservative Christian Democrats, who are leading in the polls ahead of an election which we now know is going to be taking place in February. The rules established following the global financial crisis limits net new borrowing to no more than 0.35% of GDP to help keep the budget deficit in check. Will Germany be writing a check if that were to be limited? We will see. The US Justice Department has ended its pursuit of criminal charges against Donald Trump, dropping 2 federal cases due to his re-election and the department's policy of not prosecuting sitting presidents. The department has left open the possibility of reviving the cases once Trump leaves office. And Formula One is expanding its grid to make room for General Motors' Cadillac brand and a new American team in the season 2026. The approval ends years of wrangling that's launched a US Justice Department investigation into why Liberty Media, the commercial rights holder of F1, would not approve the team initially started by Michael Andretti. There's only one American team on the current F1 grid, and it does not field American drivers. I have struggled with this one all morning, trying to persuade you two to talk about it. Mainly is the issue. There's a lot of money involved. Basically, we haven't had a new team. We've got 10 teams. They're trying to widen it out. This is a sport that's gaining huge popularity in America. And we've seen Drive to Survive. We've got a Las Vegas Formula One race, which has just happened. It is becoming more and more popular. But it's been a huge fight, actually. The thing that surprised me once again out of this was that that F1 has not wanted this, that there's been a limitation. Actually, you would have thought you would want this.
Yes.
And you would want to open up America to more F1, precisely.
Yeah, absolutely. I mean, anything that makes it look like America and all of the money that America has to put towards its sporting interests is going towards F1 is worth note, isn't it? I know Chrissy had a different car story on her mind, you see, this morning. That's what we're up against.
I was trying to bring it back to Taylor Swift, but maybe I'm not going to do that.
Wrong audience. You bring it up to Enrique, and I'm all about it. But I looked up the numbers because you said it's a money story. It's all about the numbers. So I saw the $3.2 billion approximately, some of the sources varied, of the value of the F1 industry. Compare that to NASCAR, for example. I'm Southern. I'm from Texas, so this is a natural kind of competition. About $3.8 billion. So not far off from kind of this cultural norm in the South. I was pretty surprised by that stat.
So that's a global number, though, and that's a sport that's purely limited to the United States. F1 wants some of that NASCAR audience. It also has a higher female audience. It has a younger demo. These are the audiences that advertisers, etc., really want to go after in a big way. And if you can build that audience at that within that younger generation, this is something that has longevity to it as well.
Liberty Media has a lot to answer for, doesn't it? Like pushing the popularity of something that was already huge in Europe into the US market in a way that we haven't seen before.
And it was interesting, it's been in Asia. I think the real key moment was the Drive to Survive series that Netflix put on. So this has kind of become a Netflix event as well. And it's interesting how other sports are trying to mirror that process. Look at what's happening with rugby and other sports.
I was like, how is F1 succeeding where maybe soccer hasn't in the States? I guess that's what's surprising to me.
because we call it football, maybe is the first.
Okay,
first
I don't have the time to get into this
We're
conversation.
already lost in translation at 7:13 this morning here in London. What else is coming up on the programme? We will talk about French politics. Coming up, Marine Le Pen threatens a vote of no confidence if budget demands aren't met. We will check on the state of play in Paris. Plus, Germany sees more manufacturing job losses as the country heads towards crucial early elections. Up next, markets continue to digest Donald Trump's big talk on tariffs. We will dig into some of the market moves in detail. And if you have any questions for our guests, of course, do get in touch. IB plus BBTV Go is the function on the Bloomberg terminal that you can use. This is Bloomberg.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asia markets.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
I think, again, you can expect this to be very, very transactional. And I think that's part of the reason for announcing it well before he's even in office. I mean, he is clearly looking for, and I would say, you know, Canada and Mexico to come to him with offers of things that they can do.
That was Jennifer Hillman, former US International Trade Commissioner, giving her take on the latest Donald Trump tariff plans. We continue to watch what is happening here. There's a briefing taking place out of China. We'll keep an eye on that. Let's get more on how the markets are dealing with all of this and how the US president-elect's latest tariff threats to China, to Mexico, to Canada are being priced in. Valerie Teitel's here with more.
Guy, a lot of the reaction has been focused in the FX space. Not surprising, given they're most vulnerable to these tariff threats. We've seen the dollar strengthen across the board. The Mexican peso weakened by 1.4%. Dollar CAD also moving by nearly 1%. And also weakness in the Chinese yuan, even with a stronger fix from the PBOC. So is a clear reaction for a stronger dollar in the FX market. What's a bit more confounding is the reaction in the equity market. If we flip on and just take a look at how we're faring, S&P futures basically unchanged since this announcement. We are seeing a big downside when it comes to European stocks, though. European 50 futures down 0.6%. Perhaps they're bracing for their own memo from the president-elect Donald Trump. I also have up here CSI 300 futures. Those are in the green, even though we did hear new tariffs on China from the president-elect overnight. Perhaps the equity market in China is bracing for some more policy stimulus on the back of these Trump tariffs. As you mentioned, we do have that policy briefing taking place as you speak.
Okay. Valerie, thank you very much indeed. Let's talk more about this with the incoming President Trump creating a little bit of early volatility. Let's get a view from the credit markets and figure out what is happening here. Madeline Jones is portfolio manager at Oaktree Capital, where she manages the European high-yield bond and European senior loan strategies. Good morning.
Morning.
You're in credit, which in some ways is a bottom-up kind of do the nuts and bolts analysis of what is happening within individual companies and sectors type space. But nevertheless, it's the top-down headline Trump tariffs volatility story reach into your world? And are we basically, even in credit, set for 4 years of trading headlines?
Well, I think that you're right to point out the bottom-up fundamental nature of what we do. Whatever the headlines are, we're constantly churning around in our minds. What does that mean for individual companies, individual balance sheets and their prospects? We're in credit, so we don't need the world to be perfect. I think that really makes a difference versus equities, where you need that growth trajectory. In Europe, we think that the growth trajectory is clearly more challenged, but we don't rely on that. And as long as we can find a way for the corporate balance sheets to make sense, then there's an investable prospect for us. It's where you want to tilt your portfolios with all the macro and the headlines that are going around. You know, clearly we look at places like auto sector, cyclicals, and the export side of the European economy to be more exposed to the latest Trump trade headlines. But that leaves lots of other places which are more domestically focused, where you can find attractive prospects. But it's all about that individual bottom-up balance sheet by balance sheet analysis.
Does that balance sheet by balance sheet analysis get affected by what happens in the US 10-year? And if the US 10-year continues to climb 5%, 5.5%, how does that change the narrative?
It can do. I think the market is more on the other side of thinking that, you know, rates may be higher but not excessively high to really challenge company balance sheets. And we're coming from a context where in the high-yield bond market, whether it's US or Europe, actually balance sheets are very good. A lot of it's double B quality now. Over 50% of the market's double B quality, which means that they're well placed to withstand, you know, higher rate environment. Whether the assets recorrect, because that is another thing. But I think that's a good thing to start with a base like that. If you're thinking that rates may be higher for longer, it means it's still investable. The fundamentals should be fine for the overall asset class. For credit, you know, rates being higher for longer is an attractive prospect because we can get really good yield.
OK, so that's a positive. Madeline, when you think about, so clearly you've emphasised the bottom-up nature of the analysis that's required in credit, but when we have a top-down story that is all about more tariffs being applied, volatility in the global economy, perhaps as a result of that, do you look for companies then that have ever stronger balance sheets just to withstand the unexpected? Because we know from the first Trump presidency that withstanding the unexpected is kind of the name of the game.
Yeah, well, you should always do that in credit. You should always be building your analysis on a cash flow assumption and a forecast which can withstand shocks, whatever they are, and you just don't know where they come from. But the better quality the balance sheet, the more resilient they're going to be. The better quality the company, the right sector, you know, all these things on your side, access to liquidity, all these things will make a difference to the analysis we do, whether we want to back that company or not.
But do you feel there is complacency in a market where spreads are as tight as they are, going into a period where we expect volatility and the unexpected?
Well, if you unpack the spread, actually, you'll see there's quite a dispersion within that. You look at some parts of the, auto supply market, auto market, they're more dislocated. Of course, real estate is very high spread. So, within that, it's not one uniform spread context. But yes, I think we are entering a market where, with the spreads on an overall basis getting quite tight, you have to be very careful on your credit selection. Credit selection is going to matter fundamentally, more so as we get tighter, as we get more volatility, as this environment changes. Getting that asset selection right is increasingly important.
Part of your role is, and correct me if I'm wrong, is to be co-portfolio manager for the global high yield strategy. And when I think high yield, I immediately think some of those oil credits, and specifically the United States, but in Europe as well. That is a part of the world and a sector story on both sides of the Atlantic that could be deregulated quite quickly in this new administration, but also as Europe kind of plays a little bit of catch up. Does that change your exposure to oil credits, the triple Cs I'm thinking about in the States, for example?
Yeah, all of this will come into play of deciding whether there's a different composition in a portfolio we want to take. And we were looking at that all the time, whether we tilt more towards the US or Europe, whether we want cyclicals or defensives. I think right now our posture is, with spreads being tight, we want to be quite defensive in our portfolios. We're expecting more volatility. We want to be priced to access that volatility where that comes from. But again, piece by piece, credit selection, more than actually top-down or industry sector selection, top-down analysis is going to be piece by piece, idiosyncratic, name by name.
So what does that defensive look like then? Are you going up in credit quality? Is there a risk of fallen angels? I mean, what does that actual pivot in that defensive strategy look like?
Yeah, again, you're talking thematics, and you're wanting to look for these sector trends, but it will come down to individual balance sheets and how strong they are. But, within Europe, for example, we've steered away from auto supplies for quite some time now, not just because of the threat of trade tariffs, but because of, Germany's position in the world of, being a car exporter, being challenged by China now, who was once their recipient of demand. All those elements are leaning us away from autos. At some point, that may change. There are good companies in there. There are auto suppliers who can withstand a long-term, and can reposition themselves. Might be quite interesting. But we've made positional changes away from industrial Europe, away from autos, sectors like that, because we do see them being structurally challenged.
The China read-through is certainly one that's having ripple effects throughout many sectors. Madeline Jones, portfolio manager at Oaktree Capital, joining us around the table this morning. Guys, I believe we're also getting some headlines coming out of the Chinese Foreign Ministry. Madeline was just talking about the China read-through. Some comments.
Yeah, absolutely. The Foreign Ministry saying they will respond later on Trump tariffs. So that's the holding statement, I suppose you would call it. The PBOC has already slightly responded by fairly aggressively pricing the yuan and resisting any yuan downside, or not too much of it anyway.
These are the early skirmishes. How do you respond to Trump? How transactional is he going to be? Do you respond aggressively or do you wait and see? All of those, I think, are issues that we need to kind of see how the Chinese deal with.
And that's just the Chinese. We've got China, we've got Mexico, we've got Canada, Mexico, and several others to deal with as well. More after the break. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, is the fact that if you can do it, you're one of a few numbers of organizations in the history that have actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Minutes from the start of the opening trades across Europe. When you look at the futures picture, seeing a little bit of a mixed one. I'm not sure how to read this because you are seeing red on the screen in terms of some of the European market action as well. Your Stoxx 50 futures down by about 0.6%. The FTSE 100 down by about 0.3% as well. Just 30 minutes ago, that was a much more aggressive sell-off. So you're seeing some of those losses getting paired, at least pre-opening trade. That being said, compare that to what you're seeing over in the States. S&P futures are flat at the moment. They were higher about 30 minutes ago as well. So again, pairing some of the gains on the U.S. side. A lot of that is coming down to how you interpret the comments coming from President-elect Trump. And we're getting immediate reaction right now. The Chinese Foreign Ministry briefing is underway in Beijing. You're seeing that live on your screen at the moment. It looks like they're choosing not to currently respond on those Trump tariff comments, saying that they are open to a dialogue in principle when the time comes.
Yes, saying that they will respond later on Trump tariffs, but when asked if they're talking to the Trump transition team, saying they're open to a dialogue in principle. Because the transition takes some months, this is where we end up, isn't it?
Well, kind of
power transfers in a strange way. It seems to transfer before the actual office transfers, to some degree, of course.
Well, the market's a discounting mechanism. It's looking forward. I guess you could maybe apply the same thing to the politics right now as well. This is what I'm going to do. You need to price that in now. But the Chinese don't know yet, do they? They can't figure it out. This is an early salvo, an early indication potentially in a very specific area relating to fentanyl.
It is very specific. It's also on top of what the already pre-existing tariffs that are implied at the moment as well. So there's also a question of how that gets turned around. There's also the question of Canada and Mexico, because at the moment there's also a USMCA deal, which, by the way, President-elect Trump renegotiated in his first administration, that I guess is now getting renegotiated. So we have to see what the international reaction is.
Apparently Trudeau got straight on the phone to Trump when this came out and said, look, can we talk about this? Because actually the number of people crossing our borders, our border is very limited. We are very much on board with the fentanyl story. Why are you talking about this?
And Biden has been recently praising the Chinese for the progress that has been made in the fentanyl trade.
Yeah.
So that's a different viewpoint.
The common thread between China, Canada, and Mexico in terms of imports to the United States is autos. It's vehicles, it's cars, it's car pieces. So that's going to be an interesting piece. Maybe that might show up at the opening trade. Let's get in another voice here. Bloomberg's Jill Deese is, of course, following the story for us out of Hong Kong. Jill, I'm sure you're watching this with as much intrigue as we are here in London. Walk us through the thinking behind this move. Do we have any insight on what this means for existing tariffs on China?
Right. Well, I think, as Guy mentioned, a lot of this does seem to be tied to a lot of Trump's concerns over the fentanyl crisis in the United States. Though I think, as you guys were just discovering, it's a bit of a sort of bizarre coming from Trump, at least on the China-Mexico side. Saying that he'd be implementing higher tariffs there, just because that was such a big focus of the first Trump administration, is trying to bring down those numbers. And obviously, as the Biden administration had said, maybe there was some progress there, although maybe we're getting a bit of political whiplash here. I think on the China side, obviously, Trump once again mentioned, the fentanyl crisis. He's saying that China just wasn't really doing enough to crack down on bad actors and imprison bad actors within the fentanyl industry, and that's what's really at play here. But I do think that while it's kind of a bit of a jolt here to hear this so long before Trump actually takes office in January, it's really still not that much of a surprise that he'd been targeting China with new tariffs. I mean, he did say pretty famously during his campaign that he wanted to increase the amount of tariffs on China. I think the question here, though, is how this actually still factors into those pre-existing tariffs that the Biden administration has kept in place. We'll have to see what kind of details we get there, because right now we're still just don't have a ton of details on how this actually applies to those goods beyond what we already have on China.
Yes. And what has been the response then from these targeted partners? We mentioned that Justin Trudeau was on the phone or liaising at least with President Trump as pretty soon after this commentary was released on Truth Social, Jill. And I know that we've heard from China just in the last 5 minutes or so, that press conference just coming to an end. What have we heard?
Yes, that's right. So, as we mentioned, Justin Trudeau really getting right there on the phone with Trump saying, look, we haven't, this isn't as big of a problem for the Canadian-U.S. border as it is for the Mexican-U.S. border. I think he's, seems like he's really trying to figure out what's going on here. Maybe we'll hear a bit more out of Canada in the coming days. We did hear from the U.S., the Chinese embassy in the U.S. Right after those comments were released, just saying that, it was kind of reiterating some of those previous remarks that we've heard from Beijing, basically saying that, a trade war, a tariff war really hurts, everybody here. It doesn't help anyone there. At this point, though, getting those comments from the Foreign Affairs Ministry, just saying they need to take a look at this and then they'll get back to everyone a bit later, kind of shows that, at least these countries, they've been preparing for the prospect of a Trump 2.0, returning Trump administration. But, it looks like we're kind of back in Trump land here. We get announcements on Truth Social or X or wherever at all times of day or night, and then you just kind of have to wait to see how exactly these places are ultimately going to, respond to these things.
Jill, thank you very much. Bloomberg's Jill Desis with the latest on these trade conversations after we've heard from President-elect Trump and heard a little then in response from some of these trade partners. Another big story overnight that we were covering at the top of the programme is the latest developments and expectation of developments in the Middle East. Bloomberg understands that Israel and Hezbollah appear to be moving toward a ceasefire deal that may be imminent. Let's bring in Bloomberg's Dan Williams, who's in Jerusalem for us and can bring us up to speed. So how close are we to a ceasefire deal here then, Dan? And what would it look like? I think we understand a little about what it could look like.
It would appear close, very close potentially only hours away. A dramatic day ahead of us in this war, now in its 14th month. Development that will affect one front of this war, the Lebanon front, the second front of a war that began in Gaza in October of last year and has spiraled and expanded really to become a regional war between Israel, Iranian proxies, and between Israel and Iran itself. We understand that this afternoon the Israeli Security Cabinet will be convening to sign off on a truce deal being promoted, being mediated by the United States to a degree with the involvement of France. Given that approval, and it's a fairly guaranteed approval, this would apparently then go back to Beirut for the final approval of Lebanese officials who've been serving as mediators between those mediators and Hezbollah, which is blacklisted in much of the West. So indeed, in the coming hours, perhaps by tonight, we may be hearing that this front has been calmed.
Okay. We hope that there is progress being made. That is what we're looking for here. But there still seem to be some significant obstacles. What are they?
Well, the obstacles, we've had optimistic predictions before. This time, it would appear there's more substance to them. The obstacles have been over what becomes of Hezbollah's deployment, what becomes of Hezbollah's future attempts, should it attempt to rearm, regroup, redeploy, having taken quite a drubbing, especially in the last 2.5 months of fighting with Israel. Israel wants not only the implementation of a 2006 United Nations Security Council resolution that ended the war of that year, meaning a distancing of Hezbollah from the Israeli border and moves to prevent it rearming. Israel actually wants a guarantee that it could resume military strikes against Hezbollah should it deem Hezbollah to be in violation of that truce. So far, the Lebanese and Hezbollah have not been happy about that condition, at least not it being written into the contracts, the treaty, whatever deal is being prepared. But it would appear they may have relented because it seems the Americans, the French, and the Israelis are optimistic that this time there could be movement.
Bloomberg's Dan Williams in Jerusalem. Thank you very much indeed for updating us. We will watch for news, keep an eye on the tickers to see what happens here. The oil market's certainly on tenterhooks, waiting to see what kind of a deal gets done here, potentially a deal getting done here. Does it change? How does it change the narrative, if at all?
Yes, if at all. We saw the oil markets reacting to this, even though there may be absolutely no read across into other areas of violence, into Gaza very specifically. Really interesting to see, though, how various power bases within the Middle East are rethinking, repositioning ahead of another Trump presidency. And again, we come back to this point of, Trump's not in power yet, and yet we see his influence around the world. We heard from Iran just last Tuesday, about the way they're changing their thinking on what they're doing with nuclear energy. And you wonder how we will see these players reposition as we head towards another Trump administration.
The narrative seems to be, from a foreign policy perspective, that you are reacting to Donald Trump. At the same time, in the background, there's so many other things going on. De-dollarization, getting exposure away from the United States. This was a conversation in Brussels as well, as how do you get away, especially in the defense industry, for example, on exposure to the U.S., on exposure to other parts of the world as well, at a time when everyone kind of has fiscal handcuffs, and it also feels like American corporates are where they can incentivize the most bid.
Getting away from the U.S. defense industry has proven to be very difficult for Europe. Buying U.S.
they're
arms.
Try.
They're going to try. But Europe doesn't have the capacity. Europe is building the capacity, but that is something that takes a long time. So if you want to rearm Europe, where does the kit come from? A significant portion of it's going to have to come from the United States. You were flagging a piece earlier on suggesting that France maybe is dropping its annoyance at the fact, its restrictions on the fact that Europe is going to buy a certain percentage domestically and from the United States. Because you can't rearm Europe without that industrial base that comes from the States. And that's one of the huge problems that Europe faces.
So basically this idea that American corporates like Boeing, like Lockheed Martin, like others, Raytheon, for example, can access some of the subsidies in the EU. But don't we talk about this a lot in the auto space, in the defense space, in the oil space? How do you incentivize without subsidizing? And no one's been able to figure that out just yet?
Well, the US and Europe on different pages, it would seem, on that front. And we've seen that over the last couple of years ago. We are in an increasingly sort of political global economy, aren't we? Coming up on the programme, investors on edge as Donald Trump aims fresh tariff threats at some of America's biggest trading partners. We will look at which European stocks could be most exposed ahead of the opening trade. That's next. This is Bloomberg.
First time, or got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course they have Apple TV, and we have our box. Never actually happened. And in one of the meetings he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi.
Right.
And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley and LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
"15 minutes, the equity market open here in Europe. Bonds starting to trade. This is the picture you see in front of you, both in terms of the futures and in terms of the bonds trade. Keep an eye on France and what is happening there in terms of the spread over Germany. That is widening out. Europe does seem to be lower this morning on the equity front. Why is that? Not entirely sure. It does seem to be a sense of maybe Europe's just next on the tariffs conversation. That is, I think, is what we're watching for quite carefully at the moment, trying to figure out what is going on. Anyway, Critty, that seems to be the narrative at the moment. I think we're struggling to put our finger on what is happening here. There are some fundamentals, though, we're watching in Europe, particularly when it comes to the M&A story.
There are, and it's a fascinating one, this concept of being more competitive, being more dynamic, especially with the United States kind of maybe on the offense at the moment. It feels like it's showing up in the bank space most clearly. Of course, in the last 24 hours, we had a very clear message from Andrea Orcel that he's looking to expand in Italy, that bank consolidation story. To me, I'm having a little bit of deja vu because it's very similar to the BBVA story in Spain as well, which is that you start to have this question around how much domestic exposure you have when a bank gets bigger and bigger, you have less domestic exposure. And that maybe not sitting right with the authorities. That was BBVA's problem. It kind of sounds like that's UniCredit's problem as well.
Yeah, Orcel definitely saying yesterday we could not afford to sit out of the domestic M&A story as it developed in Italy. So wanting to be part of that, which is perhaps the link you're drawing. Interesting that we have heard from the Italian government no sort of final verdict on what they think of UniCredit going after BPM, but saying there's no verdict yet. But the finance minister, when asked about it, reminded a group of reporters about the veto powers that the Italian government has on all of this. And they've been trying to cobble together a different deal.
This is just a mystery to me. Here is a Europe that says we desperately need to sort our capital markets out, that we need cross-border banking, we need cross-border financial services, we need cross-border markets.
That's what we heard from pan-European voices.
That's what Lagarde was talking about the other day, and just simply saying, why are we struggling to catch up? Why are we struggling to not compete with the United States? Because of all of these things, and yet...
So the Italian government stealing a page out of the German government's playbook, is that...
And the French and the Spanish as well?
Yes, that's absolutely true.
And you wonder how, yes, I mean, cross-border M&A is difficult, but it seems domestic M&A is
even
also
more
difficult. Let us talk about what's going on in these markets then this morning. We are joined now by our Markets Live executive editor, Mark Cudmore, for 3 minutes on the markets. And Mark, let's start with the way we have been reminded in a way that really took me back to 2016 and that period about what it's like to deal with another Trump administration, even before we are in another Trump administration. The way the news comes, the time of day the news comes, and the way that the markets have to trade those headlines.
Absolutely. Welcome to the new old trading regime. It is headline trading, absolutely back and dominating again. The markets were trading the kind of the Besant relief rally, that idea that, is a little bit more calm in markets, that there's a sensible Treasury Secretary choice. And then suddenly, out of nowhere, unexpected on timing, we get these very, very aggressive tariff headlines and a little bit out of context. And I can tell that the analysis is been so taken by surprise that it's still confused out there. These tariff headlines came in context of the drug threat and therefore the border focus. And that's why Canada and Mexico were mentioned and not a talk about Europe or Japan or any other country. And therefore, those omissions shouldn't be excited about. This is more about highlighting about how these threats will come and that tariffs will be announced first and negotiations to follow. So that means even if they're only a negotiating step, we have to go through the headline trading and the uncertainty first.
The bit that I'm really confused about this morning, Mark, is that Europe is down quite hard and China isn't.
Yeah, China isn't, I guess, partially because we've talked about this a lot. It is priced in, a disconnect from the US for a long, long time. It is priced in the new regime. Long before, we knew Trump was going to be president, it's priced in the fact that it has to disconnect from the US economy on a direct trade basis. So it's already priced in quite a negative world. It's the rest of the world that's been priced more rosily. So China being a little bit more resilient makes sense there. And there's an acknowledgement that the government in China has done a lot of policies recently to kind of slightly support the economy at the margin. So it's not that it's priced particularly negatively or positively. It's priced about right for this new kind of world. I think in Europe, there's still a more kind of growing downside. And remember, if this aggressive policy on trade is going to happen, this is going to be really bad for Europe. Germany is one of the most open economies in the world. It is going to be affected. If Trump is going to add to the cost of trade for companies and business and countries everywhere, that is problematic for Europe.
Mark, what about the bond market here? We're looking at a 4.29 on the 10-year yield. If tariff threats are supposed to be inflationary, is it priced in the bond market too?
No, it's not at all. I think there's a couple of things here. I think also the fact that, Besant wants to kind of, add duration to essentially the government's the bond market, therefore should also add some more upward pressure on yields in the long end. I think there's just appetite here to buy because of uncertainty, and that's why we've seen treasuries at the long end bought. But the fact is that all the policy mix that we're seeing announced at the moment, the possibilities there generally mean higher long end yields. So I don't think they stay down here for long.
Bloomberg Market Live executive editor Mark Cudmore, we thank you so much, of course, for breaking down the market reaction off this tariff thread. You can get more analysis from him and the team, MLIV Go, on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So I'm going to have my eye on the Mexico-exposed stocks in particular today, given the news we've had in terms of tariff coming out of Trump overnight. Now, remember that BBVA, as was being discussed on the show earlier, this stock was hit hard as Trump won the election a few months ago. That dropped down a few weeks ago when Trump was victorious. So we'll be watching BBVA today in Europe. But it's not just the banks. There are a number of other sectors. Now, the beer makers, AB InBev has a couple of Mexican brands, including Modelo, the biggest Mexican beer brand over in the country. Volkswagen as well makes cars and sells them into the US across the Mexico-US border. Meanwhile, Tenaris, the Italian steelmaker, also has operations there, and Iberdrola, the Spanish utility company, is exposed to Mexico as well. So I'm expecting all of them to be in a focus this morning. Then in terms of pharmaceuticals, a couple of bits of news coming out of Roche today. Firstly, they are doing a bit of a takeover in the US. This is for a gene therapy company, which is called Poseida Therapeutics. A massive premium on that deal. It's at around $9 a share, so that one should be rising in the US later today. But for Roche, we've also had news on a lung cancer drug study, and it doesn't look positive according to the analyst take on this. The key words from the statement is that the study did not reach the primary endpoint in the final analysis of that lung cancer drug trial, which is pretty keenly followed, so that one's set to be weaker today. Then in terms of earnings, we've got Compass out of the UK, a massive firm, a $50 billion company that does catering around offices and also airports as well. We can see pretty steady in terms of the stock for that one. But in terms of the earnings today, looking a little bit soft on some of their guidance, and there's no share buyback. Morgan Stanley says that is a negative, which will drive Compass lower today, according to their analysis. Then finally, on the ratings changes, here in the UK, we've got Next raised to outperform at RBC. Deutsche Telekom also has an outperform, that's over at Oddo. And finally, Amundi cut to neutral at JPM. That one is linked to the UniCredit news that we had yesterday.
Joe, thanks very much. Our equities reporter, Joe Easton, with a look at some of those stocks that could be on the move. We've been captivated, haven't we, by this European futures picture. Should mention the US futures actually flatlining now, so there does seem to be a little bit of a rethink just at the margin there. But European futures are weaker, aren't they? And there does seem to be a sense that European autos trade weaker. I've been looking at the various auto companies in Europe that produce in Mexico, but that might be pointless because it might just all be about the threat, the vague threat of more tariffs.
Yeah, we talk a lot about the auto space. I feel like luxury is also one that could get hard hit this morning. When you look at the futures picture, the CAC 40 is taking a bigger hit than the DAX is. When you look at the futures picture, almost double the hit. And I should say, I'm trying to figure out how that applies, though, given that so much of the luxury space has been impacted by the Chinese stimulus story and the consumer story as well. Does tariffs really change the needle for the luxury space in France?
It's an obvious and interesting target, particularly the drink sector in the past has been used by US administrations as a place to go when it comes to tariffs. It's interesting the UK market, though, is getting away with this a little bit. It's not being hit to the same degree that we're seeing elsewhere. Is that because the UK is a services sector economy, therefore doesn't get hit by the goods tariff? I don't know is the honest answer to all of this.
I'm sure if I go to the ECTR function on the Bloomberg terminal and pull up the trading relationship between the UK and the United States, I see that there is a lot less.
We run a goods deficit with the United States.
Yes, and so this will be less of a flashing red light on President Trump's dashboard, one imagines. So that could be part
picturing the dashboard.
Yes. It involves a lot of US stocks, I think. We could build one, couldn't we? We could send one. We should send a suggestion.
We'll help out. We'll help them out.
We craft that, send it over to the White House. They've got Bloomberg terminals. They could run it there.
I bet they're watching right now. I bet they're tuning in right now. I think this is a crucial one, though, because I almost am curious if this almost incentivizes some of the conversations with China from the European perspective. If you're saying, well, maybe tariffs from the United States are coming down the line, does that increase the need to maybe negotiate faster and sooner and with better conditions on things like EV tariffs, for example?
Don't know, but how many battles can you fight at the same time?
Institutional sort of capacity starts to become an issue when we talk about all these trade.
And this is where I think the UK is a problem. Has a problem here.
And that was something that was very much a feature of the first Trump administration. There seemed to be so many fronts and governments around the world having to respond on so many fronts to the Trump administration that, that's something we also have to remember from 2016.
But Mark put it quite nicely there. You're reactive. The tariffs come in and then you react to them and then you negotiate them with whatever ultimate outcome he's looking for. That seems to be the way that the market is going to have to approach this. Anyway, futures currently pointing negative here in Europe. We're still scratching our heads to try and get to the bottom of that.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies
that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Tuesday morning, a couple of minutes to go until the start of equity trading, cash equity trading here in Europe. In theory, this chart here would suggest that European equities tick a little bit higher this morning. So we close here. US equities kind of bounce along the bottom, near the bottom of the trading range in the United States in the afternoon session, then tick a little bit higher into the close. There's not an obvious reason why, from this chart, why we're seeing what we're seeing in the futures, Critty, because the futures are down, but this chart suggests that maybe we should be a little bit more neutral.
It certainly does. And when we look at the futures picture, you are seeing red on the screen here, down about 0.6%. FTSE 100 down about 0.4%. This is important when we talk about that revamp because the stock 600 in Europe, as you pointed out, was down. It's down again. A lot of that's going to be the tariff read-through. And we see that in CAC 40 futures. We're also seeing that in DAX futures. This is the closing price of the DAX, but I think it shows well that you did see green on the screen yesterday. So maybe, Guyana, this is a little bit of maybe just a pullback, a retracement of the green we saw yesterday.
Yeah, so retracing some of yesterday's gains and also mindful of what we've heard from President Trump overnight then. Just saw that futures picture tick over behind you there, Critty, to suggest that we are, of course, expecting some weakness over in Germany. And some of that could come from the auto sector. Trump tariff-exposed stocks are certainly in focus. Is that because some of the auto companies in Europe actually manufacture in Mexico, or is that because of a general thought process that goes, well, President-elect Trump is talking about tariffs against various parts of the world. He'll be talking about Europe soon. Roche is also in focus. The drug maker shares could be a little bit lower today on the back of some lung cancer news out of that company. The Compass Group catering company, their numbers not looking so bad, but the guidance and a lack of a buyback, according to Morgan Stanley, could weigh on the shares, Guy.
Let's take a look. Here we go. See how some of those single stocks will affect the market open, or does the macro top-down Trump trade exert a greater influence? We are expecting negative numbers to be posted straight out of the gate. The FTSE 100 is down, not by much. We're expecting maybe 0.3% lower for the FTSE 100. Do we see bigger numbers being posted elsewhere to countries that maybe could see greater exposure to that Trump trade? At the moment, that doesn't seem to be the narrative. Maybe the FTSE does fall in line with the wider European story. Does that allow us to question whether this is tariffs or whether it's simply something else? So here we go. The FTSE is down by 0.2%. The Stock 600 is down by now 0.4% as the CAC 40 opens down 0.8%. The IBEX is down by 0.8%. But maybe that does take us back to the idea that maybe the FTSE 100 is less exposed. We'll see how the DAX opens in just a moment, but we're still scratching our heads. Is this simply us pricing in the risk of tariffs being applied to Europe by the Trump administration, despite the fact that Europe wasn't even mentioned in the post that we saw yesterday from President-elect Trump?
Already some sensitivity, though, that we're seeing in the French markets, as the futures picture suggested earlier. Your biggest index contributor to the downside is LVMH. It's luxury. It's the read-through there. As Guy mentioned, we're still waiting on some of the German names as well. But when you look at some of the tech sector for Germany, I'm looking at SAP, for example, is one of your downside movers. Anna, ASML is one of your downside movers when it comes to the tech space. I'm curious how much of that is the China exposure as well. And on top of that, this to me is the Trump trade very clearly, and that's BBVA. That has so much Mexico exposure. here, it's getting hit pretty aggressively and dragging down the stock 600 with it.
Yes, and you can certainly see when you look at the broader sector picture, everything is in red. No sector is in positive territory right now. Autos and parts, as expected, that is an area of weakness, and that is the worst performing sector. Stellantis, Valeo, BMW, Volvo, all down by more than 1.5%, as is Mercedes. So broad selling across the auto space. And as we said, is that, some of those companies do manufacture in Mexico, but there is just the broader thinking. If we look at other sectors that are in focus, consumer products and services is weaker. There's Compass in there, and that was one of the ones that we talked about at the open. That particular business down by 3%.
LVMH is down by 1.6, biggest points drag on the stock 600 this morning. So maybe this is, again, the area that Trump may focus on, or market extrapolating an area that he may focus on. The bigger question here is, though, I keep talking to guests and they keep telling me that all the bad news is in Europe, that Europe is super cheap, that this is as bad as it gets. But it keeps maybe getting a little bit worse.
Yes. Well, this is a really interesting question. The extent to which markets have priced in any geography what a Trump presidency means, because knowing what a Trump presidency means is very difficult. And if you price everything, if you price him word for word, surely that is not priced, is it? I mean, this would be something we continue to have conversations about.
Well, as we speak, the DAX has opened, I feel like a minute earlier than it usually does here. But you are seeing, of course, the car sector really take a beating this morning. So Daimler Trucks is your biggest percentage drop that you're seeing in the German index, down by about 3%. But BMW, Volkswagen right on its heels. You are, however, seeing defense stocks actually in the green in the DAX. So that feels to me like a Trump trade right there.
That seems logical, doesn't it, though? In some ways, this again is an idea that Europe is going to have to stand on its own 2 feet.
I'm sorry, is the market right? What?
The market's always right.
Well, let's bring in a guest who can maybe give us a little bit more insight here. Julius Bendikis, Europe head of macro and dynamic asset allocation over at Mercer, joining us around the table. I'll put that question to you. Is the market right, or are they overreacting?
I think European equity market is reading into a lot of things right now, but I think it's fair that it's actually underperforming. And I've been trying to solve that puzzle all morning myself, but I think when China coughs, Europe catches a cold. When US coughs, Europe catches a cold. And right now, the fact that there's conversation around more tariffs on China and the fact that yuan is weaker, that makes Chinese exports a little bit more competitive. So that is a headwind for Europe. Then if there's a headwind for China because of tariffs on Chinese growth, that is a headwind for demand for European goods, and that's why you're seeing a bit of a pullback in luxury stocks. You also have the French politics, which could be a bit of a headwind on market. And at the same time, when US applies tariffs on other countries, that is also a headwind for the US growth. And Europe depends on US demand. So I piece these things together, and it sort of adds up to a bit of a pressure on European stocks, which I guess that's why maybe they're pulling back this morning.
Well, as we speak, you kind of talked about the fundamentals there and piecing it all together. At the same time, we are getting headlines from the ECB's Guindos as well, talking about that weak growth is one of the main risks that they see now. They're again talking about getting inflation on target. Is inflation still a problem right now, or has the narrative shifted?
I think in Europe, inflation is a problem broadly resolved. The labor markets are rebalancing, and there's certainly, downside risks to growth, which could lead to lower inflation and therefore trigger a more dovish ECB. So I think in European inflation is a problem resolved. I think global inflation, particularly the US inflation, is a problem being resolved, but there's some risks to it, as you might expect coming into next year because of the new administration.
Julius, what do you think? Help us understand what is and is not priced when it comes to trade tariffs around the world, because the market, I guess, knows better than to take every statement on tariffs at face value and price that in directly. And so that takes us to a situation where some argue that tariffs are priced and others argue that tariffs are not priced, and they both could be right, but they're arguing it from different perspectives. What do you look for the market to price in on the tariff front?
I guess right now market is pricing the risks around it. No one can be certain because, numbers can change. So it depends on actually when things get announced, then the market will be very sure. Right now it's just speculation, and every day the narrative changes. So I'm just looking, for the volatility around the narrative. Tweets and all of that will trigger just market vol. Do I want to make a big directional bet on a tariff right now? No.
Right.
I think the market has priced in quite a bit, but probably not fully.
But do you know enough about the Trump administration and its priorities to come up with a strategy around, for example, European stocks? Maybe not this sector, because this sector is going to be hit by tariffs of some magnitude. Maybe not this sector because some other impediment will find its way there. What are you thinking about when it comes to European asset allocation and Trump?
I try to design a high-level sort of vision for what administration might do. stuff on tariffs, stuff on immigration, stuff on global politics and geopolitics. And it's still a fairly broad picture, so we don't know where we're actually going to land. So right now, I would say I'm being a bit more cautious, and I'm not making major macro bets on Europe, whether it's in equities or bonds, and pulled back that risk over the last couple of months. And then I'll react as things evolve, because right now it's still a lot of uncertainty. It is much more than before, and we have to take a few pages from the playbook back from 2016. And at that point, being a little bit more cautious was probably the right thing to do.
We're all focusing this morning on the risk that Trump poses to Europe and the threat that comes from the United States. Isn't the danger inside the house for Europe? Shouldn't we be looking more internally to the risks that currently are posed by European politics? Germany's all over the place right now. There's a note out this morning from Steve Barrow over at Standard Bank, too big to bail, talking about a Greek-style situation in France and how you could see political collapse followed by a debt crisis that could really roil European markets in a way that we haven't seen for a very long time, and maybe even greater than what we saw in the European debt crisis. Are we underpricing the risk in the house rather than the risk outside the house?
Well, there's always something wrong with Europe. That's the old adage, and let's just remember that.
But this is quite a big. This feels like it could be quite substantial.
I don't have too much sympathy with sovereign debt crisis number 2.0, but never say never. There's risks, but at the high level, I think yes, politics are not great. There's a lot of sort of divided. There's not enough political will to do structural change, and I think European manufacturing sector is weak. And there's a lot of risks coming from the trade and from China.
But people talk about all the risks being in, that Europe is super cheap, that equity markets here are... We've never seen such a huge spread with the United States, and it can't get any bigger because valuations are rock bottom right now. Do valuations get cheaper if the French government falls by Christmas? Is the potential for... Or does that just get felt through the currency channel? Does it get felt through the equity channel as well?
I suspect it could be a little bit of both, but you're right in saying that European equities are very cheap. And if there is a ECB that is very dovish, or if there is a sort of negotiated trade war truce, there could be a cyclical pickup in European equities versus others, and there could be a bit of a catch-up.
Is that a tail risk or a central?
I would say there's more a risk around the corners rather than something I would bet on centrally.
Okay.
However, Europe can outperform, but for it to catch up properly, you need to see structural change.
Do we still need to be factoring in what happens in the budget? I mean, Guy kind of talked about that a little bit in terms of France and the ripple effects there. You mentioned a financial crisis as well. It feels like that narrative has completely come off the table.
I think the risk is there. There's going to be a lot of volatility around it, and the spreads between France and Germany can be
But people aren't trading it. They're like, I mean, it feels like a very complacent area relative to the volatility elsewhere. Again, to Guy's points.
I guess the market has a lot of big fish to fry right now, and probably French politics is downright the pecking order with the new administration, China response being top of mind. So maybe there's something the market is overlooking, but again.
I think we fry fish, not the French, but yeah.
How inflationary a world are you preparing for then, Julius? Just broadly, there's been a lot of conversation about what Trump will mean for inflation, but even before a Trump presidency, a lot of people were lining up reasons why inflation might be more elevated than it was, post the GFC, and we will never go back down to those kind of levels of inflation. What are you preparing for?
Well, before Donald Trump got elected, I was lining up for disinflation to continue because I had a lot of confidence that the wage growth is indeed coming down. And from the conversations with our careers team in the US, that narrative is reinforced, with executives penciling about 3.5% wage growth. When that happens, that is consistent with inflation at 2%. So I was very comfortable with the disinflation narrative, and I was certainly pushing back on those who argued higher for longer for inflation. If anything, you could argue for higher for longer for rates to ensure that inflation is there, but I wasn't too worried. Right now, I think there's some risks around the edges. Coming from tariffs, there could be a one-off pickup in prices. If there's a big disimmigration from the US, there could be some pressure on wage growth. And fiscal stimulus at the time when the economy is arguably close to capacity, that is potentially inflationary. So risks have elevated, but as long as I see wage growth coming down, which has been the case, I'm fairly comfortable.
Nice to see you, Julius. Thanks for stopping by to see us. Joining us around the table this morning, Julius Bendikas, Europe Head of Macro and Dynamic Asset Allocation over at Mercer. Picture doesn't look particularly good out there if you're long risk assets this morning, particularly when it comes to the centre of gravity here in Europe. Let's take a look at the core 6 and figure out exactly what is happening. As you can see, significant amounts of red on the screen. LVMH seems to have come off its lows, but as you can see, there's an awful lot of weakness out there at the moment. Schneider Unchanged looks like an anomaly. I'll come back to that one in just a moment. Let's get some other moves, figure out what is happening here with Joe Easton.
So it's all about those tariffs today, Guy, particularly over on the Mexico exposed board here. As we said earlier, BBVA does have big Mexico exposure. It did drop after Trump was elected, so that one coming down 2.4%, as is AB InBev, the big brewer that has Mexico operations. Tenaris in the metal space, and also Daimler Truck, all of them with Mexico exposure. Daimler Truck in particular exposed Mexico, coming down 4.3%, but the auto sector in general is weak today on the broader Trump concerns, of course. Then we will flip over and check in on the drink sector more broadly, because I also wanted to mention Heineken, which does also have some Mexico exposure, and Diageo and Pernod. Potentially that part is more related to the China risks around the tariffs there, given the big market for both of those companies. So really all about the tariffs today. Then in terms of the single stocks, we have got Roche on the radar, and there it is coming down. They've done a takeover deal today over in the US, but also weak lung cancer drug study results. They have missed the primary endpoint, and that's weighing on that one this morning. And also in the UK, we're looking at Compass. That one was called lower by analysts over at Morgan Stanley, and they've been proved correct, because that one down 2.9%. That is a strong and steady stock. The airport catering, office catering company, no buyback is the comment from Morgan Stanley that seems to be weighing on that disappointment around capital returns for Compass. Then finally, wanted to bring up this morning call on a Monday, because this relates to the Italian banking news that we had yesterday. Now, Amundi actually has a deal with UniCredit on asset management, and analysts over at Exane saying that this pact potentially comes into focus under threat if the deal between UniCredit and BPM does go through. So they've got their eye on that one. And Amundi falling today, down 2.5% over in Paris.
Joe, thank you very much. Joe Easton from our equity team there with a look at some of those analyst moves and indeed other stocks and sectors. And I'm glad he pointed to the drink sector, because I'm not sure we've given that one enough coverage this morning. 8:13 here in London, 9:13 if you are over in Germany, and it will be to Germany that we will go next. Germany's industrial downturn deepens, with ThyssenKrupp steel unit planning to cut 40% of its workforce. We will feed that into the wider conversation of German industrial woes. That coming up next from Berlin. This is Bloomberg.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Welcome back. You're watching the opening trade, 17 minutes into the equity market session. This is what we're looking at across Europe. It's interesting, actually. It's a reasonably even story, as you can see, in terms of how we are trading and kind of the evenness across Europe, I think, is fascinating. The market is just pricing Europe as a kind of blob this morning. It is exposed to the Trump tariff trade story. There are some specifics around what is happening with luxury. There are some specifics around what is happening in the auto sectors we've been talking about. But Europe is being, despite not being mentioned by Trump, heavily impacted by the Trump story overnight. This as we continue to watch what is happening with French and German politics, which in some ways are big stories in Europe that aren't being talked about a great deal. So let's talk about them now. Alan Katz is in Paris. We need to talk about what is happening with this French budget and whether or not the current French government survives until Christmas. Ollie Crook is in Berlin on Germany's macroeconomic troubles. Let's start with you, Ollie, and talk about what is happening here. More bad news. It keeps on coming. The latest being the German conglomerate ThyssenKrupp announcing plans to reduce staffing at its steel unit by 40% over the next decade. Just reflecting in some ways the challenge that so many of these big German industrial companies face right now.
Yeah, Guy, and not just reflecting it in sort of a broad sense, reflecting it in a very real sense. Because again, we've talked about it for a number of years now, more than 2 years, manufacturing contraction in Germany. We look at the PMI charts. We sort of have an illustration of what that means on paper. Again, what we've got in the last couple of weeks is that being illustrated in the real economy, ThyssenKrupp being the most recent. And we're talking huge numbers here. We're talking about 11,000 job cuts over at ThyssenKrupp. That, as you said, 40% of the steel unit. That comes after Friday. Bosch announced 5,500 job cuts. A few days before that, it was Ford in Europe, 4,000 job cuts. And then that doesn't even touch the Volkswagen job cuts, which are going to be probably closer to 10,000 to 30,000 job cuts. So in sum, we're talking somewhere between sort of 30 and 50,000 job cuts, broadly speaking, across the German economy, announced over just the last couple of weeks. And these are not small companies, right? These are companies, many of whom that have been operating within Germany since the 1800s. Trying to appraise where we are in the cycle is the question that I'm asking myself. Where are we? Are we at the beginning of job cuts? Are we sort of towards the end of it? I talked to Carson Bresky yesterday, who's really been sort of out in front on analyzing what's been happening in this economy, really got it right, a couple of years back. He says he feels that we're right still in the center of this. There is still more pain to come. We still, for example, have not heard from BMW, from Mercedes. We haven't had any job cuts there yet. And I think another thing to pay attention to is it's not just the big companies. We had an IFO survey out a couple of days ago. The share of German companies, remember, SMEs are huge in Germany, huge part of the economy. So the share of German companies that fear acutely for their economic survival has risen to 7.3%, up from 6.8% just last month. So again, this is sort of continuously on the downturn and hard to see an exit anytime soon.
And how is this going to shape the election or be reflected in the election then, Ollie? Because it must be part of the overall national narrative at this point.
Absolutely. I mean, I will say that I probably wouldn't want to be the incumbent coming into this election with a couple of weeks to go and basically, tens of thousands of job cuts coming in. It will really speak to some of the detractors of Olaf Scholz, the SPD, and the coalition, saying that they've basically mismanaged the economy. I mean, this could go a couple of ways, right? On the one hand, this could really help the sort of Germany first parties, the far right, the far left, really saying that Germany needs to prioritize itself. It needs to push everybody away and really needs to continuously, focus on itself. That being said, the AfD and the far left, they don't really have have the sort of economic chops. They don't have the reputation for dealing with the economy. So likely this could continue to support the CDU, which you can see is still sort of way out in front consistently. The problem is that Merz is basically, in terms of his growth philosophy, it's basically cutting tax, cutting bureaucracy, cutting regulation, cutting benefits, cutting pensions, but that does not fix the underlying problem here. The underlying problem here is that there is not the export markets that there previously have been for the German economy. And when you wake up and you see the sort of tweets, or I should say the Truth Social post by Donald Trump slapping, potentially tariffs at 10% on China, you look at Mexico and Canada, I mean, Germany has been really enemy number one for the Trump administration the last time around. That does not bring any sort of reassurance. So the question for the Germans here is, yes, you can have these sort of tweaks here on the taxes and this, that, and the other. That could boost growth in the medium term. What you're failing to have is owning an industry that's really following into the future, particularly with the auto sector falling behind on EVs. And that is what the Germans need to sort of determine. What are they going to be competitive with the Chinese and the United States? And that is a question they have not yet answered.
Industrial concern in Germany spilling over into politics. Politics in France maybe spilling over into industry. Ollie, thank you very much indeed. France's far-right leader, Marine Le Pen, renewing her threat to bring down the government in a no-confidence motion over next year's budget. The move, of course, compounding uncertainties that are pushing up measures of risk on bond markets to fresh highs, the spread between OATs and Bunds. We're joined now by our Paris bureau chief, Alan Katz. Alan, is it now the base case that Le Pen is going to bring the government down, she will vote against it, and the Barnier government will be gone by Christmas?
I would hesitate to say there's any base case. It's really unclear what her ultimate goal is. The reason being that for several months, Le Pen and her troops sort of said, we're going to be responsible people. We're going to, we're not going to bring chaos to France. And then suddenly, in the last couple of weeks, she's really shifted, including yesterday, to a much harder tone, suggesting that she could, in fact, as you mentioned, bring down the Barnier government over the budget vote in December. And the question is really, to what end would she do that? And it's not really clear how it would help her. Now, on the sideline of this, there's a separate court case against her, which the judges could rule that she would be ineligible to run for 5 years, which would throw up into question her presidential ambitions. Is that what's sort of pushing her to be harder or harder against Barnier? That's possible. But the question again is, how does it really affect her, unless the goal is really just to remind everyone in France, judges included, how much she matters right now. And that could be the thing that's sort of pushing her to do it, or at least to threaten it. It doesn't necessarily mean, though, that she will actually do it, which is why I come back to the issue. I'm not sure there is a base case. We really don't know how she's going to play this at the end of the day.
So, Alan, what does Michel Barnier do in this situation? What can he do to get this budget across the finish line?
So he will probably need to give her some sort of fig leaf, right? He will have to. The budget right now is with the Senate. There will be the French equivalent of what in the U.S. you'd call a conference committee, where they sort of negotiate between the Senate and the lower house, which is called the National Assembly in France, to try to come up with some sort of compromise solution that will probably not really go anywhere, and then the government will be able to pass it through this constitutional measure called a 49-3, which allows it to just adopt the thing without an actual vote. And what that allows you to do is you can adopt essentially any version of the budget that you want, either the very original version that you put in, or something with a few amendments added in. It's as you like. And so in that process, he could then add one or two sort of little budget gifts, essentially, to Le Pen in order to say, look, I've agreed to your desire for this thing or that thing, therefore you should help me out. And that would allow Le Pen to say, look what I got out of the Barnier government too. So that might be a solution. That said, she might say, no, I'd rather actually have you overthrown and sort of recreate political chaos in France. It's really hard to tell.
Alan, you gave us a really good explanation, including talking about the court case and asking lots of questions about why her thinking might have changed here. But her thinking up to this point has been, we've been trying to reinvent the National Rally, the National Front as was. We've been trying to reinvent it. We want to present ourselves as serious. Therefore, the idea that we would just rashly bring down the government, maybe that's not the thing we want to do. We want to keep our powder dry for another presidential election. So do we sense that thinking has changed?
Again, it's really hard to tell, because it could be just purely brinksmanship on her part, with the idea of saying, I just want to remind people how much the national rally really matters, and why it has become the kingmaker, because you have this left bloc that's in absolute opposition to the government. They'll vote to try to bring down the government at any point, and so that leaves the RN as the kingmaker. So it could be just bluster, essentially, or it could be serious. And again, France doesn't have a real history of parliament, well, not in the last 70 years. For a long time, has not had a real history of parliamentary democracy. It's been much more like much more of a presidential system. So it's really it's uncharted territory for France for quite a long time. So it's really hard to tell how people will act.
It really is. Alan Katz, thank you so much for providing us with that explanation from Paris. Coming up on the programme, we're going to talk about digital assets, their future in the UK, regulation behind them as we get ready for another Trump presidency. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg.
This is the opening trade. We're about 30 minutes into today's session. Red across the screen. It feels like this is, of course, a reaction to what we're seeing from President-elect Donald Trump in the United States and his comments around the tariff story. Now, he hasn't specifically mentioned Europe yet. He's talked Mexico, Canada, China. But it feels like Europe is taking the brunt of the market reaction, specifically when it comes to luxury and the auto space. Euro Stoxx 50 down by about, well, we'll call it 1% if you round up. FTSE 100 right on its heels, down by about 0.5%. There's a lot going on in terms of how we navigate all of this. The UK seems to be a little bit of a relative safe space, and I really underline the relative safe space when we talk about this market reaction. I wonder how much of that will change in the coming months. I want to stick with the UK, though, and talk about the most powerful business lobby that has warned the government that it is in danger of losing the trust of corporate leaders if it fails to mitigate the impact of last month's budget. But Chancellor Rachel Reeves has defended that very budget. She told the CBI's annual summit in London that it was important to put the public finances on a firm footing.
I've had lots of feedback on the budget, but what I haven't heard is any credible alternatives to what I did to put our public finances on a firm footing. What I am really clear about, and I've said it already a couple of times today, that public services now need to live within the envelope that we've set. We will not be coming back to top up those budgets. We have set the envelope for public spending.
Get a little bit more reaction off that. Bloomberg's UK correspondent Lizzie Burden joins us around the table. Lizzie, walk us through the reaction there.
Well, it was negative. I mean, I was at that conference last year and Keir Starmer was a rock star. That was, though, when he was in opposition. Now, of course, they've had the budget, £40 billion worth of tax rises, most of that aimed at employers through this national insurance contributions rise. And so the CBI chair, Rupert Soames, is saying you've got to make up for it somehow. And that's why today, in part, we're going to be getting the white paper, Get Britain Working, and Keir Starmer is going to be saying, look, we'll take away benefit spending from people who refuse education or training, and the goal is to get employment to 80%. It fits the message from Rachel Reeves that you heard there of fiscal responsibility, but, you know, it's going to be controversial within the Labour Party in some parts because ultimately that message is, as I once said to you, Guy, get on your bike.
And I did.
And he does, yeah, regularly. We witness. Let me ask you about the BOE Watchers Conference, because that was also happening. So the Bank of England Watchers Conference in London yesterday. Were there any clues there about the impact of an incoming Trump presidency?
Yeah, it was really interesting to hear finally from Swati Dhingra on this, because she is the resident trade expert on the Monetary Policy Committee, and she says that because of trade being diverted from China, actually for the UK it could be disinflationary. We also had her joining this collective rant on the UK labour market data. She was born in India, and she says if India can get its jobs data sorted, the UK certainly can, because at the moment it's in the way of the policy making. We also heard from Claire Lombardelli, the Deputy Governor, first time she's given a speech since being on the committee, very much stuck to the script of the last meeting's minutes, saying, yes, they're making progress on disinflation, but the risks are balanced, so they're going to be data dependent. But interestingly, the main thing she was talking about was the Bernanke review, because she's in charge of executing it. She says they're not in a rush to do anything about it, but hinting firmly that she's not up for copying the Fed's dot plot.
Lizzie, thank you very much. Bloomberg's Lizzie Burden with the latest on those UK themes. Sticking with the UK and regulation, regulators are aiming to finalise rules to oversee the crypto sector by 2026. This as the country tries to keep pace with developments in the US and in the EU. And as crypto ownership in Britain continues to grow, we're now joined by, for an exclusive conversation, by Matthew Long, Director of Payments and Digital Assets at the UK's Financial Conduct Authority. Matthew, thank you so much for joining us. And you put out a report this morning with details of the UK and its relationship with crypto markets. In there, we see 12% of UK adults now own crypto products. This is ticking up slowly. Just spell out for us, because I think it's useful to keep saying, how much protection do those holders of crypto assets in the UK have right now?
Yeah, thanks very much for having me this morning. At the moment in the UK, there is a money laundering regime and some financial promotions protections, but there are no protections for those that invest in crypto. So, unfortunately, if people do invest in crypto, our message is be prepared to lose all your money.
Be prepared to lose all your money. Well, that's an interesting place to start our conversation. And I'm taken by the fact that, you know, you've been doing this for a couple of years now. Your background is in financial crime. Is that where your priority is then when it comes to regulating as opposed to incentivising the crypto industry?
Not at all. I mean, any regime has to take account of all of the different ways we want a safe market and we want consumers to be protected. So what we're delivering is a regime that started with money laundering, because that's where some of the threats were. It then moved into financial promotions. We're making sure that customers could see good messages and safe messages, and then we move on to the wider regime. So the wider regime, as you've said, is coming in 2026, and throughout next year, we've got discussion papers where we're discussing with industry how we're going to build a great regime, and then also consultation papers where we're going to say what the rules might look like and give people the opportunity to comment. So I've had many really good conversations recently with industry about how we're going to learn from MiCA, learn from other regulation around the world, and bring a great regime for the UK.
Matthew, is the UK behind the curve? The Americans are talking about a strategic stockpile of Bitcoin. We're still dealing with the kind of regulations that are going to protect retail consumers. We appear to be kind of watching everybody else make the running on this. Why is the UK taking this more circumspect strategy, dealing with this more circumspect strategy that you're outlining?
Yeah, I don't think we are behind the curve, and I don't think it's circumspect. I think what we've done is we started with stablecoins as the previous government asked us to. That's now been moved into one regime by the current government. So we're responding as we would as a regulator to the government requests, but we're working directly in the global market as well. So I currently chair the IOSCO work on behalf of the Securities Organization, which includes the US, includes MiCA countries. And within that, we come up with 18 global recommendations which we're implementing globally. So so what we're delivering at the moment is a regime in the way that we've described it that will be ready and good for the UK. But I directly work with the US and directly work with MiCA colleagues.
The other day at the Mansion House, the Chancellor talked about the fact that regulators maybe were standing in the way of growth. Is that a message that you've heard? Is that a message that you think regulators more broadly should be hearing?
So as a regulator, we have a secondary objective for competition, and it's a key part of what we do. We absolutely are committed to competition. In terms of growth, our job as a regulator is to make sure we're taking account of growth, and it's one of the things that have been written to by government to make sure that our plans include it.
Matthew, it's Creedy in London. Talk to us a little bit about how the crypto story and the crypto regulation comes either in tandem or in contrast to some of the moves in central bank currencies, CBDCs. We know that the digital pound is something that the BOE is talking about. A digital dollar, certainly something the Fed is talking about. A digital euro already exists out of the European Union. How are you viewing the contrast between CBDCs and crypto?
So in terms of the direction of CBDCs, you'll see that the government has particularly asked the Bank of England to do some work on that, and we'll directly work with the bank in that. We also consulted in our regime about stablecoins and then systemic stablecoins. So obviously what we're making sure is we think about the role of stablecoins and CBDCs. So ultimately we support the work of the Bank of England on CBDCs, but we've also looked at other options which are stable coins and how we would work between both the conduct regulator and then ultimately the Bank of England.
So Matthew, I'm going to continue with that concept of kind of international currencies as well. There's a lot of foreigners living in London, myself included, who are looking at a weakening pound as well and saying, well, maybe, this is not my personal view, but this is one that exists in the narrative, maybe if you are looking at a dollar strength and you're an international investor that's being kind of affected by that, maybe crypto as that store of value is the place to put your money, except the government or regulators like yourself are getting in the way. How do you respond to a question like that when other currencies, more traditional currencies, are weakening?
Yeah, I understand particularly the challenge that you're facing and the discussion that you're having. Ultimately, we haven't got a regime yet. So we haven't got a safe market from our perspective, and we haven't actually got the consumer protections that we think you would want to make investments. So that's why, unfortunately, our message is still about, buyer beware. If you are going to invest, you've got to be prepared to lose your money. What we are doing, though, is making sure through the money laundering regime and the financial promotions that we are putting good safeguards in place. And as we get towards 2026, there will be a better market and more protections for you. So my message at the moment is still be very careful with any investments you make as any investment, but particularly in crypto, because we haven't got the protections that you can afford to in the UK.
Well, Matthew, you mentioned that kind of buyer beware dynamic, and we've seen this show up in the likes of exchanges, for example, in the United States. Robinhood has come under a lot of scrutiny about this, given their exposure. Are you partnering with the likes of Robinhood, among other kind of crypto exchange operators, to help create that education? What does that dynamic look like?
So, of course, I won't make a comment on any current applications or any activity with particular firms. But what I will say is that we are meeting with all of the significant industry bodies and the industry partners to work through what the regime should look like. I think that it's really important that when we build this regime that we've taken forward what is going to be helpful for the country, but particularly also that we think about that dynamic where companies are based all around the world. So we have to be open for good regulation globally.
So back to where we started the conversation, in a sense, Matthew, the fact that we see increased ownership of crypto by adults in the UK. Are we seeing this normalisation of crypto ownership taking place in a way that the FCA is comfortable with, or is that a decision for government?
Yeah, it's not a question of whether I'm comfortable or whether we're comfortable. It's a question about our research is so that we can keep our finger on the pulse in terms of what consumers are doing and make sure that we prioritise where we can make consumer activity safe and also take into consideration what the market should look like going forward. So I think it's really important that this research tells us today the volume of people and that we'll respond to. That's why we do the research, so that we can have conversations with you today to actually get our message out and make sure we build a really good and safe regime.
Thank you very much, Matthew. Good to speak to you. Matthew Long, Director of Payments and Digital Assets at the UK's Financial Conduct Authority. Coming up on the programme, the EU proposes sanctions on Chinese firms as the G7 prepares to increase pressure over alleged support for Russia's war efforts. More on those measures next. This is Bloomberg.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport, it's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We're about 45 minutes into today's session, seeing red on the screen and continue to talk around some of the tariff impact that we may see out of the United States currently showing up in Mexico, Canada, and China when it comes to those comments from President-elect Donald Trump. Could Europe be next? And what industries get caught in the crossfire? Right now, you're seeing that showing up in the French and the German indexes, auto and luxury getting hit especially hard. But outside of that conversation, there's some other movers you want to keep an eye on, specifically in the banking space and the Italian banking space in particular. Unicredit down about 1%. Banco BPM, on the other hand, higher by 0.9%, all from some headlines, some consolidation, but not consolidation, right. I think is the way to put it.
Yesterday, the story was all about Unicredit making a play for BPM. And we were mindful yesterday in our conversations that Crédit Agricole owns a stake in BPM and wondering whether that they might have something to say about this. They've been making some comments this morning saying that Unicredit didn't ask permission to exceed, they have not asked permission to exceed their 10% stake in BPM. So that doesn't suggest perhaps that they're in a rush to come forward and make some kind of counter offer. But there is a lot of chatter, and this has been picked up by the Italian media, about whether Crédit Agricole themselves might have somehow, through some derivatives, again, this is all rumours on trading floors, quoted in the Italian media, but it does seem to be moving the share prices, whether they have increased their stake in BPM.
We don't know.
A lot of smoke.
A lot of smoke. How much signal is there in the noise around all of this? We don't know yet. We were caught by surprise by the Unicredit move once again. What does it ultimately do? I suspect the Unicredit has its objectives here. We don't know whether it's Commerzbank. We don't know whether it's BPM. We don't know. It could be another bank entirely. It does seem as if Orcel is on the move at the moment, and certainly that's having an effect. But how does everybody else react to it? Is he the Donald Trump of European banking at the moment, catching everybody by surprise and basically kind of forcing everybody to react in a way that they hadn't expected to? Or is Crédit Agricole already looking forward to this and is positioned for it? I don't know. The market is really struggling with who is defining the narrative at the moment, and that's been the story of this morning. Who's in control of the narrative? In Europe, it seems to be Donald Trump. In European banking, it seems to be Andrea Orcel.
I'm going to nerd out here. This, to me, I'm having so much deja vu around the BBVA Sabadell deal because ultimately it's coming down to we want the bigger markets, we want exposure internationally, except you get in trouble with your homegrown government. And this is a very story you're hearing from the Italians. You heard it from the Spanish as well. You've heard it from Germany. We're talking about in the break about how you're starting to see kind of protectionism, but on a different level.
Yes, but I suppose there's one difference here. Maybe there's a difference here in the sense that what Orcel is doing hasn't necessarily got the blessing of the Italian government.
Yeah.
So he may be loading up on Italian assets here or trying to, but it runs counter to another plan that the Italian government had, which was to create a different force in Italian banking. We've heard from from the Italian finance minister that they have not given their blessing, nor have they withheld it, but they haven't given a verdict yet on what they think of this.
Why don't governments want domestic consolidation? Is it because they want to have enough competition within their domestic market so that actually there's good price competition? In theory, though, cross-border would solve that problem, but it does seem as if European governments are still very wary of cross-border, which makes you it does slightly take me back to the financial crisis and the Eurozone crisis, where that kind of spillover effect from other people's financial crisis was something that Europe had to deal with. And I think a lot of politicians in Europe still bear the scars of that. Why should I take on your banking risk into my markets? Why should I have the spillover effects of your banking?
Yeah.
And that it just speaks to this crisis at the heart of Europe, which is we don't have this single market in a way that you would envisage, which is why we're struggling to make this thing work.
Next steps here, post the government say, is whether or not the ECB gives it their blessing as well. Because at the end of the day, the concerns around this from the domestic side is, yes, we don't want too much international exposure to domestic banks, but you also have that read-through into consumer rates. For Germany, it's an overbanked space. For Italy, for Spain, these consolidations make an active difference when it comes to the actual rates and borrowing and consumption factors for some of these countries, maybe perhaps inhibiting some of the outperformance of the periphery. This is all happening in the background. I think the main topic for Europe right now is what's happening in the defense space. Certainly a topic at the G7 where nations are set to increase pressure on China for allegedly supporting Russia in its war against Ukraine. That's according to an early draft of the communique seen by Bloomberg as foreign ministers, as I said, meet in Italy. Bloomberg's managing editor for European economy and government, Ben Sills, is all over this story. Ben, what might we actually get from the G7?
Well, the main thing we're going to be looking for today is confirmation that they've signed off on this communique that we saw yesterday. That's going to be, assuming it comes through, a pretty significant escalation in their stance towards China. Earlier in the year, they were calling on China to take measures to ensure that Chinese firms weren't supplying the Russian military. Now it's the G7 themselves that are pledging to take action. And we saw last night, off the back of that meeting, that the EU is proposing specifically sanctions on exactly those firms, the Chinese firms that the EU has evidence of supplying drones, supplying microelectronics to the Russian armed forces.
Ben, is this a significant escalation, or is this sort of another iteration of what we've heard before? Help us get some size and scope around this.
I mean, this is the 15th sanctions package that the EU has proposed against Russia. So, in that respect, you know, all of the low-hanging fruit, all of the kind of like the most impactful measures have been done there. So it is incremental. On the G7 side, I think that you can see that the split is increasing between the G20 type conversations that we saw in Rio last week, where there is a search for common ground with China, with India, with Brazil, and the rest of the global south, whereas the G7 is very much an alliance in support of Ukraine, and much tighter, and really increasingly willing to show those global kind of dividing lines.
Well, Ben, at the same time, there's a question of how does Europe not only ramp up its defense in the war effort against Russia and via Ukraine, but just for their own defense as well. And some of that is coming out of reporting that France is dropping a buy EU demand when it comes to the defense fund. Basically, other international defense makers can access those EU-funded initiatives. Can you walk us through the logic there? This has been a hard line for France for a very long time.
Yeah, I think this basically boils down to the UK. The Europeans and even the French, who tend to have the most kind of nationalistic, most protectionist attitude towards their industry, even the French realised that if you're going to have a credible European defence strategy, you need to include the British. And if you're going to include the British, you need to include British arms producers, British production, British industry. So I think that's the thinking there. And we see that the main four, the biggest four spenders in EU defence, that's Germany, France, Italy, and Poland, were meeting with the Brits yesterday, and that, I think, points to the direction of travel in that respect.
Ben, great stuff. Thanks very much indeed. Ben Sills joining us out of Madrid. Let's get back to the politics from a different angle. The big story this morning, Trump's tough talk on tariffs aimed at Canada, Mexico, China, not necessarily Europe, but European markets having to price it in. Valerie's back around the table with us. Strange morning in many ways.
Yeah, it seemed like the only asset class that had the clear trade was in the dollar, quite frankly. Yep. So perhaps, we can draw conclusions from today's price action that the cleanest way to trade these tariffs is just an FX, right? We had a stronger dollar. If you look at how the Mexican peso was traded, it's now weaker by 1.5% on the session. But a lot of this, we have to remind ourselves that a stronger dollar does stand at juxtaposition to another part of Trump's mandate, which is to bring back U.S. manufacturing, to onshore manufacturing. A stronger dollar is a headwind for that. So maybe a risk, I guess, if he goes and pursues stronger tariffs, that he has to do something, maybe something else to combat this dollar move, else he is going to not be as successful in the onshoring move that he is hoping to see.
And I suppose the other thing, we've been reminded about the way that the market trades headlines, but we reacted really quickly and then saw a lot of the reaction unwind, Valerie, which is probably something we're going to keep which we might see replay, and something we need to keep bearing in mind as we see more and more headlines from the president-elect.
Definitely. And if we look at how his Truth Social post, when he was talking about the China tariffs, he used the word additional. Does he mean additional to what's already on China or additional to, that bigger 60% number that he already talked about? A lot of that confusion still taking place right now with how this shakes out in the markets. But definitely FX volatility, and FX seems to be the cleanest way to trade these tariff headlines.
We will get used to that, and we'll get used to the ambiguity. Valerie, thank you very much. Bloomberg's Valerie Titel with some of the latest on the tariff story, which is looming large over European stocks. All of the sectors in negative territory today. We see some of the markets most exposed, the French, the German, the Spanish markets, all weaker. Autos and parts is the weakest performing sector. That sector down by more than 2%.
To Valerie's point, though, does the ECB just have to cut rates aggressively to deal with the tariff threat that is coming, and what impact could that have on the euro? It's really going to be interesting to see how this works its way through the system and the unexpected bits that the markets are ultimately going to have to price in. But this morning, I just find it fascinating that Europe's at the epicenter of the tariff talk when
and China
it wasn't meant to be.
Chinese stocks were up.
You mentioned the automakers is showing up in the drink makers as well, not just because one of the reciprocal tariffs from the United States to Europe, it's actually in the liquor space, the whiskey space as well. And so is, by the way, the impact on the China side. So this is where it shows up. You're seeing a bigger hit here where you have AB InBev down about 3%, Heineken, Diageo, I'll add to that as well, Pernod Ricard and Remy Cointreau both down about 2% as well. A lot going on, a lot of red on the screen, some pockets of green when it comes to things like defense and some of the banking stocks. That does it for the opening trade. The Pulse is up next. Probably continue on this conversation of banking consolidation, President-elect Trump's impact on the rest of Europe and the rest of the world. They're going to dive into that next. Stick with us. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Stocks fall, the dollar strengthens as President-elect Donald Trump vows to impose additional tariffs on China, Mexico, and Canada.
The EU proposes sanctioning Chinese firms it says are aiding Moscow's war effort in Ukraine. More restrictions on Russia's oil tankers are also said to be under consideration. Plus, more economic troubles for Germany as ThyssenKrupp announces plans to cut 40% of staff from its struggling steel unit. So there is quite a lot going on. Let's take a look at the European markets map. Everything moving the markets is what Donald Trump has said on tariffs, this extra tariffs on China and, of course, the rest of the world. So let's get to the markets. Here it is. You can see very definitely some, red on the screen. Automakers actually leading the declines. Again, when you look at something like Stellantis, which produces vehicles in Mexico, it's down some 5.8%. So we're looking at the companies that have a lot to lose if there are extra tariffs, especially on Mexico and Canada. CAC 40 DAX down between 0.6 and 0.8%. Let's go straight to cross-asset because there is quite a lot of dollar movement as well. There's gold movement. We look at Bitcoin under $100. You can see S&P futures a little bit down, but it's really playing out in other parts of the markets, including some of the automakers in the U.S. We're looking at central bank reaction function, what it means for interest rates on the longer term, the U.S. 10-year yield at 4.29, and then the Bloomberg U.S. dollar index at 1,288. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President-elect Donald Trump says he will impose an additional 10% tariff on goods from China and 25% on all products from Mexico and Canada, citing a clampdown on migrants and illegal drugs. Now, for more on all of this, let's bring in Bloomberg's Ross Matheson and also Michael Strobeck, Chief Investment Officer at Lombard Odier. So, Michael, thank you so much for joining us. Ross, there's a lot to talk about because the market was kind of in a wait-and-see situation. Let's see if Donald Trump will really impose tariffs. Is this a negotiating starting point because he wants a deal, or does he want tariffs?
Well, certainly this seems to be the opening gambit. It's interesting to see also what he's tying it to, because this is not him saying he's going to put tariffs on China or Mexico or Canada because of economic policy or corporate behaviour. It's using tariffs as a lever for political policy to say, well, I want action on migration and fentanyl. I want action on drugs. And if you don't do those two things, I'm going to respond to you by hitting your companies and your products. And so it's using, again, what we saw very much in the first iteration of Donald Trump, is tariffs are not just an economic tool, but they're very much a political and a geopolitical tool. And that's the way he's going to see it. So this is probably an opening gambit. It might be also he saw the response to the nomination of his Treasury Secretary and, all the talk that he might be slower on tariffs potentially than Donald Trump would want. Maybe this is the message saying he would act, although 10% on China is probably something China could live with from the outset. But certainly it's just the opening salvo. He's not even in office yet. So what this means is countries like China, Canada, Mexico have, a few months at least to think about how they would respond in actuality if this does happen.
Michael, the problem is that, again, it's difficult to look at this is not, it's policy, but actually it's more of a negotiating tool.
Yeah.
So how do you, as a market participant, how do you make sense of it?
Well, he is using it as an all-weather tool for obviously getting to results that had nothing to do with economics. What it does is it puts pressure on currencies. Tariffs are messing up with the terms of trades of countries in ways that firms are not prepared for long term. Short term, therefore, you're on the losing end if you get hit by tariffs. And the expression of that is actually a strengthening or weakening currency to balance out the terms of trade.
But, Michael, I have many questions. First of all, do we know, is this inflationary? Because, again, there's many questions. If you're hit by tariffs, does it hit growth first or inflationary? Because that will change the reaction function of central banks.
It very clearly first hit inflation, and then, depending on how effective it is in, let's say, the U.S., it may or may not hit growth, but it clearly protects U.S. companies for a period of time from import from other places.
Roz, is it too soon to infer some of the other policies, given who he's put in his cabinet?
Well, it's very hard to know because some of them have to be confirmed first, although we'll see even by the replacement of his nomination for Attorney General. You know, the replacement nominee is also very loyal to him, someone who's been a Conservative lawyer in his orbit for many, many years and someone who will faithfully enact his policy. And so what he really wants, either way, is people who will enact his policy perhaps slower than he thought. And again, with the Treasury Secretary pick, Besant, it's clear, you know, he's a fiscal conservative and so he might try and manoeuvre a bit. But elsewhere, he's looking for total loyalty, or he will replace you pretty quickly. But it's just clear that Donald Trump will, if he sees something he doesn't like or something you do he doesn't like, he will just act accordingly. And it's very clear what he wants sorted or what he says he wants fixed very early on. He wants the war in Ukraine to come to an end, for example. He wants the war in the Middle East to come to an end. And whatever happens, whether it's ceasefires or peace deals that are, you know, not necessarily conducive for Ukraine, he will declare victory and say that that's done, because he likes to declare victory on things. And so that's very much the way he's going to operate.
But Roz, do you take every time there's, you know, he says something, do you take it at face value? Because that's going to be difficult for the markets. You either try and say, well, this is what he's going to try and do, and the markets may do this, or do you literally just think, well, he wants this, and he's saying it, so that's what we should model?
Well, that's the difficult thing, because Donald Trump can say something one day and the next day say the opposite. So he might say that one day he's going to sit down and talk with the North Korean leader, and the next day he say that he wants war with North Korea or something. So it's very hard to beat. But you have to take him literally each time, and that's the difficulty. But countries in like China, Europe, and so on, what they need to do is look through the very immediate and say, where do we want this to be in 6 months, a year, 2 years, and how do we navigate our relationship with the White House through to that, you know, that noise of the immediacy. So you've got to keep the long game in mind.
So, Michael, how do you deploy capital in this kind of very uncertain world?
Well, follow and don't be on the wrong side of Trump, at least for the near term. I think in this term you need to take him more literal than in the first term. In the first term he was balancing, trying to find compromises with people in his cabinet that he didn't really like and that were not loyal to him. He's picked a cabinet now that is 100% loyal to him. And I would take it very serious, what he is saying. He is saying this now before going to office. That creates, the stakes are being built up for deals. That's very clear, but I would take him very serious. Yeah. Having said that, I would still deploy capital on the side of Trump, on the Trump trade, which is US equities, US dollar, actually US rates, which will stay quite high because tariffs are inflationary.
So on dollar, I mean, he doesn't really want a stronger dollar. So actually, this could be complicated for.
Then he should stop talking about tariffs.
Yeah, who's going to tell him? Treasury Secretary or the Federal Reserve?
He's not very. He's quite resistant to advice. So, but he is also sort of a guy that wants to get to a place where he can say, "I did this to protect jobs in the U.S."
So, Michael, again, you know, what's changed in terms of your portfolio management since, since he got elected? Have you just gone and doubled down on some of your positions in the U.S., or have you had to move stuff around?
Well, we went overweight equities, and we think Donald Trump's re-election is a reconfirmation of a risk-on environment for the moment. Actually, U.S. growth is going to stay probably stronger, not because of the tariffs, but because of sort of typical Republican policies, lower taxes, deregulation, and he has vowed to invest materially into the U.S. industrial economy, with potentially debt going $6 trillion higher. And that is a boost to growth. It's what we call U.S. on high octane, and you need to be on the right side of that, and that is be long U.S. equities and be long equities in general.
Roz, how much do we listen to? Of course, I mean, we listen to the Treasury Secretary, but how much influence do we think that he'll have on President Trump?
Well, again, you were just hearing, like, he does demand total loyalty from everybody, but we also know, again, like, he tends to listen to the last word that's said in the room before people leave. And so if you're Besant and you're thinking, what I need to do here is to be the last person speaking in the room and plant that thought in Donald Trump's head right before I walk out the door, maybe that's the only tactic.
And Roz, we're also talking about a possible ceasefire in the Middle East. I mean, what do we know?
Well, obviously, there's been talk for days that we might get to a ceasefire with Hezbollah. This is obviously in Lebanon, not in Gaza. I mean, the possibility of a ceasefire in Gaza seems to be off the table at this point, but we do know the Israeli cabinet is meeting today, the security cabinet. Hopefully, we'll get an announcement later today, but that's just for Hezbollah in Lebanon. It's not for Gaza.
All right, thank you both. Bloomberg's Ross Matheson and Michael Strobeck, Chief Investment Officer at Lombard Odier, stays with us. Plenty more to come. This is Bloomberg.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Season is here.
This earnings season tells us there is more to life than mega caps.
Bloomberg is first to break the numbers.
Let's talk about Deutsche Bank here.
BASF with that big exposure.
We have numbers from Barclays, from Hermes, Anglo American.
We've got a lot of earnings to work our way through.
With the smartest insights.
I think the BBVA has posted really a very strong set of results today with that bottom line.
Some more cautious on Q3, but I think it's in a better place than it was.
Continuing coverage on Bloomberg.
Well, the Fed's Minneapolis president, Neel Kashkari, says it is still appropriate to consider another interest rate cut in December. Now, Kashkari was speaking exclusively to our very own Haslinda Amin. He also weighed in on the impact of Trump's potential tariffs on China.
You know, there's obviously the risks of potential tariffs back and forth between the U.S. and China, which are notable. The other big concern is just the domestic Chinese economy and the slumber that it appears to be in. From our analysis, the heavy weight of the housing sector that has been a driver of Chinese growth for so many years is now appears to be weighing down the Chinese economy and just the struggles that the Chinese economy is facing. And so I'm just something that I'm watching a lot is what the policymakers in China do, and can they get the Chinese economy on a stronger, sustainable growth path? You know, reinflating, so to speak, their housing bubble doesn't seem like it's a long-term strategy. So what is China's growth strategy? I agree the potential tariffs between the U.S. and China and back and forth is something to pay close attention to, but I think China's own domestic challenges are also notable.
Do you think that if China's economy remains lackluster, we could see some contagion and other Asian economies and perhaps even further afield may get impacted as well?
Certainly possible. I mean, China is obviously a huge economy, and if a huge part of the global economy just grows slowly, that's obviously going to have an imprint on everybody else. For example, commodity markets would be one of the first places that we would see that, whether it's for steel or for iron ore or other metals or other minerals. So that's something that we're going to pay close attention to because it just matters a lot for the global economy. But then I also think many other Asian economies are linked to economies all around the world. I was just looking at some analysis on where the U.S. imports most of its goods. Of course, China dominated that 6-10 years ago, and China's share exporting directly to the U.S. has actually fallen quite a bit. And countries like Mexico and other Southeastern Asian countries have picked up the slack. And so I'm actually optimistic that other Asian economies could continue to perform well because they're connected to the U.S., they're connected to Europe, to South America. But of course, China is just so large that what happens in China matters to everybody.
Well, that was the Fed's Minneapolis president, Neel Kashkari. Well, still with us, Michael Strobeck, Chief Investment Officer at Lombard Odier. Michael, thank you very much for sticking around. I mean, it's not easy being at the Fed right now because you'll probably get into the political, eyesight and the eye line of Donald Trump, and he can't really do much. but he can make your life pretty miserable.
Yep.
So does that, change? I mean, does that have implications for Jay Powell? Or is your longer-term concern actually that they're kind of stuck on rates?
I think rates won't go as low as we could have expected if Kamala Harris had won. That's very clear. We had sort of 3.5 end of next year. Now we're thinking 4. Trump, I don't think, will go too hawkish on Jay Powell. He actually reconfirmed him, and Jay Powell's successor, most likely, is also a Trump sort of a person. But Trump, of course, if there is trouble, wants lower rates, and that can stress Mr. Powell perhaps less than it could stress markets because he's trying to interfere with Fed independence, and that is not good.
Michael, I mean, when you look at, again, what he wants on immigration is to get rid of some of the drug cartels. Mm-hmm. Okay, if he gets rid of too much immigration, even the illegal kind, then this will hurt productivity. I mean, this will hurt the U.S. economy, which has done quite okay in the last couple of years.
Absolutely. I mean, immigration is net a positive almost for any country if it's productive labor coming in. But it has become a material political problem in the U.S., especially for the Democrats. And the 2 reasons why Trump won was really immigration and inflation. Immigration he's going to deal with hard. Inflation is a much tougher thing, and if he keeps talking tariffs, that is going to be probably his biggest challenge. But what he really needs to do is to get cheaper food on the tables of Americans that don't have much money.
But Michael, so this for me is a real surprise, right? Because you see the similar dynamics for inflation going down. The cost of eggs, I think, has gone up like 3 times in the U.S. to like $18. I mean, something that in Europe, frankly, no country do we see it. I mean, why is that? Is it the way that the supply chain works, or?
I think it's quite frankly, it's a supply chain problem that has moved its way back. There's a little of what I call profit inflation that really also needs to come down. But the problem with inflation is that it expresses price increases. We're not talking deflation or price coming down. And it is really ridiculously expensive in the U.S., certain things, when you go there. And I'm convinced it's the reason, the second reason why the Democrats lost. And Trump may have to be more creative than just slamming tariffs on stuff. I mean, food subsidies, etc. Can come on the table here.
What happens to China under Donald Trump, and what does it mean for investment opportunities?
Well, it's the worst possible news for China that Trump comes back in this form with this agenda, because China was slowing down already. China has material structural problem in the real estate sector, and now with domestic consumption because consumers are saving too much. And as we just heard, they need to figure out how to invigorate their economy. I think it can only happen if they stop the slowdown of real estate prices. And they have to keep stimulating in the face of Trump. And he has the stronger end of this at the moment because the one global winning country of globalization was China. And Trump is really, if not deglobalization, he's going to put a brake on that. And that's a problem for China and for Europe.
Michael, thanks so much. Michael Straubach, their Chief Investment Officer at Lombard Odier, stays with us. We'll talk gold. We'll talk about the UK next when the Chancellor defends her budget from last month, despite a warning from the chair of the country's most powerful business lobby. That's next, and this is Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
I've had lots of feedback on the budget, but what I haven't heard is any credible alternatives to what I did to put our public finances on a firm footing. What I am really clear about, and I've said it already a couple of times today, that public services now need to live within the envelope that we've set. We will not be coming back to top up those budgets. We have set the envelope for public spending.
Well, that was the UK Chancellor Rachel Reeves addressing the CBI's annual summit in London and defending her budget last month. Still with us, Michael Strobeck, Chief Investment Officer at Lombard Odier. Michael, I know one of your contrarian calls is UK gilts.
Yes. Look, I think what we need to see here in the UK is a responsible fiscal policy that brings the path back to credibility for the country. And I think we're still seeing a bit of a slowdown in Europe in general, UK being part of that, and that's why we have a preference for bonds, treasury bonds, or bonds and gilts.
So talk to me also about Germany. I mean, if you look at, also what the UK is trying to negotiate with Europe, this relies and depends on a very strong Europe. Germany is in turmoil, so I don't know what comes next and what that means for markets, but also in dealing with Trump tariffs.
Germany has fallen into the deepest hole it could economically and politically and geostrategically. Germany made itself dependent on cheap Russian gas, went away, Chinese exports are melting or hurting, and for the first time in 25 years we're seeing material layoffs at the sort of the icons of German industry. And we will have an election next year. I would have hoped it came earlier. I'm not sure it is going to bring much change to the economic situation of Germany, because what Germany really needs is more spending, more investments, better infrastructure, and a firm, if you will, alliance in Europe back with France. And all of this is missing.
So what does that mean very quickly on European equities? Do you still look for companies that export abroad or that have a big footprint abroad?
Solid global business models will, I think, always work, and they also work in Europe. Now we have Trump, he's slamming everyone, he says, with taxes of 10% or more. We are underweight European equities in our portfolios versus the US because we think it just still needs more time for Europe to figure out its path in this new world order.
Michael, thank you so much, as always, for joining us. That was Michael Strobeck, the Chief Investment Officer at Lombard Odier. Coming up, more on Germany's industrial turnaround, with ThyssenKrupp's steel unit planning to cut 40% of its workforce. More on that story next, and this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Stocks fall, the dollar strengthens as President-elect Donald Trump vows to impose additional tariffs on China, Mexico, and Canada. The EU proposes sanctioning Chinese firms it says are aiding Moscow's war effort in Ukraine. More restrictions on Russia's oil tankers are also set to be under consideration. Plus, more economic trouble for Germany as ThyssenKrupp announces plans to cut 40% of staff from its struggling steel unit. So let's get more on the economic downturn in Germany and the job cuts at ThyssenKrupp. It comes as a bleak moment for many Germany's biggest industrial companies. Now let's bring in Bloomberg's Oliver Kirk, who's in Berlin. Ollie, good morning. So how bad are things getting in Germany's industrial sector?
Yeah, Francine, we've been talking about it for the last really couple of years, and every time we get those prints on the manufacturing data, we pull up the chart and we see that it's been in contraction for over 2 years. Last time you had a positive print was back in July of 2022. And again, it's fine to sort of chart these things in the theoretical abstract into the chart. What we have gotten in the last few weeks are absolutely huge job cuts across some of these sort of anchor companies here in Germany, the latest of which was ThyssenKrupp yesterday saying that they're going to cut 11,000 jobs over the next decade. That's 40% of their steel unit. And that follows just days, Francine, after Bosch said they were going to cut 5,500 jobs. And that followed just days before Ford saying that they were going to cut 4,000 jobs. We still don't have the final tally for how many jobs are also going to go at Volkswagen. There have been long discussions between the unions and management. That could be anywhere from 10 to 30,000 jobs. Again, these are sort of down to the negotiations. But what this basically amounts to when we do the sort of arithmetic here is somewhere between 30 to 50,000 job cuts in very short order to this economy after we have been talking about it for sort of years in terms of the decline of the manufacturing sector. This is where it gets real. The question is, how far through the cycle are we? Are we at the beginning of job cuts? Are we at the end? I talked to Carsten Breschke yesterday, who's really been way out ahead, who's been talking about sort of the warnings here for the last couple of years of the German economy. He thinks we're basically smack dab in the middle of things right now, that there is still more pain to come. We've got it from the sort of manufacturer providers to the automotive industry. We're getting it from the automakers. We haven't heard anything yet from Mercedes or BMW. And the other thing, Francine, we should also mention, it's a lot harder to get a read on some of the smaller companies. When we get job cuts from very large companies across Germany, they make big announcements. What we don't hear so much about are about the SMEs, the Mittelstand. I had this survey out of IFO just a couple of days ago. I think it's worth mentioning that the share of German companies that fear acutely for their economic survival has now risen to 7.3% of companies in Germany. That is up half of a percentage point from 3.8% in the month of October. So again, it's hard to see the sort of light at the end of the tunnel at this stage.
So, Ollie, quickly, how's this going to shape the election?
Yeah, so listen, I wouldn't want to be the incumbent going into this when you're talking about companies slashing tens of thousands of jobs, and that is going to be used against SPD and the coalition, basically saying that they've mismanaged the economy. This could play potentially in the hands of the far right, the far left, the sort of Germany first parties, though their credentials in terms of turning around the economy are not as strong as, say, the CDU. What we have seen is the CDU is continuing to maintain its lead, but again, Merz's sort of formula for reviving the economy is cutting taxes, cutting bureaucracy, cutting regulation, cutting benefits, cutting pensions. These things could help around the margin, but it does not sort of replace the engine of Germany, which is the fact that they just don't have the export markets that they used to have. And when you wake up here in Germany and you see these sort of tweets from Donald Trump saying he's going to slap 10% tariffs on China, talking to Mexico and Canada about the same, Germany was enemy number one in terms of trade for the Trump administration part one, so they're just waiting for their turn.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, G7 nations are set to increase pressure on China for allegedly supporting Russia in its war against Ukraine. That's according to an early draft of the communique seen by Bloomberg as foreign ministers meet in Italy. Now, we're now joined by Charles Litchfield, Deputy Director, and C. Boyden Gray, Senior Fellow at the Atlantic Council's Geoeconomics Center. Charles, so good to speak to you. You're usually based in the U.S. You're usually based in D.C. You've been doing a bit of a European trip, I guess, to get the flavor of what should worry people. Is Europe ready for a Trump 2.0?
I was in Bloomberg, I'm at Bloomberg now, and last week I was at Brussels the whole week, Francine, and they were very adamant, and there was a lot of message discipline on their preparation and on a sense of calmness. It's not 2016, we've dealt with Donald Trump before, and we're ready to make a positive offer to him and show him what has changed. Europe is buying more US weapons, it's buying more LNG, it's tougher on China, and so they're hoping that this is convincing enough to avoid Trump going down an escalatory path on trade with the EU. They're not sure it will work, but they've done a lot of decision trees and a lot of scenario planning.
I mean, I guess the concern is that we know that Donald Trump wants to speak to Macron. He wants to speak to Meloni. He wants to talk to country by country and almost strike a deal unilaterally. That's not how it works in the European Union.
It's not how it works in the European Union, and I think Donald Trump actually knows that. We've started to hear rumours from the last time he was in power, people are starting to talk about it and saying that sometimes when an individual leader would try to get a favour out of him, he said, well, I'm in a discussion with Jean-Claude, who's Ursula von der Leyen's predecessor. So he certainly does want to use relationships, bilateral relationships, including with some people he knows from his previous time there. But I think he is ready to talk with the European Union about tariffs and about trade. There is a new person there. We don't know what the relationship will be like with von der Leyen. They didn't have much overlap last time. So there is a question on who is the interlocutor. There's also the new council president, who's quite jovial. That could be an option. And then Meloni and Macron will be key players. There's also Mr. Orban in Hungary, who isn't entirely representative of the EU27 and is also quite close to China. So maybe he won't be the best interlocutor either.
So does Europe need to show that they stand with the U.S. against China to get something from Donald Trump?
That's very important. And the EU has evolved on this. They have all sorts of new mechanisms, and they're happy to use them. People watching us will remember the decision on electric vehicles, which is meant to reestablish a level playing field. It's not the same sort of unilateral and quick approach a U.S. president can take. The U.S. president can label Chinese issues to do with the economy as national security and can move fast. The EU has to move as a 27, and the tariffs aren't as high, but they can at least show they're doing something, and that's a very important lens through which Trump will read Europe, how tough they're being on China.
Charles, you're based in D.C. How will Donald Trump be different this time around? He's, formed a cabinet where there are many more loyalists. Does he really want to impose these tariffs, or is it just a negotiating tactic?
I think there will be an increase in tariffs across the board, not as high as some of the campaign was suggesting. And I think China will be quite surprised that the initial promise from yesterday on Truth Social was only 10% and not 60%. And then Mexico and Canada, which no one was thinking about because Trump was the president who renegotiated USMCA, they're suddenly expecting now a 25% tariff. We'll see if that happens. So tariffs will probably increase a little bit, and tariffs on average are quite low, the tariffs that the US practices. They'll increase, and that's bad for US trade partners. It is also a way to get people to negotiate, including with China. There are some people close to the campaign and who will probably go back into the administration who've been telling us at the Atlantic Council Geoeconomic Center that Trump is sort of going to ignore the fact that Biden was there and simply go back to his negotiating stance just before COVID. Phase one We promised to stop the escalation on tariffs. You promised to buy more agricultural goods. What's happened? Why haven't you done this? And that will be the basis for a negotiation. I'm not sure where it will lead. Hopefully not to too many increases in tariffs, because there aren't that many sectors in which the US can increase tariffs. On inputs, tariffs against China are already high. It will probably have to move on to consumer goods, which will be very difficult for US consumers. There'll be exceptions. On electric vehicles, they're going to go sort of very, very high, and even the Biden administration was going to do that because they perceive electric vehicles from China and connected vehicles as a national security threat. So there's really no limit to where they go on tariffs there.
But does China need the U.S., given all the concerns that they have economically, especially because of real estate? And so will they likely agree to some of the Trump deals?
China is not being too aggressive at this point. There isn't any wolf warrior diplomacy yet. I think the response to yesterday's tweet on Truth Social from the spokesperson of the Chinese Foreign Ministry was just, we're ready to talk. We haven't really started a dialogue yet, but we're ready. So I think subtly that does show you that the Chinese do want to talk and are hopeful that they can get some sort of cooperative agreement going. But Trump, there are a lot of things Trump wants, and he wants to move on to currency. He wants to move on to a sort of very broad-based deal with the Chinese, which I think that will be difficult for the Chinese government to stretch to. So it will be a difficult conversation.
You mentioned currency. We're seeing a lot. I mean, gold rise maybe as central banks around the world getting ready for, if not getting away from the U.S. dollar, certainly trying to buy less treasuries in case of sanctions. Do you see the dollar actually waning a lot in this kind of environment?
Well, the tariffs, the economic textbooks tell us the tariffs will actually drive the dollar up, and it has slightly today. You're absolutely right that long term there are all sorts of uncertainties around the attractiveness of the main reserve currencies, dollar, euro, given that they're the main inventors of sanctions and the main users of sanctions. What does this mean in the long term? Trump himself has said he's very keen on keeping dollar dominance. He said it in his speech in Chicago that everyone paid a lot of attention to. And so I think that helps us a little bit filter between proposals that are bad for the dollar's dominance and those that are good. So this idea of a sort of market access charge to stop the dollar from appreciating, I think it's quite unlikely anything like that comes in. Something else that might help the dollar depreciate a little, which is what Trump wants, like naming Powell's successor early, so you have a kind of shadow Fed governor, very possible.
Not awkward at all.
But it could happen, and Trump is good at awkward. And second point, you could see the U.S. itself investing in its reserves a little bit to bring the dollar down in the long term. But I think dollar dominance is something Trump is very keen on, and so it helps us analyze what is likely and isn't likely in terms of measures.
So interesting. Charles, thank you so much for joining us.
Thank you.
Charles Litchfield there from the Atlantic Council's Geoeconomics Center. Now, Bloomberg understands that Israel's security cabinet is to meet at 5:30 p.m. local time to discuss a proposal for a ceasefire with Hezbollah. It follows a new round of shuttle diplomacy by a senior envoy for the outgoing Biden administration. Now, it does remain unclear if Hezbollah will agree to any possible Israeli proposal. So we'll continue looking at Trump economics and, of course, geopolitics. Coming up, we'll speak with the CEO of Gavi on the potential impact of the incoming Trump administration on global access to vaccines. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Welcome back, everyone. Now, President Joe Biden has committed at least $1.58 billion to Gavi. This is an international organization created to improve vaccine accessibility for children living in the world's poorest countries. Now, with Donald Trump taking office in January, what does the future hold for global vaccine programs? Well, Sanya Nishtar, Chief Executive Officer of Gavi, joins us now. Ms. Nishtar, thank you for joining us. I mean, this is extremely important for access to vaccines in many countries that probably need it most. Could the new administration rescind part of the pledge that you had under President Biden?
Well, first of all, thank you for having me on your program. It's a pleasure to meet you in person. In terms of your question, we've traditionally had bipartisan support from U.S. administrations, and that has consistently been evident in resolutions where congressmen from both sides of the aisles traditionally have signed resolutions in support of Gavi. During President Trump's past administration, Gavi continued to have support, and I'm cautiously optimistic that that support will continue. Gavi is an organization which delivers results on the ground. It delivers them at very low cost, delivers value for money, impacts several double bottom lines. And if you look at the construct of international development and the objectives that international development should deliver on, as articulated by the incoming administration, they're exactly the ones that we deliver on. Sustainability, value for money, results, impact at very low cost. So I'm very hopeful that we will continue to have the support.
There are question marks, I guess, around some of the picks, for example, for Health Secretary, who's highly, highly skeptical of vaccines. Broadly, it seems that the new administration or the people that Donald Trump has picked for his cabinet are also very critical of the pharmaceutical industry. Do you expect a heated conversation with some of these members?
Well, I expect evidence-based conversations. Vaccines are the best buy in public health. Yeah. That is very widely believed, and that actually is the truth. Yeah. Vaccines have helped halve child mortality since they've been out there. As far as Gavi is concerned, we've vaccinated 1 billion children since we've been in inception, averting close to 19 million lives, accruing close to 200 billion in economic benefits, while having sustainability hardwired into our model. So I'm very cautiously optimistic that we will continue to have support from across the Atlantic.
I mean, beyond the U.S., do you worry about, I guess, increased vaccine hesitancy that we've seen, also emerge right during the pandemic and after the pandemic?
Well, I would say that the noise is disproportionate to the actual quantum of the problem. Because, of course, social media, there is a trend that anything controversial or negative on the social media gets a lot more traction than positive and evidence-based news is. So the hesitancy on the one side is totally opposed to the demand that we're seeing from countries. In fact, as the CEO of Gavi, I have a huge line of applications from countries for the malaria vaccine, for the HPV vaccine, for the traditional childhood vaccines. Countries continue to invest in vaccination. This year, for instance, we will get a record contribution of 200 million in co-financing payments from countries. And if vaccine hesitancy was such a massive problem that it eclipsed country demand and government appetite for investments in vaccines, we would be seeing at least a slowdown at that end of the spectrum. That is not the case. And I think as far as vaccine hesitancy goes, there's a little, it's not all about misinformation and myths. It's also about the need for the right information to be out there, which is what we're going to focus on. And a lot of it has to do with the actual quality of service delivered on ground. So if a woman in Malawi or in Uganda is waiting in a health facility for 4 hours to have her child vaccinated, she, of course, is going to lose faith in the process. So I think part of what we need to work on is also the quality of execution, the right evidence-based arguments in support of this life-saving tool. We call it the best buy in public health.
And on that, can I ask you about Mpox? So we have seen delays. I mean, this is one of the vaccines that people have been most interested in. There's been delays in the rollout of some of the Mpox vaccines in Congo and elsewhere. Are there bottlenecks? Can it be resolved, and how quickly?
Well, before the rollout, I think it's important to bring to bear how the global health entities responded, learning from whatever lessons there were from the COVID-19 experience. So, as you know, when a health emergency strikes, when a pandemic strikes, when a global health emergency is announced, there are different actors that come into play at the global health level, with the World Health Organization as the steward. Gavi is responsible for the vaccine pillar. And we were able to invoke our first response fund for the first time and order the largest consignment of doses in less than 30 days. So that was a very quick response. And those doses are going to be delivered this year. But of course, your question was about rollout, and that is where the complexity of health systems at a country comes in. This is a new vaccine. Yeah. It's going to be executed with new modalities. It's a complex environment. The DRC in particular, the overall context is very complicated. But all that notwithstanding, the rollout is happening, and I think all put together, countries and the global health entities have responded much faster and quicker and in a much better way than we learning from the lessons of COVID-19.
Thank you so much for joining us. That was Sanya Nishtar, the Chief Executive Officer of Gavi, with very important conversations on vaccines and, of course, health worldwide. Coming up, Claire Lombardelli delivers her first speech since becoming Deputy Governor of the Bank of England, warning wage growth and inflation will not fall as quickly as hoped. More on that next. And this is Bloomberg.
From the beating heart of global finance, economics, and politics,